this.
Yes, please.
So let's see. I'm still loading. You can begin with them. Please, my duty is to make sure you pass once and for all, right? I've seen that no matter the courses, people are afraid of public sector and other courses, but public sector is actually becoming a headache for some people. True or false? Some people have taken it and it's not going well. They think it's the knowledge, but it's not necessarily the knowledge. It's because of some of these things I'm talking about. The public sector is such that if you don't know, you don't know. You get the idea? Yes, if you don't know, you do not know. So that is it. Are we okay? So we are live. My boss, we are live, eh? Can start sharing. Okay. May the Lord be with you.
Okay, so I'm here.
So you can start. You are live.
Make me the co-host.
Yeah, I have.
So good evening once again. Today we are starting with the public sector accounting and finance, which tomorrow happens to be your day of accountability. I presume most of you have gone to classes and you are well equipped, but today class we are just going to make sure that we go through the difficult aspects which students find it very difficult to comprehend. But before we start, let's first of all expose ourselves to the syllabus that ICAG will be testing your mind on. So your syllabus started from 2019 to this 2024, and it will be ending in next term. I will entreat you to make sure that you go according to what we are going to discuss. Please, I hope you can see my screen.
Yes, please.
Okay. Your syllabus is saying that you should cover the public sector financial reporting in Ghana, which carries 50 marks. And this one is talking about the budget and the auditing and the general overview of the financial state, the public sector. Then the conceptual framework for general purpose financial reporting by public sector entities, which carries 50 marks. Okay, which carries 50 marks. And these aspects, you need to be more abreast with some of the information so that when you go, you won't find yourself wanting. Then public financial management system, most especially the PEFA, which carries 10 marks. PEFA framework and value for money. Then the next one is the accounting policies for both cash and accrual basis in public sector. Most of the time, I tell students that your syllabus is saying that you should study the cash and the accrual basis and public sector. You shouldn't go beyond. You shouldn't go below this, which carries also 10 marks. We'll be looking at it briefly. Then preparation of financial statements for public sector entities in line with the general accepted accounting practices, which is the almighty question 2, which carries 20 marks. We'll be looking at full question under that. We'll be looking at the Consolidated Fund of Ghana. We'll be looking at the MMD, a typical one to be District Assembly. And we'll be looking at the MDA, which is the hospital, the schools, and the transport. Then we'll also be looking at the evaluate financial position, performance, and prospects of public sector entities using the financial and other information, which most of the time is being called the interpretation of financial statement. With the interpretation of the financial statement, this is where we'll be looking at the ratios, we'll be looking at the common and the budget performance. Each year, one of it drop. For the over 2 period or 2 sitting, you have been having question on the you have been having question on ratio. So we'll be touching on 3 of them so that you have fair knowledge about them. Then we'll be looking at the rules and procedures in public procurement, which also carries 10 marks, 10 free marks. So we'll also be looking at some of the areas that you need to know. Then public financing initiative, which is PPP and PUP, which is the public-private partnership and public-public partnership. We'll be looking at what is public-private partnership. We'll be looking at certain benefits that government derive and also the private sector also derive. Then also we'll be looking at the PUP, which is the public-public partnership. What is it? And it carries 10 marks. So when you add all these things, ICAG is saying that they are going to weigh you over what? 100. So my concentration today will be on the 10 mark. 10 mark. I will urge you should concentrate on what? On the 10 marks. Okay, most especially the PPP. Okay, the PPP there. It's very easy because the slides or the areas there are not what? Are not that much. So please, let's start with the basis of what? Of accounting. But before the basis of accounting, there is one thing that I would like us to start with it. It's very simple and easy, but most students find it difficult when questions come under that, which is the IPSAS 32. IPSAS 32. IPSAS 32. Who can tell me what IPSAS 32 is about?
Service concession.
Service concession.
Service concession.
Service concession. Service concession. With service concession is very, very easy. But most students find it very difficult when questions come under that. But I'm looking at it in the sense that maybe we'll wrap with that one. Okay, we'll end with that. Okay, we'll end with that. Let's end with that one. Let's start with the basis of accounting. Okay, so with the basis of accounting, the most important thing that we are going to look at is the explanation of the accrual and cash accounting. Then the characteristics of accrual and cash accounting. Then most especially, we'll be looking at the treatment of the following of some of the items on the face of what? The financials, using what? The accrual and cash accounting, and some approaches to what? To accounting in procedures. So let's look at the cash basis of accounting. What is cash basis of accounting? We are saying that cash basis of accounting recognizes transactions and events when cash is received and cash is what? Is being paid. With this particular what? Basis, it's only talking about the cash inflow and cash outflow. Nothing more, nothing less. Don't look anywhere. It is only talking about cash inflow and cash outflow. And that was what they tested the students' mind in November last session. Okay, November last session. That was what they tested students' mind on question 1. Okay, so we are going to look at how cash goes out. This particular basis talks about how cash goes out and how cash what comes in. So it only recognizes cash receipt and what? And cash paid. Okay, then what is the characteristics of the cash accounting? With the characteristics, please, I will urge you that when you are learning with the characteristics, because of the time constraint, you learn one side so that when the other side comes, you turn it what? Upside down. Okay, so the characteristics of what? Cash accounting, when you learn this aspect and what? And characteristics of accrual accounting come, you turn this one upside down so that you'll be able to what? To answer the accrual. But this time around, questions that come are very what? Applicable. It's application. So you won't get it direct. So understanding it is very what? Key. What is the first characteristic of a cash accounting? We are saying that both the revenue and capital income and revenue and capital expenditure are treated in the books as what? As revenue and revenue expenditure. Okay, so in this sense, when maybe you incur you buy any asset. Okay, when you buy any asset, we are saying that the asset automatically you need what? To expense that particular asset that you have bought. You need not what? To recognize the asset. So in this, under the cash basis of accounting, you won't recognize any what? Any asset under what? Under the cash basis of accounting. So the cash inflow and cash outflow is the only basis for recording the transactions in the books of account. So here, when maybe Kofi Mensah goes to buy something, maybe 5,000. When you go to buy something, the moment you issue cash out, it means that there is cash outflow. So automatically, you will recognize the cash outflow, which is what? 1,000 as expenditure. Okay, then the credit transaction, which result in debtors and creditors, are not recorded. So in this situation, the simple way for you to understand is that we don't keep anything concerning debtors, we don't keep anything concerning creditors. So in that sense, we don't have any what? Debtors what? Account, and we don't have any creditors account. Once you buy something on credit, you leave it, you don't recognize it. So credit transactions are not what? Are not treated under the cash basis of accounting. The cash accounting report no profit or loss and no asset or liabilities. So in the absence of these items found in the what? In the balance sheet, the cash accounting basis does not require the preparation of balance sheet. So under the cash basis of accounting, you realize that you won't prepare anything concerning balance sheet. There is no statement of financial position under the cash basis of accounting. In that, or because when we buy the asset, we automatically expense it. So we don't keep anything that we talk about asset register in the organization. So when the organization is preparing the account based on the cash basis of accounting, there is absence of asset register to keep records of those things. So that is why we are saying that we don't prepare the balance sheet or the statement of financial position. What is the advantage of the cash accounting? Once we are saying that we don't keep anything concerning credit and debtors, then it means that it becomes easy to prepare and simple to prepare. Okay, a layman person can prepare the financial statement using the cash accounting, and it can be easily be understood by the legislators. Unlike the accrual basis of accounting, where the cash basis avoids subjective estimate. Okay, here we are talking about depreciation. We don't look at any depreciations once we don't recognize an asset. So as a result of that, there is no any subjective estimate or adjustment. So when you are preparing the financial statement, anything about adjustment in the footnote is not there. Then because it is simple and easy to prepare, it becomes the cash accounting makes it easy to understand by the legislatures. Okay, if something is simple and easy to prepare, then it means that a layman person can understand it. So it makes it very easy to understand. Then the cash accounting facilitates accountability and control. Let's move on to the disadvantages of the cash accounting. So what I will encourage you is that with the disadvantages and advantage, try as much as possible to keep at least 3 of mind, so that when the question comes, you'll be able to make accountability of that. What is the disadvantages of the cash accounting? Remember, we are saying we don't keep anything concerning credit transaction and debtors. Okay, so as a result of that, it becomes very difficult to measure performance, since we don't have much information on the organization. So when we don't have much information, it becomes very difficult to measure performance of an entity. Okay, and it does not provide information on capital assets, which makes it difficult for such assets to be managed. In a sense that today, when you buy a laptop of 5,000, the laptop of 5,000, we expense it directly. So when we are looking for the laptop, we don't have any records on the laptop, because we don't keep anything concerning capital asset. And it makes it very difficult to manage effectively the laptop. Okay, which creates room for misuse of state resources, because anybody at all can take that particular laptop, or anybody at all can wake up and say that, okay, I'm going to buy a laptop. Meanwhile, we have laptop in the organization. So there is misuse of state resources, because there is no proper control to manage the asset or capital asset. And since credit transactions are not taking place under the cash basis of accounting, it makes it very difficult to track records of those credit transactions. In a situation that maybe in the organization, there is an accountant, and this accountant bought things on credit. Within the period, the things that he bought, there has been changes in management trends. So they are going to transfer the accountant. New accountant is coming in. So as a result of that, because we don't have records on credit transaction, the new accountant that is coming will find it very difficult to track record of those credit transactions that has happened over the past. So it makes it very difficult in tracking credit transaction, which fails to capture data of various stages of financial transaction. We are not looking at the modified. So let's move on to the base of we are saying that under this under this particular basis, only recognize revenue when it is being earned. So when you have the legal claim or the valid claim for such revenue, then it means that we can recognize the revenue. Recognize expenditure when it is being incurred. The moment you incur the expenditure, you need to recognize it. Okay, so this one is at the time the goods or services are received, or when the right to receive the benefit is established, regardless of when cash is is made. So here, we don't look at the cash aspect. We don't look at the cash inflow and cash outflow. Once you buy things on credit, automatically, you need to recognize it because you have incurred it. And we have to note that once there is what? An enforceable contract between you and I, which is what? Over the receipt of what? Revenue or payment for his services. Then it means that the income and or expenditure arising out of what? That contract, okay, will be recognized. So it means that when there is what? Enforceable what? Contract between what? The two of you, the two parties, then it means that we need to recognize what? Either the revenue or the expenditure. Okay, what are the characteristics of what? The accrual accounting. Remember, when we're looking at the characteristics of cash accounting, we are saying that both what? Revenue, capital expenditure, and this are always what? Recognized as capital expenditure and what? And revenue. I hope you get that particular what point clear. This particular point, we are saying that both revenue and capital income and revenue and capital expenditure are treated in the books as what? Revenue or revenue expenditure. But under the cash basis of accounting, let's be clear here. It gives a clear distinction between what? Within the revenue expenditure and capital expenditure. So once we buy something in a capital nature, we need to what? Recognize it in what? In its category. And it reports expenses that are incurred, but not paid as what? For as liability. So on the face of what? The financial statement, which is the statement of financial position, we are saying that when you buy something on credit, it becomes a liability. So how then do you recognize a liability? You recognize the liability on the face of what? The statement of financial position as what? As payable. Okay? And payable happens to do what? A liability within what? A short period, or can be settled within what? A short period of time. Then the principle of margin is what? Is inherent to permit measurement of what? Financial performance. And in this, we are saying that it better what? It gives what? Better measurement of what? Of performance. In a sense that it gives what? Details about what? All transactions that happened in the past. What is the advantages of the accrual account? So when you look at what? The disadvantages of cash accounting, then you use the disadvantages of the cash accounting to be the advantages of what? The accrual account. Are you clear with that? Are you clear with that?
Yes,
when
sir.
a person comes and they ask you the disadvantages or the advantages of the accrual accounting, it is the same what? Disadvantages of what? The cash accounting. That gives what? The advantage of the accrual. So remember, in the cash account, we say that we cannot measure performance, but under the accrual accounting, it becomes an advantage for us because it enables performance management since it provides full disclosure of what? All information. Okay, then it also allows better matching of what? Output with what? With cost. And it discloses relevant information about the organization. Anything credit, we disclose it. Okay, then we look at the disadvantages. Okay, we look at disadvantages. There have been questions that ask students. Okay, what are, for instance, Ghana wants to adopt the accrual base of accounting, but they are for over the years they are unable to adopt the accrual base of accounting. What are the conditions or what are the circumstances that arrive that Ghana is not able to adopt the accrual base of accounting? These are the points you are going to give the examiner. It becomes the disadvantages. What making what? The accrual base of accounting not implementable. Okay, so these are the points that you are going to elaborate for the examiner. One, accrual accounting financial statements are more technical and relatively what? Difficult to understand by users. You and I will understand that when you are preparing financial statement using the accrual base of accounting in the exam hall, if you don't understand it, it becomes what? Very difficult to prepare it. In the sense that it gives what? Room for more technical and relative what? Difficult understanding in terms of what? The standard. Then it also involves a lot of what? Subjective judgment, which can go into what? The determination of some estimate or making provisions. Relevant accounts are therefore difficult to prepare and can also manipulate it easily to suit the preparer's what? Desire. Okay, so this is where depreciation comes in. Okay, because of a lot of subjective judgment in what? In arriving on what? On estimate what? To calculate depreciation. It makes it very difficult in what? In adopting what? The accrual base of accounting. Then it also requires significant investment in time and human capacity. Remember, when GOG brought the policy that all organizations should go fully what? Accrual. Okay, they are saying that they should start with the MMDs. So the MMD, they are not training their people. Okay, they don't have the human capacity to what? To introduce or to what? To practice the accrual base of accounting. So as a result of that, it became what? Challenging in implementing what? The accrual base of accounting. Okay, then we are saying that users of financial information, such as the taxpayers, legislators, public sector officers, may require a lot of technical guidance and support to appreciate the utility of the accrual base of accounting. Why are we saying that? Somebody who don't have account background and the person want to read meaning into accrual base of accounting, he need more technical guidance. Okay, like what you are going through, you need more technical guidance in order to go and prepare financial statements in what? In the exam hall. So as a result of that, it makes it what? Very difficult, challenging in adopting what? The accrual base of accounting. Please, is it well understood for us? I gave you the tricks that
Yes, sir.
they ask you the disadvantages of accrual accounting. Okay. And when they ask you advantages of accrual accounting, it becomes the disadvantages of what? The cash accounting. So it's a matter of learning one-sided so that you apply. Are we clear? And nowadays, ICAG-like application. And one of the questions I gave you is one of the application questions they have been asked. Okay. Ghana is unable to adopt the accrual base of accounting. Okay. Give the reason why Ghana is not able to apply full what? The accrual accounting. Okay, so these are some of what? The terms or the conditions they are going to what? To tell the examiner. Let's look at the treatment of the following in the financial statement under the cash and accrual accounting. Here, this is where your journey to prepare the financial statement comes. It starts here. Your journey to prepare the financial statement starts from here. So when this is what they normally use to ask questions or to frame questions when they are giving you the financial statement to be prepared, and they give you what? The additional information. These are the things they use to what? To confuse you. So please, you better understand it here so that when you go, you'll be fine. Okay, a motor vehicle that has been donated to the entity. How are we going to recognize it under the cash, and how are we going to recognize it under the accrual base of accounting? Okay, under the cash base of accounting, motor vehicle donated. Remember, motor vehicle donated is not exchange transaction. It is a donated item. So once it becomes a donated item, it means that no cash involved. So once there's no cash involved, it means that we are not going to recognize it under what? Under the cash base of accounting. But under the accrual base of accounting, we are going to recognize it as revenue. Why are we recognizing it as revenue? We are recognizing it as revenue in a sense that we did not use money to purchase. Okay, we did not use money to purchase. Okay, so as a result of that, we are going to recognize it as what?
Okay, please mute. Oh.
We are going to recognize it as what? Under the cash base of accounting as what? As donation. Okay, so we add the figure to the donated amount. So for instance, maybe motor vehicle donated to the assembly amounted to 5,000. Under the accrual base of accounting, we are saying that the 5,000 will be added to the donation and grant. Okay, we are going to add it to the donation and grant. Then the asset, which is the motor vehicle, is going to be capitalized and depreciated over its useful life. Okay, and be sent to the statement of financial position. Then with the revenue earned but not received by the entity, with this, we are saying that under the cash base of accounting, how do you recognize revenue? We are saying that revenue are recognized when cash is being received. But in this situation, revenue earned but not received. So it means that cash has not yet been received. So under the cash base of accounting, we are not going to recognize the revenue earned but not what yet received. Okay, but under the accrual base of accounting, we are saying that we recognize revenue when it is being what? It is being earned. So once it's been earned, this revenue is what? Is earned. So we are going to recognize this particular revenue and add it what, to the pool of revenue. Then after adding it to the pool of revenue, how then do we have to what? Recognize it on the statement of financial position? We have to recognize it on the as asset. Okay, we are going to recognize it as what? As asset. What types of asset? That is what the current asset as what? Receivable, revenue receivable. The non-current asset acquired in the current year. So with non-current assets that are acquired in the current year, under the cash base of accounting, remember, we don't keep any records of what? Any asset. So once we don't keep any records of assets, what then do we have to do? We need to expense it. We are going to expense it under the cash base of accounting. But under the accrual base of accounting, this is where we are going to what? Recognize it and capitalize it and work depreciation on it over its what? Useful life. Then electricity consumed for the year, but not paid for. Here, you have consumed the electricity. Assuming you are using what? The postpaid.
Benson.
You are using what? The postpaid meter. You have consumed the electricity, but you have not paid. Under the cash base of accounting, how are you going to recognize it? Once you have not paid,
thank you.
You are not going to recognize it at all. Okay, once you have not paid for, you are not going to recognize it at all. Okay, but under the accrual base of accounting, this is where you are going to recognize it and add it to the pool of what? The expenditure. Then on the face of what? The statement of financial position, you are going to what? Add it as what? As a liability, as what? Payable. Okay, it's very, very simple. When you get the principles involved, you are good to go. Okay, when you get the principles involved, you are good to go. So here, let me demonstrate something here. Okay, let me demonstrate something here. Okay, so assuming that, I hope you can see my screen. Can you see my whiteboard?
Hello, sir.
Yes, please.
Yeah.
So here,
Hello, sir.
yes, madam.
Please, they should mute their mic. Someone is playing music at the background.
Is it okay? So here, we are saying that what is the term we are looking at? We are looking at what? Electricity consumed for the year, but not what? Not paid for. And we are saying that, assuming that in the additional information, they said that maybe the entity would consume electricity. Okay, they consume what? Electricity. Okay, they consume the electricity too, but have not what? Paid for. But have not paid for. Okay, amounting to not paid for. Amounting to maybe 1,000. Okay, under the cash base of accounting, remember, no recognition will take place. But under the accrual base of accounting, this is where we are going to recognize this transaction because the expenditure has been incurred. So once it has been incurred, what then do we have to do about it? It means that we are going to add this expenditure to what? To the statement of financial what? Performance as what? Expenditure. So when you go to the expenditure aspect, you are going to get under what? The goods and services. We have what? Electricity. So you add what? The electricity, which is what? The 1,000 to what? To the pool of what? The expenditure. And when you go to the statement of financial position, you are going to add this 10,000 to what? To the liability. So under the current what? Liability, it is going to be what? Payable. Okay, it is going to be what? Payable. So you add 1,000 to what? To the payables there. Then the double entry what? End. Are you okay? Then the double entries end. These are some of the things that they use to confuse you, but I don't want you to be confused when you get to the exam hall. Are we okay? Then we have allowances and what? Provisions. Okay, allowances and what? And provision. Under the cash base of accounting, remember, allowances and provision are not what? Are not recognized. Okay, because we don't what? Keep anything. Okay, we don't have anything like subjective judgment. Okay, but under the accrual base of accounting, this is where we recognize what? Allowances and what? And provision. Contingent liability also the same. Salary advance to employees during what? The year. With salary advance to employees during the year, it means that government has given what? Salary. Okay, he has given salaries to what? To some employee. Let's say maybe in the additional information, there is what? Salary. Okay, salary, advance. And remember, let me give you a trace here. When we say advance, it is the same as what? Prepaid. We will be looking at it shortly when we start what? With the financial statement. Okay, amounting to what? Maybe 1,000. Okay, this 1,000 under the accrual base of accounting, how are we going to recognize? The first leg is that we are going to add this 1,000, which is salary, to the compensation of employee. Okay, we are going to add what? The 1,000 to what? To the compensation of employee as what? Salary what? Advanced. To get the total salary, which is what? 1,000. Then when you go to what? To the statement of what? Financial position. When you go to the statement of financial position, and I want to ask you, how do you recognize this prepaid or advanced? How do you recognize it?
It's added to
Receivable and expense.
We recognize it as what?
a liability. It's an asset.
It's a liability.
Government has advanced salary to what? To
Receivables.
It's receivable. Oh, receivable.
It's an asset to government.
Asset. Current asset.
Because
Yes.
this money becomes money for what? For the government. He just advances to them. Okay, so for instance, they have advanced what? The salary to what? To Kofi. So when Kofi is preparing the account, Kofi will treat this advance as what? As a liability. Because he has not what? Worked for that particular services, but he has received the salary. So it becomes what? A liability on his neck. But when Ghana is preparing what? Its financial statement, he's going to treat it as what? As an asset, which is what? Current asset. Okay, which will be what? Will be receivables. Are we okay? Which will be what? Receivables. When are you confused? Why? Who is confused here? Who is confused here? Please get
We
it
are
here.
okay.
Okay, so if you are okay, let's move on. Okay, then you move on to inventory of suppliers at what? At the year end of what? The financial year. Okay, inventory of suppliers at the year end of the financial year. Here, remember, under the cash basis of accounting, we don't treat anything like asset, and inventory is an asset, which is the current asset. Okay, so automatically we expense that particular inventory. So we add it to the goods and services straight away. But under the accrual base of accounting, this is where we are going to what? Recognize it in twofold. First of all, the inventory will be what? Will be treated. But remind you, this is where we are going to get what? The closing inventory of what? The asset. Okay, so with the closing inventory, depending on the policy of what the organization, whether it is being used or what for sale. So for instance, it is being used for what? For use. The inventory is for use. Then it means that we use the golden rule, which we'll be going to look at it later. Okay, we'll be looking at it later. Lower of cost and what? And the replacement cost. You compare both what? The cost and pick the lowest out of it to be what? The closing what? Inventory, which we are going to send it as what? An asset on the face of what? The statement of financial position. Then goods and services unpaid for during the year. Okay, you have purchased goods, but you have not paid for. Under the cash basis of accounting, no recognition because you have not paid, no cash has been gone out. But for the accrual base of accounting, this is where we are saying that we recognize expenditure when it is being incurred. So here, the goods and services have been incurred, but they have not paid for. So here we add it to the pool of what? The expenditure under the goods and services. Then under the statement of financial position, this is where we are going to treat it as what? As a liability because we have not paid for. Are we okay? We have not paid for. So it becomes a liability to us. So services received in kind. Here, no money has been received. They have been questioning that ask students, okay, that maybe an NGO has trained maybe staff. Okay, they have trained their staff. They have trained maybe assembly staff in what? In the IPSAS what? Development, amounting to maybe 5,000. In this situation, remember, that particular expenditure has not been incurred by the assembly. So once it has not been incurred by the assembly, how are we going to recognize it on the face of the financial? Mind you, the first thing is that the services received in kind, remember, it became what? Non-exchange transaction. So once it becomes non-exchange transaction, we recognize it, the amount involved, we recognize it as what? As revenue. And we add it what? To the donation and grant. Okay, then these services received in kind, okay, these same services received in kind, remember, okay, remember, it is the same pool of assets. So we are going to what? Add it as what? As expenditure under what? Under the goods and services. Are we okay? Then the deposit for future services to what? To be delivered. Deposit for future services to be delivered. Here, maybe you want to what? Undergo maybe services.
Hello,
okay.
Can you go over the services received in kind again?
Okay, services received in kind. I was saying that services received in kind, it becomes what? Non-exchange transaction, which you, the assembly, you have not paid for the services, but somebody has paid for it. So assuming that maybe an NGO, okay, an NGO has taken upon themselves to train your employees in what? In the standard. And the amount involved is what? 1,000. This 1,000, remember, it is not amount for you. You have not incurred any what? Any expenditure. So it becomes what? A revenue to you. And that is why we are saying that we treat it under what? Non-exchange transaction what model. So this non-exchange transaction principle is saying that when you acquire something through non-exchange transaction, the amount involved, we add it, we treat it as what? As revenue. So under the statement of financial what? Performance, okay, we have revenue. So the revenue, we have the donation and grant. So this donation and grant, okay, this amount, which is 1,000, will be added to the donation and grant. Okay, will be added to the donation and grant. Then for the double entry to be effected, remember, you are going to add this amount involved. Okay, it is just what you are going to add this amount involved to the goods and services under the same statement of financial position, the statement of financial performance. Okay, so when you add the revenue, you add it to the revenue, you go and add it to the goods and services, so that the double entry will be effected. Remember, these services received in kind, okay, these services received in kind, the other leg cannot be treated on what? On the statement of financial position. So where are we going to add it? We treat it as if we have incurred what? It as revenue, so that the double entry will cancel. So when we treat it as what? As expenditure, the revenue will cancel what? With the expenditure, so that it will be off. So you get your take in what? In the revenue, and you get the take in what? In the expenditure. Boss, are you okay?
Yes, please. Thank you.
Okay. Then we move on to what? To the deposit for future services. Now you want to undertake some conferences, and you have gone to the hotel. Okay. So the hotel, you have paid for the services or the conference room, but you have not yet enjoyed the services. So here, you, the assembly, if you are going to treat this particular this transaction, you are going to make sure that these services that you have paid for become an expenditure. So you add it to the goods and services. Okay, you add it to the goods and services. And under the statement of financial position, this is where, because the money you have not enjoyed the services, it becomes an asset to you, because you can get up anytime and say that I'm going to take my money. Or you can get up at any time and say that I'm going to cancel the conference. So the money, the hotel need to refund the money to you. So you treat it as what? As receivable, which is what? An asset. Are we okay? But under the cash base of accounting, this transaction, okay, this transaction will be expense. Okay, deposit for future services, because you have paid the amount, so there's cash outflow. So you need to add it automatically to the expenditure flow, and that's all. Please, among these who don't understand any of it, among these who don't understand.
Hello, sir.
Hello.
Yes.
Hello, sir.
Yes.
Good evening.
Good evening,
Please,
boss.
I have a confusion. With the example you made about the electricity,
Okay.
like electricity unpaid, do you always have to assume that one leg has not been treated and then you have to treat it twice?
Remember, additional information. Okay?
Yeah.
Additional information are always treated what? Twice or 3 times or 4 times on exceptional cases. So when you get anything in what? In the footnote, please, you need to have it in mind that you are treating it 2 times or 3 times or 4 times on exceptional cases. But normally they are treated 2 times, twice. Why are we saying so? With the electricity of what? The 1,000, you have consumed, but you have not paid for using what? The postpaid. Here, remember, there's no way you will treat this one only one. You need to treat it what? 2 times so that you get your 2 texts. That is what? The double entry. So for the double entry to what? To be effected, remember, electricity happens to be what? To be goods and services. Is that not it?
Yes, sir.
So you add the 1,000 to what? To the goods and services as electricity what? Consumed but not paid for. Then under the statement of financial position, remember, you have not paid for the electricity that you have consumed. So it becomes an amount that you are going to settle future. So how are you going to treat it? It becomes the end what? The end balance of what? The electricity. So therefore, we are going to treat it as what? As liability because you have not paid for it. Boss, are you okay? You have not paid for it.
Yes, I'm okay.
So for the double entry to what? To be effected, you need to add it to the pool of what? The expenditure to get the total expenditure for what? For the electricity. Then again, you are going to add it what? To the statement of financial position as what? As liability. Under what? The current liability as what? As payable. And you are good to go. So here, under goods and services, the 1,000 will be here. And under the statement of financial position, this is where you have the current liability, which is what? Payable. So you add it to the pool of what? The liabilities, which the 1,000 will come here. So when the examiner is marking for you, he will mark it this one in a note for you and mark this one in a note for you, which will give you 2 texts, free 2 texts. Okay, free one, free of charge. Don't worry. When you get to the financial statement, I will make you understand very, 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 very much. Are you okay? Okay.
I'm
so
okay,
this one
sir.
is
Thank
just
you.
the theory aspect, so that when the question comes, you'll be fine. Please.
Sir, please kindly go over the contingent liability.
The contingent liability. Please treat it as what? The allowances and provisions. With the contingent liability, okay, remember there's no money being paid out. So under the cash base of accounting, you are not going to treat it at all. No recognition. But under what? The accrual accounting, this is where the contingent liability, you are going to what? Make sure that you add it to what? To the pool of what? The expenditure. Then again, go and add it to what? To the liability. Are we okay? So that the double entry what? Will be effected.
Thank you, sir.
Thank you.
Yes, sir.
Please, I would like to entreat you to go and read massively on what the vote accounting, features of vote accounting, commitment accounting, and fund accounting. These 3 things. Please, I want to beg you, because of time constraint, we will not be able to go through that.
Sir, please explain it a little. We beg.
This is one aspect that I have predicted. Please make sure you are familiar with this, and you'll be fine. Are we clear?
Yes, sir. Thank you. Carry on.
Sir, can you explain a little for us?
Please, I hope that is clear. I am begging you, make time, read on the vote accounting, the features of what? Vote accounting, okay, then commitment accounting and fund accounting. Are we clear? These are some of the past questions, okay? We are saying that, you see, when my boss was taking you through what? The tricks, he was telling you that when the question comes, please don't read the preamble, go straight to the requirement. So for instance, this is a past question. Don't read the preamble, cash policy 1.1, don't go and read it. Please read the requirement and see, if you understand the question, when you read the requirement and you are able to understand the question, then it means that you are good to go, you flow. So don't go and waste your time, because the preamble will waste your time. Are we clear? So here, the requirement is saying that discuss the difference between cash accounting policies and accrual accounting policies in terms of recognition and or treatment of the following in the financial statement, which is the revenue, capital asset, allowances and provisions, and contingent liability. These are what we have discussed earlier. Are we clear? So I hope when question of this nature comes, you'll be able to answer. I have messages. I have a lot of, can you take the non-current asset acquired? Then please kindly take the deposit again. I didn't hear. Please, let's mute. Okay. Somebody is saying that deposit, okay, and the non-current asset. Okay, please, I hope when question of this nature comes, you'll be able to answer. Revenue. How do you treat revenue under the cash base of accounting and under the accrual base of accounting? Remember, under the cash base of accounting, revenue are being what? Are being recognized when they are being what? They are being paid for. And they are being received. Okay, and expenditure are being what? Recognized when they are paid for. Then the capital asset, my brother, the one who talks about the capital asset. The capital asset is talking about the non-current asset. Okay, the non-current asset. I want to explain it again. With the capital asset or the non-current asset, which example could be what? Motor vehicle. Okay, we are saying that when you acquire the motor vehicle or the non-current asset or the capital asset under the cash base of accounting, this is where we what? We expense the amount. We expense the amount. And where do we expense the amount? We add it what? To the pool of what? The expenditure. Okay, and that ends it. We don't treat it as an asset again. But under the accrual base of accounting, this is where the non-current asset or the capital asset or the motor vehicle, this is where you are going to what? Recognize it and capitalize the asset and depreciate it over its useful life. This is how you are going to explain to the examiner. You recognize it. First of all, you tell the examiner you recognize it. And how are you going to recognize it? Okay, you recognize it as an asset. And the asset, you capitalize it and depreciate it over useful life. And you are good to go. It's done. Are we okay? And somebody also was talking about the deposit. The deposit, we are saying that with the deposit, okay, it is money, assuming that maybe one municipal assembly, okay, has made deposit of what? 5,000 to undertake maybe a conference, which will happen in the future date. But the conference has not been started yet. Here, under the accrual base of accounting, because money has been paid for, automatically you recognize it as what? As expenditure. Are you okay? You recognize it as expenditure, and that's all. But under the accrual base of accounting, this is where you are going to tell the examiner that the money you have paid for, you are going to add, because it is going to be added to the pool of what? The expenditure. So you add it to what? To the goods and services. Okay? As what? Conference and seminars. Then when you go to the statement of financial position, the 5,000 involved will be added as what? As an asset. Because the money you have paid for, you have not enjoyed the services yet. So let me use what? Your landlord, for instance. Maybe you have paid for what? For rent for your landlord, that you want to occupy a room. The room that you have paid for, you have not occupied the room yet. So now, when the landlord is preparing his account, automatically the landlord will treat the amount as a liability to him. But for you, you are going to treat that particular what? Amount as an asset, which you can get up anytime to go and take that particular money. Because you can tell the landlord, I don't want to enjoy the services again, or the environment is not conducive for me. And that is why we are saying that the deposit you have paid for, but you have not enjoyed the services. So once you have not enjoyed the services, it means that the amount involved becomes what? Receivables. It becomes an asset to you. And how do you treat it? It becomes what? A receivable. Because you can get up anytime to go and take the money. The person who asked the question, please, I hope I've explained it for you. Is it okay?
Yes, sir. Thank you.
Okay. This one question that they have been asking students. Discuss required. I told you don't go and read the preamble. Go straight to the required. Requirement is saying that discuss for reason why many countries have not been able to implement the full accrual public sector accounting system. And what did I say about this one? I am telling you that when a question of this nature comes, things that are not able for Ghana to implement the full accrual are what you are going to write for the examiner. So this one, they are asking you or they are testing your mind on what? On the disadvantages of what? The accrual base of accounting. Are we clear? The examiner is testing your mind on the accrual base of what? Accounting. Are we okay?
Yes, sir.
Okay. Please, there's another question. Explain these techniques as used in the public sector. And the techniques are the commitment accounting, the fund accounting, and vote accounting. And that is what I told you that you should go and read and read and read. Are we okay because of time? Please, any question? We are done with the basis of accounting.
Sir, please, my question is on the vote accounting. I've read, I'm not understanding the vote accounting.
Please, well, when you finish, you can take my number and hit me up. Okay. The time,
Yes,
we have a lot to do. Okay. Okay, we have a lot to do today. I'm begging you. Okay.
Sir,
okay.
A summary of it. Can one
Let's
say
go to, please. I'm begging you today. My interest here to finish the 10 marks, and we have only up to what? Up to 12 o'clock to finish. I'm begging you, please. Let's go to what? To the public-private partnership and what? Public-public partnership. Here, please, it is very, very simple. The slides are not many, and you can get the 10 marks here fully. You can get the 10 marks here fully. Don't joke with this one. What I'm coming to take you through, please don't joke with it. I'm broadening what you're understanding on it. What is public-private partnership? With a public-private partnership, you are saying that it doesn't have any general what? It doesn't have any specific what definition. It has what? A general definition. But the general definition, you need to bring certain terms. And what are the terms? The terms are the contractual agreement, the clear objective, service and infrastructure, and transitional what functions of what the public sector. Please, these are the four things I want you to bring when you're defining your definition. Are we okay? So you can what? Put your definition in any format, but make sure that the ones I have bolded, make sure they comes in. So for example, PPP is generally defined as what? A contractual agreement between what? The contracting entity, which is the public sector, and the private sector operator, with what? With a clear objectives for the provision of what? Services and infrastructure. For the clear what? Objectives for the provision of what? Services and infrastructure that are traditionally functions of what? The public sector. Please, these are the key terms. It is what? A contractual agreement. What do we term as contractual agreement? It is a long-term what? Agreement. Okay, it is a contract between what? Between the public sector and the private sector, with a clear objective for what? For the private sector to provide what? Services and what? Infrastructure that are traditional functions. When you talk about traditional functions, we are talking about things that government do, but now they are giving it to the private sector to do. So these are the key things. When you put your definition in anyhow, but you put all these terms inside, the examiner will mark it for you.
For people at this time.
Please, I hope you are clear. Then the public partnership, PUP, this is a collaboration between two or more. So two or more should be what? Should be the terms. Two or more what? Public sector entities in provision of what? Public services that are commonly used in what? In the areas of what? Community, what project. Okay, so make sure you know the key terms. What are the objectives of what? PPP. Okay, what are the objectives? Okay, the objective of PPP is encourage what? And facilitate investment by private sector. So here, it gives a pool of what? Private sector to what? To invest in what? In the public sector. Okay, by creating an environment for what? For the private sector where value for money for government can be clearly what? Demonstrated. Then they also leverage on what? Public assets and funds with private sector resources from local and international markets to accelerate what the infrastructure development. So here they will leverage on public assets in order to accelerate what infrastructure development within what the public sector. Then also increase the availability of what public infrastructure and services and improve service quality and efficiency what of project. Here it is clear that when private sector is undertaking what something or services, the quality of it is clear, no doubt. So because of that, we are saying that improve service quality and efficiency of what project, then provide a framework for developing what efficient risk sharing what mechanism. So here there is going to be what risk sharing between what the private sector and the public sector. Then ensure attainment of what required and acceptable local and international environmental standard. What is the benefit of a PPP to government? The first benefit that should come into your mind is risk sharing. Why are we saying risk sharing? Because it is partnership. So partnership means that private sector will burn some of the risks and public sector will burn some of the risks. So the risks will be shared between what the government and the private sector. That is one of the benefit that should come into your mind. Okay. Then again, another benefit should be leverage on private sector resources to achieve government objectives. So here, government has given their manifesto or policy that they want to build hospital. But looking at the limited resources they have, they won't be able to implement that particular policy. So here, government will say that, okay, let me capture the eye of the private sector, so that I will leverage on their resources for them to provide that particular hospital for me. So as a result of that, government policy will be achieved. Then ensuring quality of public services and their wider availability. Okay, once the hospital has been built, it means that there is going to be good quality of public services, and it will bring wider availability because there is going to be added to the hospitals that we have. Then another point that should come into your mind is increase in public assets. Here, remember, maybe government in the public sector, we have 5 hospitals. So the 5 hospitals, when the private sector is adding additional one, it will be 6. So the 6 adding, it will increase public assets. And that is the simple meaning. Then again, economic growth and increase in employment. Here it will create more employment, and which will bring economic growth. Then there will be local and technological transfer. Here, let me give a clear example. You see the interchange, the Pokwase interchange. The Pokwase interchange, they have used the international they have gone international. So as a result of that, they are saying that, okay, when maybe China is coming to build, the policy or the benefit Ghana should derive is that when you are coming to do, you need to employ our people in order to give them more knowledge, to train them in a technological aspect of the interchange. So that when you finish and go, and there is maintenance, our people will be able to do. So that going forward, they will be also to expand themselves in terms of knowledge. Okay, then we are saying that it will provide rare financial benefits. When you talk about rare financial benefits, we are talking about, for instance, the example I cited, government has planned on building hospital in their manifesto. Now, government don't have the resources. They have leverage on the private sector to build it. So, private sector is building the hospital for government. So, the money that government is supposed to use to build the hospital now be channeled to another thing. Okay, the money, let's say 10,000 that government is supposed to use to build a hospital will now be channeled to use it for another benefit. And that is what we are talking about, rare financial benefit. Are we clear? So these are the points that it shouldn't come out of your mind. You should maintain them in your mind. Are you clear? Then the benefit to the private sector, okay, is there. Then limitation of the PPP. What are the limitations? What are the problems? When in the exam hall, you don't see limitation and you see problem. Please, they are the same. Okay. First limitation or problem is that we are saying that not all projects are feasible for reason being political, legal, and commercial etc. This simple means that with the PPP arrangement, it can be on paper wise, but when you go to the field, you won't see the project. So the project will not be feasible. But on paper, they have tell you that, okay, they have cut saw to build a hospital. But when you go to the field, there's nothing like that. There's ghost word project. So as a result of that, we are saying that not all projects are feasible. Then there is what? Cost attached to that. Cost attached to that. When you talk about cost attached to that, we are talking about after the private sector has transferred the residual value to government, and there is what? The need for renovation. Maybe the private sector did not want to renovate the place. So the money that government will use to renovate the place is the cost that we are talking to be attached to the debt. Okay, then change in operation and management control of infrastructure, then inadequate knowledge in the PPP and poor negotiation skills. Here, we don't have the knowledge. So once you don't have knowledge, when you're going to the negotiation table, it becomes what? Worse. Then government responsibility continue. Here, let me expand it for you. When you say government responsibility continue, assuming, let me bring a practical example. Maybe a lady here has given birth, okay, but while enjoying maternity leave, maybe here the lady would not say that she won't be able to send the child to the workplace because of what? Risks that will be exposed to what? To the child. So as a result of that, or the akwalana go to school, he has given the child to what? One of what? The educational institution. So now, when the mother is at workplace, she will not rest. In a sense that kakra no afre school no mebano wedidi, mebano osuana, mebano wada. So as a result of that, her responsibility continues, even though she is at workplace. So when you link it to government, here when government, government has given the private the electricity to private sector. So private sector is managing electricity. So here, when there is what? Light out or blackout in maybe Eastern region people will not call electricity, but they will be what? Pinching what? Government. They will tell you that government, nanado, Mahama Dumso, nanado Dumso. So because of that, if Mahama or Akufo-Addo wants to avoid that, then it means that he needs to be calling what? The ECG manager. So here, when there is blackout, and maybe the government got hint of the blackout, he would then call the manager of what? ECG to tell him that, Master, my people are in darkness. Please make sure you restore what? The light for them. So when government is doing that, it means that his responsibility what? Continues. Please, is it well understood? Is it well understood?
Yeah. Yes.
Okay. Then we have types of PPP arrangement. Please here pay attention. This is where normally you used to trick the student. But I say that I refuse to be tricked. Why am I saying that? I'm going to digest it for you to understand. This is Prof. Accountancy solution. When you are with us, we break it down for you. And let me break it down for you. Types of PPP arrangement. We have two types of what? The types. Types of PPP arrangement. I said we have two types in the types. Why am I saying that? We have one we call in the middle, and another one not in the middle. Please write it. In the types of PPP arrangement, we have two types. In the types, we have two types. What is the type in the type? We have first one in the middle, and the second one not in the middle. Okay, when we say in the middle, it means that there is what? An existing infrastructure. So a question can ask you, and the question that they will ask you, there will be an existing infrastructure. Then there will be another question not in the middle. That means that there is no existing infrastructure. And that is what they use to confuse the students. So if they ask you general, state and explain the types of PPP, please, you can state and explain this. But make sure you explain it very well for the examiner. But when they ask you, you need to read it very clear and know that whether there is what? There is existing infrastructure or not existing infrastructure. I'll give you an example. When you talk about not in the middle, okay, we are talking about what? No existing infrastructure. And those one are the build, operate, and transfer, which is BOT, build, transfer, and operate, BTO, and build, own, and operate. Then the last one is joint venture. These are what? The 4 types that we say that not in the middle. So it means that there is no what existing infrastructure. But with in the middle, which is what existing infrastructure, we have what maintain, operate, and transfer, MOT, or rehabilitate, operate, and transfer, which is ROT, management contract, and service concession. These are the 3 that we say that there is what existing infrastructure or in the middle. Are we clear? So let me start with what? With the build, operate, and transfer. With build, operate, and transfer, this is where this is a contractual agreement between what? The public sector and the private sector, where the public sector will tax the private sector to what? To build what? An infrastructure. Operate the infrastructure for a number of years. After the end of what? The years, you will then transfer the residual value to government. So here, government will say that, okay, private sector, come and build what? The hospital. After building the hospital, operate the hospital for a number of years, let's say 20 years. After the 20 years, we assume that you have recouped your profit. So after recouping your profit, at the end of what? The 20 years, transfer the residual value to me. So now it becomes mine after the 20 years. That is the meaning of what the build, operate, and transfer. Then build, transfer, and operate. But before then, I want to ask you, with the build, operate, and transfer, what benefit will government derive from it? Build, operate, and transfer. What benefit will government derive from it? There will be what? Expansion of what? Infrastructure. There will be what? Creating of what? Job and what? Economic what? Development. Is that not it? So please, this is where you apply. When they ask you the benefit of these ones, you apply. Are we okay? Are we okay?
Yes.
Then we have build, transfer, and operate, BTO. This is where government will then tax the private sector to come and build. Okay? You come and what? Build. After building, you will then transfer the services or transfer the infrastructure to government. Then you operate it. Somebody will ask you, what benefit will the private sector gain from what? This particular type? At the end, they are going to pay them back because it happens to be what? A liability on government. So government tax the private sector to build the hospital on what? On a loan based. Okay, so that when government get the money, they will pay it by bit for the private sector. So they are going to get their money back. Then we have what? Build, own, and operate. In a situation whereby there is no what? Condition, there is no, maybe effort has been, they have tried, they were not able to get the BOT, they were not able to get the BTO. So now they will arrive on a BOO, which is build, own, operate. Here, let me give a practical example. Assuming that Accra Technical University, okay, they are lacking what? Hostel. So the hostel they are lacking. Most of their students are staying outside campus, which a lot of the students are exposed to what? To armed robbery and a lot of things, risks. So now the management of the hospital, the school has decided that let us go to the private sector and tax them to come and take what? The BOO. So ask yourself, what is the BOO? Before I go on with the explanation, with the example. The BOO is where the government will tax the private sector, but they will give them the land. Okay, the Accra Technical University will give what the private sector the land to go and build what? The hostel. After building the hostel, they will what? They will own that particular hostel and operate it for good without transferring the residual value. So please, when you are explaining this one, make sure you bring the technical term without transferring it. So here they don't transfer the residual value to government. When you don't tell the examiner that they don't transfer the residual value and you leave it open, the examiner will mark you wrong. So make sure you tell the examiner that the private sector will build, own it, and operate it for good without transferring what? The residual value to government. Mr. Nicholas, your hand is up.
Is it a transfer of residual assets?
You said?
Yes, please. Can you hear me?
Yes.
Yeah. Is it a residual asset? Is it a residual?
Please, your network is bad. Your network is bad. Very, very bad.
You can type your question.
Transfer of residual by the same.
You said? My brother.
He's asking to know whether the transfer of residual or something, is it the same or something?
Please, under the BOO, build, own, and operate, the private sector will not transfer the residual value to government. They will operate it for good without transferring the residual value. So it becomes theirs. And that is where question comes in. Assuming that they ask you, what benefit will government derive from the BOO? Who can tell me the benefit government would derive from the BOO?
Service delivery satisfaction.
Service delivery satisfaction. There's going to be what? Quality or service delivery satisfaction. Then again,
increase employment.
Increase employment. It will increase employment.
Expand infrastructure.
First expansion. But there is one first thing that's supposed to come into your mind. That is the tax revenue. Government will get money, revenue from it, because they are going to tax the people. They will pay what taxes. Are we clear?
Yes.
Are we okay? So please, when the question comes, try to apply.
So
okay.
When you answer,
they're going to tax who?
Hello.
The private company or?
They are going to tax the private company. You know, when you are operating in Ghana, you have to pay tax. So the taxes you are paying become revenue for government.
So when you are answering this, do you have to tell the benefit? You have to indicate the benefit into the question answer.
When they ask you to explain, please explain it and go. But when assuming that they ask you the benefit of the BOO, what benefit will government derive from the BOO? These are the things you are going to tell the examiner.
Thank you.
But when they say state and explain, please explain and go. Mami Okuya.
Yeah, hello, good evening.
Evening.
And please, when I'm getting a little confused here, because when you read the manual, it says that government offers financial incentives through tax exempt for the build, own, and operate. So if government is also going to receive tax in the form of revenue from them, isn't it contradicting what the manual is saying?
The tax exemption, they will give the tax exemption up to the number of period. Okay, they won't give it to you the whole of your operation, like the whole time. Okay, the tax exemption, like they will tell you that maybe 5 years tax exemption.
Okay.
Are we okay? So
yes,
after the 5 years, automatically government will tax them. Is that not it? So it becomes revenue to them.
Thank you.
And also things that the company is going to import will be exempted from taxes and other things. This is where they are coming from.
Yes. You see, when they give tax exemptions, okay, when they give tax exemptions, the tax exemption does not come forever. There are conditions attached to the tax exemption. I don't know if you are getting it well.
Yeah.
Sometimes they can tell you that maybe they are reducing the tax. The condition can be like maybe if you're supposed to pay, for instance, 10%, then you are not going to pay the 10%, but you pay 2%. It's still what money to government. Is that not it?
Yes.
Please, I hope it's well understood. Let's move on to what? to the middle, in the middle. We have in the middle, which means that there is what? An existing infrastructure. An existing what infrastructure? It means that the infrastructure is there. Okay, whether it is fully functioning or it has been what? Deteriorated. So let's look at the definition of them. Maintain, operate, and transfer, or rehabilitate, operate, and transfer. They are the same thing. When the question comes and they say that you should explain maintain, operate, and transfer, or rehabilitate, operate, and transfer, you're going to tell the examiner that this is a contractual agreement between the private sector and the public sector, where the public sector will tax the private sector to renovate an existing what? Infrastructure, or a deteriorated what? Existing infrastructure. Okay, the infrastructure has been deteriorated. Okay, so as a result of that, the private sector need to come and renovate that place, or maintain the place, operate the place for number of what? Years that will be agreed in what? In the binding agreement. Then after that, you transfer the residual value to government back. So here, the infrastructure is there, all right? Let's assume that the hospital is there, or the school is there, but the school has been what? Deteriorated. As a result of that, they have collapsed the school. So now, government has taxed maybe Mr. Nicholas to come and what? As a private sector, to come and renovate the place, or maintain the place, or rehabilitate the place, operate it for a number of years. Within the number of years, we assume that you need to recoup your profit, then transfer the residual value upon the expiration of what? The terms to government. Are we okay? This is where you are going to tell the examiner in your definition that there is what? An existing infrastructure, but has been what? Deteriorated. Okay, there has been what? Existing infrastructure, but it has been what? Deteriorated. Please, that is the term I want to see in the exam, the paper, on the paper, when you're explaining it. When you don't let the examiner see that, then it means that you are wrong. The management contract and service concession, they play what? They go hand in hand. Let me explain in simple terms. With the management contract, we are saying that there is what? An existing, where there is what? An existing what? Infrastructure. But at this time around, the infrastructure is what? Well maintained. It is functioning already. Okay, the infrastructure is functioning already. So they will tax the private sector to come to bring their people to man the place. They need to bring their own management to come and man the place. Okay. After manning the place, they will man it for what? Number of years. Okay. Then after the number of years, they give it back to government, depending on what? On the terms. Okay, or the operation. Here, if government realized that, okay, the private sector was able to manage it well, then it means that we need to renew the contract. But there should be what? A clear what terms. That maybe after 10 years, you need to transfer it back to me. Then depending on what? Your services, whether it is good or not, before we renew it. Okay, so here, let me use what Kotoko as an example. I always love using this example because you get it to understand. Kotoko is a team. It is there. Okay, nothing is wrong with the Kotoko, but management team is the problem. Now, Otunfo will decide that, okay, Kotoko is there already. So once Kotoko is there already, let me bring what? New management team to come and manage Kotoko. So when they bring the new management team, they will manage Kotoko within what? The stipulated time. Okay? Then the profit, they will share the profit that they will get out of it. Then when the time expires, management, Otunfo will decide to what? To terminate the contract or what? Like giving it back to them or not. Are you okay? So for instance, if maybe they have appointed Nicholas to be what? The coach, you bring his management team. So he will come and manage Kotoko, all right, for a number of years. Then, after managing the Kotoko for a number of years, after the expiring of the terms, then he will transfer it what? To Otunfo back. Otunfo will now decide based on what? Their services, to whether renew the contract or not. So here, when you're explaining, tell the examiner that there is what? An existing infrastructure that is functioning. So Kotoko is functioning. But with the service concession, this is where there's also an existing infrastructure, which is also functioning. But the difference between the management contract and service concession under the PPP is that under the PPP, we are saying that the management that is coming to take over Kotoko should have to pay a concessionary fee, a concessionary fee, a concession fee, a concessionary fee, or a concession fee to Otunfo. Please, mind you, when you are explaining, make sure you bring the concession fee or concessionary fee. This is the difference between the management contract and the service concession. With the management contract, you won't pay any concessionary fee. But with the service concession, you need to pay. It's in the form of what? Goodwill. So now, Kotoko have the name all right. So even if Nicholas come to what? To coach the place, Kotoko with his team, if they even cough, if they go to the park and cough, people will come from various places to go and watch the match because they have the name already. So the name, they need to pay what? A concession fee to government. Are we okay? So here, the entity is there already, functioning all right. So here, if they want to appoint, they will appoint the people to come and man the place within number of years. But before they man the place, they need to pay a concession fee. Let me associate it with what? With the PDS. Okay? With the PDS. Do you know the reason why government was able to cancel the PDS deal? Who can tell me the reason why government was able to cancel the PDS deal before without the private sector taking them to court? Who can tell me? Who can tell me? Okay, let me give you. Here.
ECG was already doing well.
Uh-huh.
Yeah, and they had the brand already, or I would say the goodwill.
PDS refused to pay concessional fees.
PDS, you see, in the terms that government went into with what? With the PDS, it was clearly stated that PDS has to pay what? A concession fee to what? To government. But they gave them the stipulated time to pay. But the PDS was not able to pay that particular what? Concession fee. So as a result of that, government stood on that ground to cancel the contract. So here, if, for instance, PDS was able to pay the concession fee to government, then it means that government wouldn't have any grounds to cancel the contract. So as we are even speaking, PDS would have been the one taking charge of electricity. But because they were unable to pay what? The concession fee to government, government stood on that ground to cancel what? The deal. I hope I'm able to link it well for you to understand. So here, a question has asked students, okay, with the existing infrastructure, they gave what? All the information, and they stated that the first information is that, okay, let me bring this one. There is an information that maybe Accra Technical University lack what? Hospital, hostel. So now, as they lack what? Hostel, they are unable to
admit more students.
Yes, admit more students. So as a result of that, the school is losing. Now, this is one of what? The information. Then another information is saying that electricity, maybe there has been what? Management what? Failure in terms of what? Electricity. Government has pumped money into what? Into UCG. Now, government wants ways and means what? To improve electricity, to recoup their money back. Now, as what? A consultant, you have been tasked what? To advise government based on the PPP arrangement. To explain to government which of the terms or the types that are well appropriate for these particular two statements. Who can tell me the first one? Which one we are supposed to use?
Management contract.
The first one. The first one, we are saying that they lack what? Hostel. So once you see lack of hostel, it means that there is no an existing infrastructure because the hostel is not there. So first of all, you need to sit down and read through and understand these particular two statements that have been given, or these conditions that have been given, which one has an existing infrastructure and which one has no existing infrastructure. So the first one says that they lack what? Hostel.
So BOT.
As a result of that, they were unable to admit the student.
BOT or BO.
So here, you look at the well-appropriate one. So which one will benefit government most? Okay.
BOT.
So the first thing that will benefit government is what? The BOT. Because that one, they will transfer the residual value to government. Are we okay? So in an absence, maybe in a situation whereby the examiner wants to confuse you and says that there is what? Absence of what? BOT. Okay, there is absence of what? BOT in the arrangement as a result of the conditions that are available. Which of what? The type will well be fit in this what situation? That is where you are going to look at after the BOT, which one is next that will benefit government most. And that is what? Build, transfer, and operate. In a situation whereby build, transfer, and operate is not there, then the one that you are going to resort on is what? The BOO. Are we okay? So you look at in what? In stages, which one will benefit government most before the other, before the next one. Then the second one I asked you, I said that there is what? ECG. But ECG is facing what? Management challenge. And government has what? Both input funds in what? Or has committed funds in what? In ECG. And now they want to recoup their profit. So here, as a consultant, what types of PPP would they be able to what? Will be appropriate for this particular situation?
Service concession.
I won't take it.
Management contract.
Management contract. Okay, management contract. Why are we saying management contract? Because here, the thing is all right, but government has put the money inside. So here, government want to recoup the money that they have paid. Okay, government want to what? They are saying that management, the situation there is management was constrained. There's management problem. So it means that the first what thing that you need to come into your mind is what? Is the management contract. It shouldn't mean the service concession. Assuming that they say that UCG is operating fine. Okay, UCG is operating fine. And government wants what? Wants people to man the place. And that is where you'll be looking at what? The service concession. Are we okay? But the first scenario was saying that there is what? Management what? Problem. So automatically there is what? Going to be management contract. So government has to get new management to take charge of what? The ECG. Are we okay? Then joint venture. Joint venture is where the private sector and the public sector will come together and jointly what? Undertake what? Infrastructure or services. And that's all. So please, colleagues, this is how I will explain for you to understand. And I know when the end of question comes, you will find yourself wanting. Please, any question here?
Sir, no question.
Yeah. Okay, let's move on. Mr. Nicholas.
Please, can we just talk more on the...
Yes, please. Yeah.
Who is talking?
Concession. Nicholas.
Okay.
Yeah, the service concession. Yeah, like I read something about it. There also a portion where the government, or let me say the grantor, is required to cash.
We are unable to hear you.
Mr. Nicholas, your network.
Please, can you hear me?
Maybe position yourself better.
Please type it for me here. Okay, Mr. Nicholas, type your question for me. Risks associated with PPP. What are the risks associated with what? PPP. What are some of the risks? Here they can what? State these things and what? And ask you to explain. Or they can ask you to what? To state and explain. In the exam hall, they can either what? State this one for you to explain, or they can what? Ask you to state and explain. Are we clear? So any of it, you should be able to what? To be fine in the exam hall. What are the risks? We have the contractual what risks. We have availability risks. We have demand risks, operational and maintenance risks, financial risks, and residual value risks. When we talk about what? Contractual what risks, we are talking about what? The risks that are associated with what? The construction what level. When we are constructing what? We are contracting what? The
demand risk here.
I have to mute. Let me mute everybody. Thank you. Okay, the contractual risks. I was saying that it is risk that is associated with what? With constructing of what? The project. Okay. They are the risks that are associated with what? With contract. When we are constructing what? The project. The risks that will come as a result of what? Building the project is what we talk about. What we term as what? The contractual risks. Availability risks. These are the risks that have to come in as a result of making the goods that you are going to what? The services that you are going to what? To give to the public, being available to them. Okay. Here, okay. I want to maybe undertake what services? That is what? Water. Okay. So the water, it is on the electricity and ECG to what? To burn the rates of what? Making the water available or the services available for the public. So the risk that is associated with making the water available to the public is what we term as well the availability risk. Then demand risk. Okay, demand risk. Here, after what? Constructing what? The project. The project is well constructed. Now you have started fully operation. Now the hostel that you have constructed, you have started operation. So once you have started operation, the number of people that you said you want to what? To admit in the hostel is what? Is 5,000. But you were unable to get the 5,000, but you had 1,000. It becomes risk to you, the investor. Okay, so that is what we term as what? The demand risk. People unable to what? To come into what? To come and rent what? The hostel. So as a result of that, it becomes what? A risk to what? To the investor. Then the operational and maintenance risk. This is where after the project, you have done with the project, the construction. So you are operating what? The project. Now, maintaining the project, maybe there is crack in the project. Okay, or maybe in terms of what? Operation, there is what? Difficult in terms of what? Operationalize why. As a result of that, it becomes what? A risk. So that risk is what we are saying that is what? Operational and maintenance risk. Then financial risk.
No, please come again with the demand risk.
The demand risk. I was saying that after you finish constructing what? The hostel, you finish putting up what? The hostel. Now you have what? Make your mind that okay, I have a cutoff that I want to get what? Minimum student of what? 5,000. But along the line, you were unable to get the student of the 5,000, but you had 1,000. It becomes risk to you. Are you okay? So that risk is what we term as what? The demand risk. People unable to what? To come and rent the place. Okay.
But what about the situation where you projected 5,000 and at the end of the day, the demand for it is about 6,000. Well, how do you term that? Oversubscription. What do you term that?
Oversubscription. So if it happens, so it comes in favor of what? The person. Okay, it becomes an advantage to the person. But here we are looking at the disadvantage aspect.
Okay.
Are we okay? We are talking
about
the disadvantage aspect of what? The infrastructure.
Okay, I'm okay.
Then the operational is what I've explained. Then the financial risks. The financial risks, I'm talking about the risks of getting financed to start the project. as a result of what? Maybe inflation, what? High inflation, change in what? The economic what? Indicators. Or maybe you want to go for loan. After the time you want to what? Build the infrastructure or the hostel. The interest rate was 5%. But after everything, there was delay. And now you want to start the project, but the interest has gone to what? To 10%. It becomes a risk to you. So it is what? A financial risk. Okay, you won't be able to get it as at the time of the 5%, but now you are getting it at 10%. So the 10% there has been increased. So that risk will borne on you. Are we okay? So it becomes what? The financial risk. Then the residual value risk. The residual value risk comes in when after the contractual term, let's say the 20 years, the private sector is transferring the residual value to government. After transferring the residual value, we realize that the private sector was not able to maintain the place. So being unable to maintain the risk, transferring it to government with that problem becomes what? A risk to government. And that is what we are talking about, the contractual residual value risk. Okay, so here, okay, I have built the place, the hostel. 20 years has come. The 20 years, the private sector, which is Mr. Nicholas, was enabled to what? To maintain the place. But the contractual term has ended. So now it has ended. He is transferring it to government. So how the residual value will look like after depreciating is what we are talking about, what? The residual value risk. Hello, are we clear?
Yes, please.
Okay, so these are the risks. The risks, please, mind you, we are looking at the negative aspect of what? The infrastructure. Okay.
Kindly go over the contractual and the availability risks, please.
The contractual risks, I was saying that they are the risks.
You don't have all email. Let's try and pay attention.
The contractual risks, I was saying that they are the risks that are associated as a result of you constructing what? The project. Okay, so for instance, maybe you want to construct what? Road. The road that you want to construct. In your mind, you said that I am not going to meet a lot of what? You are not going to do a lot of what? Bridges and culverts. But going forward, you realize that when you want, in the middle of the project, there is going to be a huge what? Bridge that you are going to construct. As a result of that, remember, it is not part of what the contract, but you need to construct that particular what? Bridge before you be able to finish up the road. So it becomes what? A risk on what? On the person, which is the private sector. So it becomes what? Risks that are associated with what? The construction. Then again, maybe the people that you have what? You have contract, your employee, along the line, maybe one person got injured, okay, as a result of constructing the road. So here, you need to pause and take care of the person that has got injured. So it becomes a risk to you, the what? The private sector. And that is what we are saying, that the risks that are associated with what? With the construction, okay, the risks that are associated with the construction. An example could also be that maybe you are constructing the hospital. Okay, the hospital that you are constructing, you have put up one side of what? The building. But later on, when you came back tomorrow, you realize that part of the building has collapsed. So once part of the building has collapsed, it becomes a risk to you. Okay, it becomes a risk to you. So the problem that has associated with what? With that one, you need to build it on before you be able to continue with the project. So it becomes what? The risks that are associated with what? With the construction. Then the availability risks, we are talking about things that you make sure that, so for instance, if maybe for instance you want to undertake maybe boutique, okay, you want to go into boutique. The boutique, what are the things that you need to do to make sure that people will hear of your business? One is what? Is advertising the project. The boutique, is that not it? After that, you have to what? Make sure that you cut down your prices in order to beat the market price. Is that not it? These are some of the risks. These are risks that are associated with what? With the project. So here, the water, the ECG people, they want what? Make sure that people get what? The water. But as a result of that, when they are doing that particular process, they have to make sure that they educate the people on the use of what? Water. They have to educate the people on the use of paying what? Their revenue to them. And they have to what? Make sure that they purify the water to meet the taste of the people so that we'll get the demand. So the problem that you are going in order to get the people to come or to make the project or the product available for the people is what we term as what? The availability risks. Madam, are you okay? Are you okay? Hello, madam.
Yes, please. Thank you very much.
Okay. So these are what the risks. Then again, national policy or guiding principle of PPP. Please, this is one aspect I'm also eyeing. The risks and what? The national policy or guiding principle of what? PPP. Okay. Here they can also tax you to what? To state and explain. Or they can tax you by what? By stating this one for you to explain. What are the guiding principles? One, the value for money. The value for money. Two, risk allocation. Three, ability to pay. Four, local content and technological transfer. Then five, safeguarding public interest and consumer rights. Then six, environmental and climate and social safeguarding. Here, when you talk about principles, guiding principle or national policy, they are what? They are the things that will make sure that the project are well executed in order to avoid bringing problems to the community. Okay. Or they are the things that will make sure that it will bring smooth run of what? Of the contract. Okay. So here, the first one is what? Value for money. What is value for money? Value for money, we look at it when we're doing the procurement, public procurement. Is that not it? So here, make sure that the goods and services that you are going to procure, you have to what? Institute what? The value for money principle in order to make sure that you procure what? Goods at what? At its lowest what? Prices without what? Inflating what? The prices. And that is what? The value for money. Make sure that all the things that you are going to purchase, they are of what? Value for money, or you obtain what? Value for money. The risk allocation. It means that there is going to be risk sharing between what? The private sector and the government. So here, government will share risks with the private sector. When we are looking at the risks, we are looking at some of the risks that private sector will bear and some of the risks that what? The government will also bear. Okay, so risk allocation, we are looking at the risk, sharing risk between what? The private sector and the what? And the public sector. Then ability to pay. This is where government will make sure that the private sector will reduce the price in order to let his people what? Patronize the thing or enjoy the services. Remember, we all know that when private sector is doing something, quality is very involved, but they have what? High prices. But government will make sure that they bring what? Policy to make sure that when they are pricing what? The product, they won't overprice it, but their people will be able to what? To meet the price of what? That particular quality, or will be able to pay the services. So, like for instance, the water, like UCG, government is making sure that his people are able to pay for what? For the services of what? Electricity or water. Then local content and technological transfer. This is where there should be a guiding principle that when you are going to embark on what? On the project, you need to train my people. Okay, you need to make sure that you impart some of your knowledge to my people. That is the local content and what? Technological transfer. By what? Employing the indigent and training them in the field of where you are going to. Then safeguarding public interest and consumer rights. Make sure that the consumers are always right by safeguarding what? The public interest. Then lastly, environmental, climate, and social what? Safeguarding. This is where you are going to make sure that your project or your contract that you are undertaking should meet up with what? The Environmental Protection Agency what? Law or act, without what? Polluting the environment. or without giving any harm to the environment that will affect my people. Are we okay? So here, let's example could be like maybe you are constructing a road. In terms of what the contract, there should be a part of what the contract that states that the private sector or the contractor should be able to water the place or the road, so that there shouldn't be what dust, okay, that will affect my people. And these are what the guiding principle.
Hello.
Hello.
Hello, please. So this is what the guiding principle of national policy. So please make sure you revise on it and you define. Let's look at some of the examples that they gave. Okay, they said required. I told you don't bother yourself going to explain it. Okay, required. Explain the following types of what PPP arrangement, and that is where it gives open. Then again, this is where I was citing the example. Okay, this is where I was citing the example. Here, I said the government is currently experiencing serious fiscal challenges as a result of what COVID-19 recovery program. Despite the fiscal challenges, the government wishes to complete the following projects and programs during the year. 1, massive road project that will cost in excess of what? 10 billion. Okay, massive project, road project that will cost in excess. So when you read the point 1, massive project, what type comes in mind?
Build,
what type come in mind?
BOT.
So here,
BTO.
The first thing that's supposed to come into mind is that, is there existing projects or non-existing projects? That is how you are going to answer the question, please. When you have a question like this on the type, please read to know whether there is what an existing project or not existing project. Okay, so the first one, is there existing project or not existing project? Hello.
Non-existing project.
So that means
There
that they are yet to what? To embark on what? The massive road project. Okay. So here, what are the types? So the first thing is what? The thing that we have in mind, that which of the type that will benefit government most? Then you start with that one. Are we okay? Okay. So here we are looking at what? The BOT, BTO. Okay. Then remember, with this particular what question, you cannot use BOO. Are we clear? You cannot use BOO. I hope that one is clear. BOO is not in existence in the first point. What is BOO? It is build, own, and operate. Good. So here, the private sector cannot own what? The road for good. No. So here, you are going to look between what? The BOT and the BTO. Then drastic improvement in electricity power generation and distribution throughout the country, which requires an injection of what? Not less than 6 billion into the operation of the electricity company of Ghana and Volta River Authority. Government does not want to lose its ownership of what? The energy sector. Have you seen the condition here? Government does not want to lose its ownership of what? The energy sector. So what type? Is there existing in project or there's no existing in project?
There is.
There is, because of the electricity power generation, and already there is what? Electricity. So which type suits this one?
Concession.
Remember, government does not want to lose its ownership of what the energy sector.
Management contracts.
Management contract before you think of concession. Are we okay? Then efficient management of what? University of Ghana Medical Center to increase revenue generation through quality service delivery to the entire Starboard region. Is there existing infrastructure?
Yes.
Why are we saying existing infrastructure?
Because the University of Ghana Medical Center is already there.
Thank you. So please, this is how you are going to put it up to explain. Are we okay? Are we okay? So please, this is where we draw curtains on what? The PPP. Any question?
Sir.
Any question, please?
Yes, please. Please, the management contract. Can you kindly explain?
The management contract. This is where there is an existing infrastructure. But this existing infrastructure, it is well operating. Okay, it is function. Okay, so here, government would then invite the public sector to bring their management to come and man the operate. Then they share profit together within a stipulated time. Okay, after which government would then decide to renew the contract or terminate the contract. Boss, are you okay? Are you okay?
Yes, please. And what about? Yes, please. And what about the University of Ghana Medical Center?
Please, management contract.
Okay. Okay. Thank you.
Thank you.
Sir, please, what's the difference between the management and the management contracts?
Your network.
Hello?
Boss, your network.
Hello?
Yes, boss. Boss, your network.
I think you have network problem. Let's continue.
Hello, sir. Hello, I'm asking that what is the
I'm listening.
Or you type it for him to answer you.
Mr. Nicholas, under the financial liability model of service concession, the grantor who is here is referred to as the government must pay an unconditional cash or financial asset to the operator for the construction of the service concession asset. The operator is required to pay a concessionary fee. How can we reconcile this with the financial liability model? Please, with the IPSAS 32, okay, let me briefly explain the financial model and the grant to right model. With the financial liability model, okay, here, government don't have the money, and government has taxed the private sector, which is the operator. The grantor is the government. So the grantor has taxed the operator to build the hospital, because government don't have the money. Here, after building the hospital, then government will assume the position of the contract, the infrastructure. Then government will pay the lump sum as as a liability in installment to the operator. Okay, the model, the financial liability model is saying that when government, which is the grantor tax the operator to build an infrastructure, after completion of the infrastructure, the amount involved, the entire amount, let's say that the private sector, which is the operator, spend 50 billion. The 50 billion then become a liability to government. Here, government will not be able to pay the 50,000 So it has become what? A liability that will be borne on what? On the grantor. So here the grantor, upon agreement, would then have to what? To go into terms with what? With the operator that, okay, at the end of each year, I'll pay you maybe 5 million. Okay, so here, after everything, you transfer it to government, all right, which is the grantor, but you assume the total amount as a liability and pay it in installment upon what? The contractual binding agreement. But we have the right what? The grant to right to what? To the operator. That one, it is telling you that when the operator has been tasked to build the infrastructure, after completion of the infrastructure, government would now sit down with what? With the operator and tell the operator that I don't have the money. So I will then give you what? The infrastructure to operate it. The money you get out of what? The operation is what you are going to use to what? To settle what? The debt. Okay, so the first financial model is where, which is the financial model, is saying that the amount, the total amount, would then be given to government to pay it in installment upon the agreement. But the second model, which is grant to right model, is saying that after completion, government would then decide to give what? The infrastructure to the private sector, which is the operator, to operate it. Then the money you get out of it will use the money to what? To settle it what? Bit by bit, or to defray the debt bit by bit. Are you okay, Mr. Richard?
Yeah, the reason, yeah, hello.
Yes.
The reason why I asked that, because when you were explaining the concession, you said the operator must pay a concessionary fee.
Yes.
So that's the reason why I asked. So what happens if the government too must pay the operator? But I think it's fine now.
You are fine now?
Yes, please.
Okay, thank you. Please, let's move on to what? To PEFA. PEFA framework. PEFA is also 10 marks. Very, very easy part of what? The 10. Okay, very, very easy part of what? Of the syllabus. What is PEFA? PEFA is Public Expenditure and Financial Accountability, which is PEFA. It is a framework that is being developed for assessing the status of public financial management at central and local government level of what? Government. So here, the PEFA is used to what? To assess what? The performance of what? Of an entity over a given period of time or a specific point in time. So the PEFA framework is used to, what? To assess what? The performance or the status of what? The PFM what? System for both the central and what? The regional, the government, local government what? Level. Okay, so we are saying that the PEFA methodology can be reapplied in successive assessment to track changes over time. Okay, so that is what? The overview of what? PEFA. There have been questions that ask students the scope of PEFA. Please, when tomorrow you don't see scope of PEFA and you see outcome of PEFA, please, they are the same thing. When you go to the exam hall and you don't see scope of PEFA and you see outcome of PEFA, please, they are the same thing. I remember when I was writing ICAG, okay, when I started writing, there has been question that access outcome of PEFA. State and explain 3 outcome of PEFA. My brothers and sisters, that day in the exam hall, I couldn't answer the question. Do you know the reason? Because the person who was teaching me by then could not tell me that the scope is the same as the outcome. And the note he gave me, there was no outcome. So I was writing rubbish for the examiner. And when the result came, I failed. Failing exam, failing ICAG, it's not easy. Failing ICAG question, exam paper, it's not easy. That day, I was looking for point to write to fail, I wasn't getting. Because my tutor could not give me details about this. But today, I am giving you details about this. So that when you go, you don't have any excuses. Okay, when they don't give scope, they will give outcome. So outcome is the same as scope. We have 3 scope or 3 outcome. What are they? The aggregate fiscal discipline, the strategic allocation of resources, and efficient service delivery. These are the scope of what PEFA, or the outcome of PEFA. What is aggregate fiscal discipline? Aggregate fiscal discipline, we are looking at, okay, we are looking at being physically disciplined in terms of what? Spending. Okay, physically disciplined. You need to be disciplined. For instance, you have your salary. Okay, you are going to pay 2,000 at the end of the month. These 2,000, you need to set clearly your budget. This budget, okay, I want to save maybe 5,000. I want to save 5,000. Okay, so this 5,000, I want to spend maybe 1,000 on this. You have to make sure that you go according to your budget. You should ensure effective control over what your budget, to be able to ensure effective and fiscal discipline in your spending. That is the simple meaning of what the aggregate fiscal discipline. Then strategic allocation of resources. With a strategic allocation of resources, we are saying that with the limited resources that government is having, you need to strategically prioritize what areas of going to spend on them. Okay, so for instance, maybe government have 10 billion. This 10 billion, it is limited, it is scarce. So once it is scarce, government is going to draw plan. Okay, so drawing plan is going to say that, okay, I'm going to spend on community A, community B, and leave community C and spend on community what? D, because community C is having what? The resources that I want to spend on them. So assuming that government wants what? To build hospital, you look at what? The regions or the district or the community that lacks what? The hospital. And when government is doing that, he's setting what? Strategic what? Allocation in the resources to which he's having. And we are saying that the objective of the public financial management system is to ensure resources are strategically allocated to priority areas of what? Government policy and what? And plans. And this one, it involved the planning and the executing what? The budget in line with government priorities aimed at what? Achieving the policy. So here, government has what? Promised the people that I want to build hospital. So the hospital, he needs to look at his resources and look at the areas to which he's going to build a hospital, like the Agenda 111. Their plan, okay, places that they lack hospital, we are going to build it, okay, so that we are not going to overburden them with what? Hospital there. Then efficient service delivery. This is where there should be what? Excellent in what? In the service delivery. Why do we have public sector? We have public sector.
Hello, sir. Hello. Sorry.
Efficient service delivery. Okay, with this one, why do we have existence of the public sector? We have the existence of public sector because they want to provide, they are there to provide what? Public services to the citizen. So here, the services to which government is going to provide to the citizen should be what? Efficiently what? Delivered. Okay, and this is why we are saying that the objective of the financial management is to collect revenues and direct these revenues to the provision of public services in an efficient and effective manner. And it requires using the budget revenues to achieve the best level of what? Public services within the available resources. So here, you need to what? Set a priority in the resources. Then make sure that the hospital that you are going to provide, there is going to be what? Efficient delivery in that particular hospital to the communities which you have what? Budgeted for. And these are the outcome or the scope of what? PEFA. Please pay attention to that. Okay. We have report of PEFA. Okay, PEFA report. PEFA report, we are saying that it provides evidence-based assessment of PFM performance based on what? The indicator analysis and other crucial information in a concise and standardized manner. My interest lies in what? The PEFA assessment that takes several matters into account. What are the matters that takes into account when we are preparing the PEFA report? This is where my interest is. One, the controls used by government to ensure that resources are obtained and used as what? Intended purpose. What are the internal controls that government is going to use to make sure that resources are well collected and are used as intended purposes? So now we need to give controls to what? To the GRA need to set controls to collect what? The revenue by making sure that they set what? Offices at each places. Okay, they make sure that they go digital. These are some of what? The controls. So here we are making sure that government will set out controls to ensure that revenue are obtained or collected and as used as intended purposes. Then transparency and accountability in terms of access to information, very, very key. Reporting and audit and dialogue on PFM policy. And that is why we have what? Right to information bill. Transparency and accountability in terms of what? Access to information. There should be what? Access to information any day to show what? Transparency and accountability in the dealing of in what? Within the public sector. Then the institution, laws and regulations. What are the laws? What are the standards? What are the regulations that bind government in terms of what? PFM process. Then the last one is the results arising from what? The operation of the PFM in key areas such as what? Budget outturn, effective of control, and timeliness of what? Reporting and audit. When you go to the exam hall and you don't see benefit, you see uses. If you don't see uses, you see importance. These are the three things that ICAG used to confuse you. Please, it is either benefit, uses, or importance of PEFA report. Very, very important. The following are the benefits or uses or importance that a country would derive from what? The PEFA reports that have been what? Written. One, government use what? The PEFA report in order to obtain what? A snapshot of their own PFM performance. When you talk about snapshot, the overview, the whole overview of what? Their performance, whether they are doing well or they are not doing well. So they use the PEFA report to check whether they are what? They are doing well or they are not doing well. Then PEFA also offers a common basis for what? Examining PFM performance across national and subnational what? Government. So here, the PEFA report, okay, when you are drawing the PEFA report, they make sure that there is what? Interconnecting what? National. So they compare one national to the other. Okay, so it gives what? Basis for what? Examining what? Our system as against what? Other national and subnational. Then the PEFA scores and reports allow both government and other users of what? The information to gain a quick overview of what? The strength and weakness of what? The country's PFM system. Then the PEFA assists users to appreciate the implication of what? Overall performance what? For a key what? Goals for fiscal discipline, strategic resource allocation, and what? Efficient service delivery. What are these three things? Colleagues, what are these three things?
Scope.
The scope.
Outcome of PFM.
Thank you. Please, I want you to mention the outcome or the scope of PFM or the PEFA for me. What are they?
Aggregate fiscal discipline, strategic allocation of resources, efficiency service delivery.
I hope you can explain them. I hope you can explain them. Thank you. Then the PFM analysis contributes to a dialogue on the need and notice for PFM reform. And the last one is what? PEFA program provides support, monitoring and analysis of what? PFM, PEFA assessment. We have what? Pillars of what? The PEFA. These pillars are one of what? The popular, afterward the scope, the next questions that are very popular is what? The pillars. The pillars. We have what? 7 pillars of PEFA. These 7 pillars, normally, this is how I put it. Okay, this is how I abbreviate it. This is how I abbreviate it. If you think it will help you, take it. What is BU? BU is what? Budget reliability. What is TRA? Transparency in what? Asset and what? Liability. Public asset and liability. Hey, transparency in what? Public finances. Then the M is management of what? Asset and liability. Then PO is public policy based. Then the
strategic and budgeting.
Thank you. Then the PR is predictability and what?
Predictability and control of budget.
Thank you. Then the E is what? External scrutiny.
External scrutiny.
And the A is what?
Accountability and reporting.
So sometimes I mix this one to put it like this. I bring the A first before the E. So accounting and reporting, which is the A. Then the E is what? External scrutiny and audit. Is that not it? The B is what? BU is what?
Budget reliability.
The TRA is what?
Transparency.
Of public finances.
The M is what?
Maintenance of
assets and
liabilities.
Budget reliability.
PO is what?
Policy.
Transparency of public funds.
No, PO.
Policy based
fiscal strategy.
Management of assets and liability.
Hey, who is late? Then the PR is what?
Predictability of
based.
Predictability and control.
Predictability and control in budgets.
Then the A is what?
Accounting and monitoring.
Yes,
accounting
and reporting.
Then the E is what?
External scrutiny and audit.
So please, I don't know if this thing will help you. If you think you cannot memorize all the things, then please use this shortcut, okay? And see whether it will help you or not. I hope I've helped you somewhere. So, after getting to know them, what is their explanation? Budget reliability, we are looking at what? How budget is being realistic. Okay, is our budget that we prepare, is it realistic? And are we implementing the budget as intended purposes? That is the budget reliability. So this is measured by what? Comparing the actual revenues and expenditure. Okay, so with what? The original approved budget. Are we clear? So here, when we are going to look at budget reliability, we are looking at the realistic of what the budget. Is budget what realistic at all? Is it what implemented as intended purposes? Whatever we have it inside, do we implement it? When we are doing this, then we are saying that we are comparing what the actual to what? To the expenditure. Okay, to arrive on variance. When we are doing that, then we are doing what? Budget reliability. Then transparency of what? Public finances. This is where we are making sure that we achieve through what? A comprehensive what? Budget classification. Transparency of all government revenue and expenditure. When government is collecting revenue, he should make sure that he should tell us that he has collected maybe 50,000 revenue by showing it in what? In the budget. Then he should make sure that he tells us how he's going to expense that 50 billion. When he is doing so, then it means that he is doing what? Transparency of what? Public finances. Then management of asset and liability. This is where we are making sure that assets that have been what? Bought with our investment are being what? Recorded and managed effectively and appropriately in order to what? Identify them in what? In a future what? Outcome. And making sure that our debt level are being what? Managed in order not to what? To exceed what? Our debt what? Requirement. Okay, so when we are doing all this thing, then it means that at the end of it all, we monitor. So when we are doing it, that means that we are doing management of assets and liability. So in your organization, when you go to buy assets, the moment you buy the asset, you have the asset register. Is that not it? You record the asset register and manage the asset register to make sure that you eliminate the risks of what? It being what? Stolen. When you are doing that, then we are saying that the PEFA is saying that you are doing management of assets and liabilities. Then policy-based fiscal strategy and budget. This fiscal strategy and the budget are prepared with due regard to what? Government fiscal what? Policies. And remember, when government wants to draw a budget, he needs to first of all follow on what? His policies. And it's what? His plan. And make sure that he adjusts them according to what? The macroeconomic indicators as at the time that they are drawing the budget. When we are doing that, then we are doing policy-based fiscal strategy and what? Budget. Then predictability and control in budget execution is saying that within what? Our PFM system, there should be what? Effective what? Standard. There should be what? A processes. There should be what? A clear rules. There should be what? Internal controls when we are going to buy something. So assuming that we want to go and buy what? A laptop. First of all, there should be what? A plan on it. After planning, they need to budget it. After budgeting, what then they have to do? Okay. Procurement have to come in. Is that not it? After procurement coming in, then the account section will also come in. What would our account section do before they buy it? They need to raise what? Raise what? PV. Is that not it? After raising the PV, they need to make sure that the PV is what? Authorized by what? The principal spending what? Officer. After authorizing it, they need to make sure that when they are going to buy the thing, they raise PO. So the PO, which is the purchase order, then the supplier will bring the item. The store and what? The procurement unit will then what? Inspect the item. Then usher them in upon what? The specification. Okay. After that, before, when somebody wants it or the user agency wants it, they will bring requisition, requesting it. And the requisition needs to be approved before they issue it out. Okay. And make sure that when you bring the assets and the store is ushering the item in the store, they need to what? Receive it what? With the SRA. Then record them in the appropriate ledger. When you are doing that, then it means that we are doing predictability and control in budget execution. Are we sure? Are we okay? Are we okay? Then the next one is what? Accounting and reporting. With accounting and reporting, it is very simple. Making sure that all the things that you have purchased, all the revenue that you have what? Received, you have records on it. Accurate what? Records. You need to maintain an accurate record. Okay? That you make sure that you disseminate what? That particular what? Record at the time that decisions are being what? Taken. Okay? And this is where you are going to what? Report on that particular record by preparing what? Your financial statement. Then the last one is what? External scrutiny and an audit. This is where auditors will come in. Internal auditors will come and audit. Then external auditors will also come and audit and review it and make sure that Auditor General report goes towards Parliament, then read to Parliament, then they transfer or they engage with the PAC, which is the Public Account Committee, in order to look at what the recommendation to implement it. Are we clear? So when we are doing that, then it means that we are doing external scrutiny and audit. The policy that we have been studying, They are the things that we have been seeing in what? In our day-to-day what activities, but we don't know. But this is how I teach. I try to link it to the physical or the practical aspect for you to understand it most. And this is what the pillars of what PEFA. Very, very simple. Please mention the pillars for me.
Pillars. We have budget
reliability.
We have transparency of
and
public
policy finances.
We have management
of assets and
liabilities. We have
policy-based
fiscal
strategy and budget.
And then we have the
ability and control in
budget execution.
Accounting and
reporting.
And then we have scrutiny and audit.
Yes.
Thank you so much. When it comes, you try to record it like this, and explain it accordingly, how I have explained it for you. Okay. Then limitation of PEFA. Limitation, they are the same as what? The problems of PEFA. What are the problems or limitation of PEFA? PEFA focuses on what? The operational performance of key elements of the PFM system, rather than on all the various input and capabilities that may enable the PFM system to reach a certain level of performance. When they are doing what? The PEFA report, they capitalize on what? Certain key elements without looking at what? All the elements. Okay, so for instance, what are the key elements of what? What are the elements on the face of what? The statement, the financials. What are the elements? What are the elements?
So the question again.
Access.
I asked that. What are the elements on the face of the financials?
And we have revenue.
That is the real. Is that not it? Real.
Yeah.
So here, that is the revenue.
Expenditure, asset and
liability. So here, the PEFA is saying that they depend on what? Key elements when they are arriving on what? The PEFA report. And as a result of that, they are not able to what? To reach to a certain level of what? Performance. And it becomes what? A problem. Then PEFA also does not involve fiscal and expenditure policy analysis that would determine whether the fiscal policy is sustainable or not. So when it happens, so it being what? A short form, then PEFA does not provide recommendation for reforms and make assumption about the potential impact of ongoing reform on PFM performance. PEFA, it doesn't give any reform whatsoever, okay, on an ongoing reform within what? The public financial management of performance. And the lastly, PEFA assessment element of what? Of the defense, public order, and safety function may not be what? Included if information is not available. So for instance, if today they are drawing what? PEFA report, or they are coming out with PEFA report, and there is no information on what? Defense, then it means that it will be silent, because our first point is saying that they what? They focus on what? Key elements. So when defense information is absent, then it means that they will not include it. When public order information is absent, they will not include it. When safety function is not in there, they will not include it. So these are the limitations of what? PEFA. I hope that is clear. Then we have the PEFA structure. Okay, PEFA report structure. With the PEFA report structure, I won't treat it with you, but let's go to the scoring of what? The dimension indicators. How do we score the dimension and the indicators? We are saying that the PEFA framework assesses and report on what? The strength and weakness of what? The public financial management using what? 31 performance indicators that are further what? Disintegrated into what? 94 dimensions. I am not interested in that. What I'm interested in what? How to, for you to understand how we score what? The dimensional what? Indicators. Each dimension is scored separately on 4-point ordinal scale, which is A, B, or D. A, B, C, or D, according to the prescribed what? Criteria established for what? For each dimension. The overall score of what? An indicator is based on what? The score for the individual dimension. And these things, we are saying that the score for what? The multiple dimensions are combined into overall score for indicator using two methods. And what are the methods? The weakest length and the average what method? The weakest length and the average method. And each indicator specifies the method to be used. So when PEFA is doing their report, they specify which method they are going to use. So here, let me straight away go to my board. I want to use the practical session to explain this. When I finish, I won't go to the theory aspect again. We have what? The weakest length and the average what method. Is that not it? The weakest length can be termed as what? The M1, and the average what method can be what? M2. Is that not it? Here, PEFA is saying that when we are scoring, we use what? Fourth cardinal what scale, which is what? A, B, C, and D. Please pay attention here. When we are using what? The weakest length, we are saying that the weakest length measured multi-dimensional indicators where a bad performance of one indicator is likely to undermine a good performance of what? Other what indicator. This is the definition of what? The weakest length. Where a bad performance of one indicator what? Likely to undermine the good result of what? Other what indicators. This simply means that, assuming that you have written what? Your WASI, and you want to apply for nursing training, and your WASI, they are looking at what? The EMS, right? And you are unable to pass what? Your maths, which is F. You got F here. You got what? A here. And you got what? Maybe B here. Because of what? These mathematics that you had F, you will not be able to get the chance to what? To enroll in what? In the nursing training. Is that not it? Is that not it?
Yes, please.
As a result of that, because of this bad performance of the maths, it is having what?
Effect on English.
Effect on what? The English and what? And the science.
Right.
And that is the meaning of what? The weakest length. So here, assuming that the examiner is saying that you should use weakest length to come out with what? With a result. It means that your result here is F. Your entire result is F, which is what? Mass. Is that not it? But when we are bringing it to what? To the PEFA scoring, they say we should limit ourselves to the A, B, C, and D. So here, assuming that the mathematics is D, okay, it means that when we are using the weakest length, your bad performance is what?
D.
Is D. So this D has affected what? The E and the X. Are we okay? So your overall performance is D, which is what? Mathematics. This is how you are going to tell the examiner, full stop. And that is what? The weakest length. Please, is that clear?
Sir.
Yes.
In the case of this example, it's like the PEFA methodology, the scoring dimension also indicate that if the
plus.
The plus. It says that this two, the A and B are higher. And then there is, okay, this one is lower. No, you go for D.
Are you okay?
Yeah, man.
Where there is plus, where you are supposed to add plus, assuming that there is B and there is B here. Assuming that there is B and B here, because of a good performance of high class of this one, which is also a good performance of high class of what this B, it will have effect on what? The lowest performance. And this is where you add what? Plus to what? To the D.
Yeah. So it's like, it's just similar to the first one. A and then B are of higher score. And then we have D. So we will get D plus.
Exactly.
It still stands.
Yes.
Okay. Because of this high and this high. Okay.
So,
Yes,
sir, now the question is, in explaining or giving an account to the result, this D plus, would you term it as average or poor or like
No,
performance?
I won't even let you go far. Please, D plus is D plus. So you know the examiner, your result is D plus, which is what? Mass, full stop. There's no average in what? In the weakest link. You are looking at the lowest. So tell the examiner the lowest mark and you are good to go. Are we okay?
Yes, sir.
Are you okay? Are you okay?
Once we are measuring the performance of a particular dimension, I wanted to know if in defining or explaining the D, would
Please
you say...
don't add average. Don't add average. Tell the examiner point blank. If it is D, it's D. Are we okay? If it is D, it's D, which is mathematics, full stop.
Okay.
Your result, the overall result is D. Okay, is D plus. Okay, which has the indicator mathematics of what? Mathematics, full stop. Are you okay? Please don't add any comment to it that it is average or not. Okay, then we move on to the M2, which is the average method. Please, the average method is where the calculation comes in. Pay attention. At the normal circumstances, if WAEC wants to grade you, they will tell you that A is what? Is 1, B is 2, C is 3, and D is 4. But when you are using PEFA, when you are scoring PEFA, please, it is different thing altogether. PEFA is saying that instead of it to be 1, 2, 3, 4, we turn it upside down. Okay, we turn it upside down. So it means that to get a higher mark, it's supposed to be what? 4. To get the next higher mark, it is what? 3. To get the next one is 2. And to get the lowest mark is 1. So here, PEFA scoring is different from what WAEC people are using. Are we clear? Are we clear?
Yes.
Okay, so if you are clear, to find average, the word here is what? Average. So average means that, for instance, if this is our result, okay? For instance, if this is our result, to find an average of what? This result, okay? To find an average of this result, how are we going to do it?
10 over 4.
10
over 4.
Over 4. Why 10 over 4?
Because you are going to find out, you want the average.
Okay. So now, our brother is saying that 10 over 4. Yes, 10 over 4 because you pick each of what? The scoring, which you have turned it upside down. So A, you have what? 4. Then B, you have what? 3 plus 3. Then C, you have plus what? 2. And D, you have plus 1. Then you divide it by number of what? Indicators. How many indicators? There are 1, 2, 3, 4. Divided by 4. And that is why our brother had a 10 over 4. Are we clear? So assuming that this is what? Our result. Okay. Let me bring in a result here.
2.5.
Assuming that this is our result.
BCB. It's fine.
Assuming that this is our result, BCD. Okay. And they said that we should use what? M2, which is what? Average what? Method. Is that not it? Average method. How are we going to arrive on our answer? This is how we are going to arrive on what? On our answer. Here, you look at what? The appropriate scoring to what? To these what? Indicators. And what is the appropriate scoring according to PEFA? PEFA is saying that when you get A, it is 4. When you get B, it is 3. When you get C, it is 2. And when you get what? D, it is 1. So this is our result. Our result here is saying that we have what B. So B is equal to what? When we are scoring B, it will be how much?
3.
3.
3. And when we are scoring C, it will be how much?
2.
2. And when we are scoring D, it will be what?
1.
1.
Are we clear?
Yes.
So if so, then you add this one and divide it by number of what indicators?
That's 3.
Are we
So
okay?
6 over
So
3.
here,
Yes, sir.
it is going to be
6
what?
over
3
6
plus what? 2 plus what?
plus
1.
1.
All divided
Over
by how many indicators? 1,
3.
2, 3. So it means that we are getting what? This
6
plus this
over
plus this
3.
gives us
We are
what?
getting
6 over 3. Which our answer is what?
2.
2.
3, 6. So our answer is 2. So this 2 becomes an average or score. So you link these 2 to which of what? The score. So this
C.
is where you are going to link it to what? To the scoring. If you get 2, it means that you are getting what? C. Is that not
C.
it? So
Yeah.
if it
Yes,
is
sir.
C, then you are going to tell the examiner that your overall score is what? Is C. Are we okay?
Yeah.
So,
Yes.
mind you, assuming that we are using what? We are using the weakest link, our what? Our result will have been what? Will be D. Is that not it?
D plus. Yeah.
But because we are using what? Please, it is D. But because we are
Yeah.
using what? The average method, it will be what? C. It has
C.
moved from the D to what? To C.
C.
And that is where we are saying that the average method, it measures what? Multi-dimensional indicators where a bad performance of one indicator does not undermine the good performance of what? Other indicators. So here we had what? Bad performance indicator, which is D, but it does not undermine the good performance of these ones. So as a result of that, we have arrived on what? On the 2 after the computation, which is what? C. So C happens to be what? Our performance. Are we clear to go?
Yes, please.
If you are clear to go, please pay attention to what? To the difference between what? The weakest link and what? The average method. Okay. There has been a question that asked the student to differentiate between what? The weakest link and the average method, and give the clear distinction. Remember, the weakest link, okay, the weakest link, it applies to what? It applies to what? Is it dependent or independent? Is it dependent or independent?
They are connected to
Dependent.
It is connected, so it is what? Dependent. Is that not it? So
Yes.
you are going to tell the examiner that the weakest link, the clear distinction is saying that the weakest link, one dimension is what? Is dependent on the other. That is the reason why a bad performance of one indicator is likely to affect the rest of what? The performance. But under the average method, it is what? Independent. So they don't work what? Interconnectively. But with the weakest link, they work what? Interconnectively. And that is why they have what? Influence on what? The rest. Please, I hope it is clear. If it is clear, let's move on. So this is the definition. I'm not going back. I've already explained to you. Okay? I've already explained to you with the definition. Are we okay? So sources of what? Information. With the sources of information, we get what? Where do we get information for the PEFA assessment? We get it from what? The legislation that we have, the laws, the act, the PFM Act, the PFMR, the Public Procurement Act, Audit Service Act, and those stuff. The government policy papers, policies that government has what? Has. The papers, they got the PFM what? Information from it, the PEFA information from it. Budget document, budget that they present to Parliament for approval, the report and statistics, recent surveys could be the Ghana Statistical Service, they are conducting surveys, then analytical work on national, regional, and international levels. These are the sources of what? Information for the PEFA. Mention the sources of information for PEFA. Mention them.
Legislature.
Government
Government
documents,
policy paper. Budget documents.
Recent survey.
Mention some. Mawaninya de bubobi. Now,
Reports and
Government
statistics.
white paper.
Hey.
Government white paper. Yeah, it's true.
It's true. Why are you laughing?
It's correct. Then conclusion of analysis of what? PEFA. We are saying that PEFA does not provide a ranking or global result, but it draws conclusion based on a general assessment on matters of 1, internal control effective, government reform action, and strength and weakness of what? PFM. We are going to concentrate on the internal control and leave the rest. Okay, so please pay attention to this one. What are the internal control? The internal control, we are using what? The COSO framework. The COSO what? Framework, where it clearly stated what? The internal control. And what are the COSO framework? The COSO framework, we have what? The control environment, the risk assessment, control activities, information and communication, and last one, monitoring. So normally, this is how I put it. This is how I put it. The internal control. Internal controls. This is how I put it. Okay, internal controls. This is how I put it. There are 5. Is that not it? So who can tell me the first C? Who can tell me the first C?
Control environment.
Control environment.
Second C. The second C-O-N.
Control activity.
Control activities.
Then the R. R is what?
Risk
assessment.
Risk assessment. Yeah.
I is what?
Information and communication.
Then M is what?
Monitoring and evaluation.
Who cannot remember this? Remember, I said when you go to the exam hall and internal controls come, please write this C-C-O-N, then capital R, capital I, then capital M. Are we okay?
Yes.
Are we okay?
Yes.
I hope I've helped you.
You've done so much. You've done so much.
Thank you. So please, this is the simple form to you for you to remember the internal controls. Let's take them one after the other. Okay, they are not far from your understanding. They are not far from what? From your understanding. Why am I saying so? Control environment. They are what? They are the standard, the processes involved when you are going to buy things. Are we okay? The standard, the processes and structures. What are the structures? That is what? The organizational what? Hierarchy. When you are going to buy something, it goes through certain processes before it's been approved. And that is what? The control environment.
That is the tone at the top.
Thank you. Please, are we okay? It is not different from what we have been practicing in what in our environment or our workplace. Okay, and that is why we are saying that the personal and professional integrity and ethical value of what management and staff, including a supportive attitude towards internal control, constantly throughout what the organization. So it is what the commitment to competence. The tone at the top, that is management philosophy and operating style, organizational structure or hierarchy, the human policy, human resource policy and and practices. When you go to the risk assessment, which is the R, okay, the risk assessment, we are saying that this is where maybe when you have gone to buy an asset, you need to come out with risk assessment on the asset. Identify the risk of it being stolen. After you identify the risk, okay, this asset is likely somebody can take it. You make sure you assess the risk. After assessing the risk, to make sure to know whether it is likely to be stolen, the laptop will be stolen or not. Then you evaluate it. After evaluating the risk, make sure you assess. Okay, you assess, that is risk, appetite, assess. Then last one, respond to it by making sure that where they assess it, the laptop is, you move it from that place to other, or after work, you go and put it in in the drawer, or you make sure you go and put all laptop in in the principal spending officer's wardrobe. Are we okay? So when you are doing all these things, then we are saying that you are managing what? The risks. And by so doing, you are doing what? Risk assessment. Then the next one is what? The control activities. What is the control activities? The control activities are the policies surrounding what? The organization. What is the policy in terms of maybe staff that will be going on maybe maternity leave? What is the policy? Okay, what is the procedure that the person will take through before his leave will be approved? And what are the standards? When you are doing all these things, then we are saying that you are helping to manage what? Manage scale what risks in order to ensure the achievement of what? The result. So here, this is where the leave that the person have applied, they need to authorize and approve the leave. And make sure that it's what? Segregation of duty. There should be somebody who is going to authorize, and there is somebody who is going to approve it. So for instance, you are going to buy the laptop. There should be an accountant who is what? Going to authorize what? The payment. Then again, he's being sent to the principal spending officer to approve what? The PV. Are we clear? Then we make sure that there is somebody who will do the recording and review, then control over access to resources. Then verification. You need to verify whether the asset that you are going to buy is of standard, and verify whether the asset has come or not. Then you reconcile. Okay, this is where when you are preparing your cash book and you have your bank statement, you need to prepare what? Bank reconciliation in order to reconcile what? Your balances before you prepare what? Your financial statement. The review of operating performance, the review of operation and processing and activities. Then last one, there should be a supervision. Okay, there should be a supervision. Somebody should supervise. When you are doing so, then we are doing what? Control activity.
So, sorry to cut you, please. So, the key areas, do they follow each other? Like, must it be in the same format?
You say must it be in the same order?
The arrangement you have.
The arrangement, yes, because when you are going to buy something, these are the things that you need to follow. Is that not it? There should be what? Authorization of what? The PV and approval. And on the face of the PV, we have what? The signature of the principal spending officer and what? The signature of what? The accountant authorizing. Then there should be segregation. The segregation means that the work of the principal spending officer is different and the work of the accountant is different. What is the work of what? The accountant is to authorize. What is the work of what? The principal spending officer is to approve. So it goes in accordance. Are we okay? When you are doing all these things, then you are doing what? Control activities. Then information and communication. We have to make sure that information are obtained on the laptop that we are going to purchase. Okay, go for what? For internal and external. Okay, so here we need to get information on the laptop. There is IT department. The IT department should be able to give us what? Information on the laptop. So that we will also obtain information from outside to match out with what the internal is giving us in order to support what? Internal control components. Then there should be clear communication. Clear communicating means that there should be what? Disseminating of what information. Here, when you are able to write a PV, accountant write a PV, he should be able to send the information clear to what? To the principal spending officer, explaining to him. When the information, when they buy the laptop, there should be what? Clear information that would disseminate to what? To the store, so that store will receive it. So when we are doing that, then we are saying that we are doing information and communication. Then last one, which is monitoring. Monitoring means that everything that we are going to do, we have to make sure that we what? We do monitoring on what? On the activities. Okay, and monitoring of the activities include what? The control that affect the principles within each component are present and functioning around their what? Around their product. So here we are going to what? Do monitoring on what? monitoring of what? PFM under what? The PEFA assessment. That does in the ongoing monitoring, the evaluation and management of responses. Make sure that when they put you on something, that is what the supervisory role. You monitor something. After monitoring, you need to what? Give a clear response on whatever you are doing for management to take decision on it. When you are doing so, then we are saying that we are doing what? Monitoring. This is what? What is the name? The internal controls according to the COSO. According to the COSO. Please make sure you have them in your mind. I've given you the form, the simple form. That is the CONRIM. 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 CCONRIM. Which will give you what?
Or CCRIM.
Or CCRIM. Thank you. Or CCRIM. Control environment control activities. Risk assessment, information and communication, and what? Monitoring. Is that okay?
I have a question.
Okay.
With this CCRM, if under exam condition, you are not able to arrange them like this, is it acceptable?
It's acceptable.
Okay.
It's acceptable. Mr. Bill, my boss, please, your hand is up. Mr. Bill, please, your hand is up.
Yes,
Hello,
my
what?
hand is up. I was saying that there's another way you can use to remember. You can use crime.
Okay.
Crime, okay? Where the E stands for the environmental control. So you can use crime. So make a crime, C-R-I-M-E.
Okay, my boss adding another one, crime.
Yeah, C-R-I-M.
I-M.
No, I-M-E. I-M-E.
I-M-E.
So crime,
Okay.
like normal crime. C-R-I-M-E. Crime.
Okay, C-R-I-M-E.
Crime.
C-R-I-M-E. Thank
Crime.
you.
So E now stands for environment, eh?
Yes, E stands for environment. So we have control activities, risk assessment, information systems, monitoring
and
environment. Controls. Yeah.
Please, okay. My boss has added something. Today I'm going to hit my boss. My boss would. Please, are we okay?
Yeah. Can you explain the information and communication again?
Okay, so what it means is this. Are you listening? So for your control systems to be termed as effective, meaning that assuming you decide that, okay, this system we are having, our controls are not effective, that means these 5 factors are not working well. So most of the time, if there's going to be a control risk in the system, it means these factors are weak. So first of all, what activities have you put in place? So it mostly begins from your environment. Your environment is the attitude of management. So the head of department, how do they see the controls? For instance, if somebody is late, do you punish the person or you just let the person be? That means you are not serious, right? So it starts from the seriousness of management or the head of department or the directors or the officers in control, right? If those officers have strict punishments and rewards, right? People will not bypass controls. Do you all agree with me? Do you all agree with me? So the whole environment of controls tells us how serious the head of departments or the people who are in charge take the controls. For instance, if somebody is absent, can the person easily come to work and come and work? If you're absent, by all means, there should be some penalties, right? Do you get what I'm trying to say? That is the control environment. Also, we come to activities, as he was talking about, like authorizations, approvals. These things are very important. So we are saying that every control system must have activities or procedures, okay? And for control activities, sometimes you can use palm soap, okay? You can use palm soap to remember them. These ones are normal audit terms that you use, but you can still use them in public sector accounting to help you, right? So they are segregation of duties. You should break activities up. There are organizational controls. There are access controls like passwords. You get it? So government computer, not everybody should be able to access it that easily. Okay, there should be appropriate organization. There should be even asset controls. Can somebody just take a government laptop and just send it home like that? You get it? There must be restrictions. You get it? That's what we call the control activities. Now, there must be ongoing risk assessment. Every time there should be somebody there checking the nature of the risk happening, right? Will systems easily collapse? There should be somebody there checking. Will somebody steal from us? There should be somebody there checking, right? If these things are in place, then it means that you cannot easily mess up the system, right? And also communication must be effective, because without proper communication, what will happen? The systems can collapse, because subordinates should be able to give their knowledge to superiors, and superiors must also share so that there will be effective implementation. Now, all these factors that you see, the center is monitoring. All these factors should be monitored by somebody who is designated, right? So monitoring is like, all of them are a subset of monitoring. Are we okay? So that is crime. I hope that was well understood.
Yes.
I hope that was well understood.
Yes, I just get the crime for me one after the other. The CRI.
So it could be control activities or control procedures. We have risk assessment. We have information systems. We have monitoring, and we have the environment of controls or control environment. So
control environment.
Yeah.
Are we good to go?
Okay, so Solomon, you can carry on there. That was the little I wanted to say.
Sure. Thank you so much, boss. Thank you. So please, we are done with PEFA. But in the absence of PEFA, the syllabus is saying that when they don't ask you PEFA question, they want value for money. So what is the value for money? That is what we're going to look at very briefly. Okay. So the value for money coverage, we are going to look at the basis for what? For measurement, which is the economy, effectiveness, efficiency, equity, and we are going to look at the value for money itself, a mechanism used to what? Achieve the value for money, which is very, very important. The result for performance measurement in the public sector, also very, very important. So let's move. So value for money. Value for money. We are saying that the overall aim of what the PEFA framework is to ensure value money through effect and order management system. So with the value for money, it concerns with what? With the economy. And what is the economy? The economy means that we are doing what? Cost minimization. When we are going to procure something, we have made sure that we are procuring the thing in what? In a less price manner to ensure value for money. We shouldn't what? Overprice what? The procurement. Then efficiency. Efficiency is talking about what? Output what? Maximization. With the output maximization, we are not looking at the cost, but we are looking at what? Output. How we are going to maximize output, which will have what? Economic growth. Then effectiveness. The effectiveness is talking about what? Full attainment of what? The intended result. Okay, are we achieving the aim of what we have planned to do? If no, then that means that there is no what? Effectiveness. So assume that maybe government do a budget that they want to build hospital. Okay, so the hospital, maybe they were unable to build a hospital. They do something different. As a result of that, there is no what? Effectiveness, because they were unable to attain full attainment of what? The intended what? Result of what? Their budget that they have promised the people. Then the last one is what? Equity. Equity means that we are spending what? Fairly. That is where the strategic allocation of what? Resources come in. So we are doing this in order to meet out with what? The future what? Future what? Generation. So government needs what? To fairly what? Distribute what? The scarce resources in order to meet what? The needs of what? The community. Okay, strategically. So these are what? The value for money that are concerned with what? All these three, which is what? The E. Clear. So here, we are looking at the value for money analysis. With the value for money analysis, we are saying that it is what? The process of collecting, analyzing data on what? On the cost and result of what? A particular program, and interpreting that particular what? Value for money indicators that are generated by what? Comparing them with what? With those of what? Other what? Program. So with the value for money analysis, that's not necessary about what? Saving money, but it is what? Reducing unit cost, which is what? It is about maximizing actual what? Output and what? Input and impact. Are we clear? So with the value for money, we have what a key objective of conducting the value for money analysis, which help what managers to improve what program performance. And with this, it can give program managers useful metrics to quantify the impact of what their challenges that they observe on what on the ground. Okay, so the value for money analysis not necessarily about saving money, as I indicated earlier, but it is about what reducing unit cost. It is about maximizing what the actual output and impact. What is the impact on what on the hospital that government is going to put, as far as what the cost is concerned. So now government wants what look at what 10 billion to build a hospital. Now we are looking at would this particular hospital be built as intended purposes? If so, then it means that we are looking at the impact of what the hospital on the community. Would the hospital bring impact on what on the community? If yes, then it means that there is value for it. Are we clear? So, for example, you are going to buy what maybe a trouser, okay, and this trouser, you bought the trouser and wore the trouser for only one. After wearing the trouser, maybe it fade off after washing. When you are looking at it, you have not gotten any benefit of it because it has not given you any impact. Are you okay? But when you buy the trouser and you were able to wear the trouser, wear it for a number of times, okay, to work, okay, and it brings impact on you, then it means that the trouser, there is what value for money. Okay, so we are saying that what the value for money of program could sometimes be improved by reducing what cost for certain input, greater and more sustainable actual output can also be derived by spending more on certain what input. So this is what the value for money what analysis. Okay, the value for money analysis. With the value for money analysis, we have what drivers for what for the value for money analysis. What are the drivers? That are what we have looked at earlier: the economy, the efficiency, effectiveness, and what and equity. Then when you want to buy something, that is what the value process. You have what the contest. What is the contest? The contest is what you intend to buy, what you have proposed to buy, or the problems that you think to solve. That is what the contest. What are the inputs that you will need in order to address the problem in the house? Assuming that maybe you have house dispute in the house. Okay, you have dispute in the house concerning an issue. You are the Ebusia Penny. So now let me link it to our understanding. Here, the dispute concerning the land happens to be the contest. What are the inputs that you use to resolve the equation? And we are saying that with the input, we are making sure that the input are in line with what the driver of what economy, which is what cost minimization. You have to make sure that the strategy that are going to mount to settle this in terms of cost-wise, it should be minimized. Okay, after giving the input, that is what getting people to come and sit around the table to judge or to bring a solution surrounding the land the issue. Then you go on with the process. The process is what we are going to use to turn the input. And the process, we are saying that it should arrive on efficiency. And what is the efficiency? What did I talk about efficiency? What did I talk about efficiency? I said what? Maximization of output. Okay, so you should make sure that you should be able to maximize output at the process stage. After getting that one, you should make sure that the input that you are processing, you should get outcome. Okay, and what is the outcome? There should be resolution. There should be peace there. Okay, and we are saying that the outcome should reflect the driver of effectiveness. And what is effectiveness? Attaining full result as intended purposes. So here, your result is that at the end of settling the dispute, you should make sure that you get peace at the end. So that will be our result. Okay, so that there won't be any dispute going forward. Then the last one is, after getting the peace, what impact will it have on the people? Are we okay? What impact? And the impact, the driver for the impact is equity. So here, this is where you are going to share the land equally. Okay, so that the future generation will get the land sum. Okay, so that you get impact, they will get what impact. Okay, so they won't what going through what the difficulties, hunger, and those stuff. So please, this is what the value for money what analysis what framework. Are we okay? Then when you move from there, we have a basis for what measurement. Yeah. What is the basis for measurement? It is very, very important. The basis for measurement is very important. It's been a long time it's come. One is what effectiveness. One is what effectiveness. So we are saying that this refers to what to the success or otherwise by the performer in achieving what objective, and therefore it is concerned with only what output. And that is why we are saying that what effectiveness is what? What did I talk about effectiveness? Who can tell me what I said? Output maximization. So here we are looking at only what the output. Are we okay? What is what? The outcome. Okay, we have limitation to what? Of that what? Effectiveness. But I won't go into it. Let's go to what? To the efficiency. The efficiency, you are looking at what? Measured efficiency measures what the extent to which an objective has been achieved in relation to what to the resource. Okay, so here when we are looking at the earlier one, I said efficiency is what? What did I say about efficiency? What did I say about efficiency?
Output maximization.
Please, yeah, this thing that I've given here, when you are explaining, when you get it summarized like this, it will really help you. Okay, it will what really help you. So what? Don't forget it at all. Are we okay? Don't even forget it at all. Are we okay?
Hello.
Yes, yes.
Please, could you go back to the ones that are attached to the efficiency and the effectiveness? I was in a car. I just go home. Thank you. On to write, please.
Okay.
Just take a snapshot.
Please take a snapshot and let's move in. We are far behind time. Okay, so the next one is what? Economy. The economy, we are saying that whereas what? Effectiveness concerns only output, but the economy concerned with what? The input, which we are looking at what? The cost minimization. Are we clear? And we have limitation of what? Of it. Then equity. Equity is concerned with what? Performance in terms of what? Balancing the needs of what? The current generation with that of what? The future what? Generation. As I was giving you the example of what the land dispute, I was saying that when they finally bring what the peaceful resolution, they will make sure that they share the land so that the future generation will get some. And that is what it's explaining here. So it focuses on what? The sustainability, environment, and what? And the social justice. Therefore, a government must be what? Be seen to take the future generation into what? Into consideration when embarking on what? On their project or programs. Mechanism used to achieve the value for money. This also, it is very, very important. With the mechanism, we have only 2E present here. With the rest, we take them from public procurement. Okay, with the rest, we take them from public procurement. Okay, what is the first E, which is economy? The next one is what? Efficiency. The next one is what? Transparency and accountability. That is ethical standard. Then the next one is what? Accountability, fairness, and efficiency in public procurement. The last one is what? Competition. Okay, competition means that when you want to what? Ensure value for money, you should make sure that your procurement that you are going to embark on should be open to the general public to what? To compete, so that you select the lowest out of it to ensure value for money. So competition means that you are what? Generalizing it to the public. Okay, for competition. When there is what? Competition, you make sure that there is what? There is value for money. Please, we have reason for what? Performance measurement. Also another key. Okay, reason for what? For measurement. What are the reasons for measurement of our public sector? And this is what I have for the public, the PEFA. Reasons for performance measurement. It is an application question. it is an application question. Okay, so we are saying that it can be formed the basis for what? For charging accountability. So this one, it can be on the basis, it can be what? As a basis of what? Discharging accountability, in the sense that when you go to buy something at a higher price, okay, it will not meet the value for money what? Change. So as a result of that, you have to go and account for your steward. Then it provides what? Essential information to improve management within what? The public sector. Then as a basis of forward promotion, okay, when they want to promote you, okay, when they want to promote, okay, there is what? Competition. And as a result of the competition, they will select out of the limited numbers out of what? The massive, okay, to get their promotion. Then as a basis of what? Increasing financial resources. Then to assess the impact of government programs on society. And last one, assess what the extent to which value for money has been achieved. Please, when the question asks you to explain reason for performance measurement, please don't go and explain it long. Don't go and bring any. Please just be precise and simple. Okay, just take this one and give a brief explanation, and you are good to go. Are we okay? Please, this is where we end the PEFA and value for money. There have been questions that ask students. As my boss said, please don't go and read the preamble. The preamble will waste your time. Go straight to the requirement. The requirement is saying that explain 3 control objectives in what? In the public financial management relevant to what? To the PEFA framework of what? Assessment. Then discuss 5 components of what? Internal control. What are the components?
Control
what
activity.
Are the components?
Environment.
My boss said crime. Thank you. Thank you. Then explain 2 limitations of what? The PEFA, which is the program of PEFA framework for assessing what? Public financial what? Management. Then we have another question. Explain the objective of what? The PEFA what? Framework. 2 marks. What is the objective of PEFA framework?
To assess the PFM
To assess
system.
the status of the PFM.
Okay, it helps to know the strength and weakness of the PFM Act.
Okay. Then discuss 4 uses or application of what? The PEFA report. What are the uses of a PEFA report?
It's used to obtain snapshots of the country's PFM performance. It
checks the strength and weakness of the PFM.
Okay.
It
so have
offers
you
common
seen that
basis
this
for
question
examining
they use
PFM
uses?
performance.
Have you seen that this question they use uses? Assuming that they did not use uses and they said important. What are you going to say?
It's the same thing.
The same thing. Then explain 4 sources of information for PEFA assessment. What are the 4 sources of information?
Government legislation, government white paper, recent survey,
budget,
report and statistics.
Thank you. Then let's look at another question. Describe the scope and goals of PEFA framework. What are the scope and goals?
Strategic
so the scopes
allocation
are
of
the budget
resources.
reliability, the strategic allocation of resources, and then the efficiency.
Have you seen that we said PEFA, it carries 10 marks. So when you are able to explain these 3, have you seen that you are getting the 10 marks? So is PEFA difficult? Then explain the 5 components of the integrated framework of internal control recommended by PEFA. And that was the crime. Is that not
was
it?
a crime, yeah.
Okay. Then explain the purpose for PEFA framework. What is the purpose for PEFA framework?
Okay, to check
PEFA framework.
The strength and weakness of the PFM Act.
Is that?
It helps to check the strength and weakness of the PFM system.
Okay. What again?
Transparency and accountability. The purpose is also to offer common basis.
Explain the key pillars of an open, orderly public financial management system under PEFA framework. 7 marks. What are they?
Budget reliability. Transparency in public finance. Policy-based fiscal strategy and budget.
Access and liability.
Predictability and control of budget execution. Accounting and reporting. External scrutiny and
So please, I wanted to contribute.
Okay. Thank you. This
I
is
wanted
November
to-
Pasco 2023.
I wanted to contribute.
This is the current past question on PEFA. They said required, explain with practical illustration the term budget reliability. Explain with practical illustration the term budget reliability. Who can give us what the question is talking about? Explain with practical illustration the term budget reliability. Where did you see the budget reliability?
It wants you to explain the pillar, one of the pillars of PEFA, that's the budget reliability.
Thank you. And what did we say about budget reliability?
That is how realistic government budget is
Realistic.
by comparing the actual and with the original budget.
So this is where we are looking at the realistic of what the budget and how it is being implemented as intended purposes. So our brother is saying that comparing the actual to what to the budget to know whether we are performing or not, or whether we have we have variance or not. Okay, so here with practical illustration, you can give us a practical illustration.
For example, if 10,000 cedis has been budgeted for compensation for employees, but at the end of the period, 40,000 was expended. This means that the budget is not reliable. We have spent more than we budgeted for.
Thank you. I like this. Please, I hope you have gotten how he explained the thing.
Can you please come again?
Yes.
My boss, go on.
I said, for example, if 10,000 cedis has been budgeted for compensation for employee, but at the end of the period, the actual compensation for employees was 40,000. This implies that we have overspent more than the budgeted. Hence, the budget is not reliable.
It's not reliable. So this is a practical case.
Yes. You not being physical discipline.
You are not physically disciplined.
No, but wouldn't there be, for example, you budgeted this, but in the course of the year, there has been salary increment and other stuff. Of course, it will not match with what you have already budgeted for. Does that mean that with the current policy, the government has increased the salary? Are you saying that it's not reliable?
So that is why we have supplementary budget. Okay, that is why we have supplementary budget. So here, the budget is what is an end of itself. It's rigid. So if you spend more than that means that it is not realistic. You have to overspend the budget.
To even add up to what he's saying, you can see that they are talking about 300% increment. That is, I mean, from 10,000 to 40,000. I mean, it's unrealistic.
Contribution.
Okay.
Contribution, please.
Yes, please go on. Contribution, go on.
With respect to the question that you asked, if there has been a salary increment, that is not the end of the financial year of the government. So there's going to be what we call a supplementary budget, so that the budget will be revised. But at the end of the financial period, what is the actual against the budgeted? So the aim is to be at the end of. I'm saying that the increment, the financial year of the government has not ended. So if there is any increment in salaries, that's the reason why we have to revise the budget. So that at the end of the financial year, we compare the actual cost of the compensation to the employees against the revised budget.
Okay. So please, this is where we end what? The PEFA. This is where we end the PEFA. I've explained, I've been the explanations here. Okay. This is where we end the PEFA. I don't know if my boss would make room for you to have the slides. So please, we are done with PEFA. Let's move on to what? To the public procurement.
Good.
Okay. Let's move on to public procurement. Let's move on to public procurement. Are we there? Are we there? Are we ready?
Yes,
Public
please.
procurement is the process by which government purchases goods, works, and services. So when government is going to buy what? Goods. Okay, the process to which they go through is what we talk with them as what? The public procurement. And it involves what? Planning, inviting what? Offers, evaluating what? Offers, awarding the contract, and managing what? The contract. Remember, when you award the contract, okay, that is not the end of what? The procurement. You need to manage what? The contract. So that is why we are saying that it involves what? The planning and end at what? The managing of what? The contract. We have the laws that what? Mandate the public procurement. And it is what the Public Procurement Act 2003 Act 63 and the Act amended 2016-914. The Public Procurement Board, in the Act, normally they say that the board, it is the same thing. So the board may hold, manage, or dispose of any movable or immovable what? Property in connection with what? The discharge of its function, and may enter into contract and transactions that are reasonably what? Related to its function. So this is what? The main what? Function of what? Of the board. So let's move on to the membership of the board. Very, very important. There have been questions that accident the membership of what? The procurement board. Okay, what is the membership of the procurement board? The Act says that we have what? 9-member board. We have what? 9-member board, who shall be appointed by what? By the president in consultation with the Council of State. The president cannot decide and appoint. He needs to consult the Council of State. Okay, so the board comprises of what? The chairperson. And the chairperson, the law is saying that he should have what? Knowledge and should be competent in what? In the public procurement. Then we have 4 persons that have been appointed from what? From the public sector. And these 4 persons, it should have what? A representative from what? The AG, which is the Attorney General Department. Somebody with what? A law backing. Then we should have what? 3 from the Ministry of Finance, of which at least 1 person should be what? A female. The law is saying that they should appoint what? 4 from the public sector, and the 4 person from the public sector should what? Should comprise of what? Representation from what? The Attorney General, and 3 from what? The Ministry of Finance. But these 3, at least 1 person should be a female. They can all be what? Be female. Okay, but we are saying that at least 1 person should be a female, and all of them should have what? Experience in public procurement. Then 3 persons from the private sector, and these 3 persons, at least 1 person should also be what? A female, and the chief executive of the board. So when you add it, the chairperson 1, the 4 from what? From the public sector, making it 5. Is that not it? Then 3 from the private sector, making what? 8. Is that not it? Then the chief executive officer of the board, making what? 9. So this is what? The membership of what? The procurement board. What is their function? Let me break it down for you to understand the function. Assuming that you have been appointed as what? As the headmaster of one of the tertiary institutions, one of the which is a secondary school. Okay. When you have been appointed, what are the first things that's supposed to come in mind? What are the first things that's supposed to come into your mind?
Formulation of policy.
You should come out with your policy that you are going to use to govern the place. Is that not it? And that is the first function of what? The board. Once the board has been inaugurated or been appointed, the first thing they are going to do is what? They are going to make proposal for formulation of what? Policy. They should come out with what? Proposal, in order to formulate policies that will surround what? The activities of what? The public procurement. After making sure they make what? The proposal, they make sure that the proposal are being what? Implemented, and ensure what? Human resource for development for the public procurement. So after making the proposal, they make sure that they enforce that particular proposal. So when the headmaster makes his proposal policy, he should make sure that he ensures implementation of what? Those policies. If he wants to make sure that he has what? Effective what? Implementation, he should set out what? Rules, instructions, that will help him implement that particular proposal or policy. So that is the third function of the Public Procurement Board. They should develop rules concerning the public procurement, develop instructions concerning the public procurement, and other regulating documentation on the procurement. Then they should monitor and supervise to make sure that there is full compliance with the statutory requirement. Remember, the Procurement Act itself is a statutory requirement. So they should make sure that they should follow strictly with the Procurement Act. Okay. Then the next thing that's supposed to come into your mind again is that they should establish and implement an information system relating to the public procurement. There should be a system. Okay, there should be a system that has been established, okay, for implementation of the public procurement. Then the next one that's supposed to come into your mind is that they should advise government. They should advise government on issue that is relating to public procurement. So these people, anything that relates to procurement, if government wants to do procurement, it is the board that will advise government on what to do and what not to do. Then maintain a database of suppliers, contractors that they are going to work with them throughout the entire period. So they should know their suppliers, they should know their contractors, they should know their consultants, so that going forward, when they want to award contract or they open invitation, be able to those who are applying. They'll also maintain a register for people that have been disbanded, okay, or maintain a list of suppliers that have been debarred from participating. We have people that clearly they don't go according to the rules and regulations. So as a result of they have debarred them from participating. So they should have a list of those people, so that when they open the tender, the people, when they apply, they can fish them out and take them out. So this is the functions of the board. Okay, please mention the functions of the board. Mention them. Mention them.
Formulation of policies.
Mm-hmm. They advise government on issues relating to public procurement.
Mm-hmm.
Monitor and supervise public procurement.
Keeping records of contractors, suppliers.
Developing of relations.
Okay. Thank you. Then we move on to the principle of public procurement. What are the principles surrounding procurement? And the principles, we have accountability, we have competitive supply, we have consistency, we have fair dealing, integrity, and others. When we talk about accountability, the principle is saying that the party relating to the procurement should be answerable. They should be questioned on their dealing or on their decision concerning public procurement. Okay, so that we will eliminate the collusion and corruption. Then competitive supply. There should be an openness in the procurement process by inviting people to apply. So they should give opportunity to people to apply, so that they should ensure competitive within them to come out with best decision. Then consistency. We are saying that the process, the procedures should be followed. Consistency. The Procurement Act procedures and process should be followed consistency when they are buying goods, works, and services. Then there should be fair dealing. What is fair dealing? There shouldn't be discrimination among suppliers. Okay, they shouldn't say that this person is an MPP, so I'm not going to give him the contract, or this person is an NDC, they are not going to give him procurement, or this person is a Muslim, or this person is is a Christian or traditional ruler. It should be there should be fair dealing. Okay, they should treat them equally to avoid discrimination as against suppliers. The integrity. This is one key thing. Okay, there should be no corruption or collusion with the suppliers. Okay, they make sure that they shouldn't go and take money from one supplier, or in the name of giving him contract. So their integrity as a person is key. So they should maintain the integrity to avoid what corruption and collusion. Then next one is what transparency. There should be transparency in the processes. Okay, from inviting what tenders, opening of what tenders, evaluation of tenders, and selection of what suppliers. Okay, then legality. Legality means that they should comply with what? With appropriate what? Laws. Then economy. They should make sure that it aims at reducing cost of what the processes. Then efficiency. The process must ensure efficiency in what? Procurement. Please, this is the principle of what? Public procurement. Another area which is what? Very, very popular as far as public procurement is concerned. So
Hello,
take
sir.
note.
With the principles of the procurement, can you use the 4 E's? That is the economy, efficiency, effectiveness, and then the equity as part of it.
The only E's that are present as far as the principle of public procurement is concerned is only the economy and efficiency. Are we okay?
Yeah, but in the manual has all the 4: economy, efficiency, effectiveness, and equity. In the manual.
But when the question comes and you are explaining, please look at these things the first 5 years. Okay, look at the first 5 years. When you look at ICAG questions that they have asked students, when they are giving you the solution, most of the times they are silent on those ones. I don't know if you are taking notice of them. When they are giving you what? The solution on question like this, those two are silent. Okay, so these are the things that normally they use to prepare your marking scheme. I will beg you, please go by this one and you'll be fine. Okay, even though it is good, but looking at the marking scheme that they bring, the past question, I don't know if somebody has gone through the past question. You realize that these are the things that they use to explain for you to understand. Are we okay? I'm not saying that they are not part, they are part, but I'm looking at the weight. Are we okay? I'm looking at the weight. Are we okay?
Okay.
When to apply public procurement? When are we going to use the Public Procurement Act? At what time do we use the Public Procurement Act? 1, where procurement of goods, works, and services is financed in a whole or in a part from public funds, except where the minister would decide otherwise. Here, when you are going to procure what? Goods, works, and services, and we are using what? We are financing what? Our procurement, okay, with public funds, whether part or all what? All the procurement are going to take from the public fund, and it means that we are going to use what? Public Procurement Act. Then where there is what? Functions that pertain to what? To procurement of goods, works, and services, including the description of what? Requirement, invitation of what? Sources, preparation, selection, and what? Award of contract. So where there is what? A function that states that, okay, we are going to procure goods, works, and services, then it says that we should what? Use or apply the Public Procurement Act. Then when we are going to do disposal of what? Public stores, vehicle, and equipment. So when disposal comes to your mind, the first thing that you are going to look at is the Public Procurement Act, where you establish what? The Board of Survey. Okay. Then the procurement with what? Funds or loans procured by government. So when government what? Procure loans or go for loans, okay, and grants or IGF or foreign aids, except that the Act has exempted it under section what? 96. When it involves these four things, then it means that we are going to what? Apply Public Procurement Act. These are the only 4 things that the Act has asked you to know. Okay, what time are we going to apply the Public Procurement Act? At which point are we going to apply the Public Procurement Act? These are how the person will be what? Will be generating. Okay, the Act is subjected to only 2 key exemptions. Okay, the exemption means that the act, we are not going to apply the act. Okay, there have been exemptions or there have been situations whereby we don't want to use the act when we are going to do what public procurement. And the act specify only two things. And what are the two things? When the Minister of Finance directs the use of different public procurement procedures in respect of what national interest. So here, when they are going to procure what goods, works, and services, and the Minister of Finance looking at what the strategic nature of what the procurement, they have realized that the procurement procedures will not be what relevant. Then it means that the Minister of Finance will then decide that they shouldn't use the public procurement procedures. But they are doing that in respect what to the national interest. Then the next one is what the procurement is financed by loans or aids, and the loan agreement prescribe what different practices. Here, when we are going for loan, so assuming that we are going for loan from IMF, IMF is giving what their condition. Their condition is saying that you shouldn't use the loan for this, you shouldn't use the loan for that. Okay, so when it happens, so it is coming with their own what condition. So this condition is what they are going to use for the procurement. So these are the two keyword exemptions as far as what the act is concerned. Okay. So then we move on to the circumstance under which a procurement entity could use what commercial practices other than the act. At what point do we use what commercial practices rather than what the act? At what point do an entity goes for what a commercial practices other than what the act? One, where the procurement entity is legally and financially autonomous and operate under the commercial laws. So here, when the entity to which is going to embark on the procurement is financially autonomous, does not depend on government fund, okay, and is legally what operated, then it means that they are going to use what the commercial what practices. Aside that, no. Then two, if it is proved beyond contention that public procurement procedures are not suitable, considering the strategic nature of the public procurement. And this is where it is very, very important here. Here, when you want to use for the commercial practice, you need to explain to convince the people that, okay, looking at what the strategic nature of what the procurement, okay, we are not going to use what the Procurement Act, but we are going to resort to the commercial practices. So you need to give what your explanation details enough to convince them. And that is why we are saying that when it is proved beyond contention. And the last one, when the proposed procurement method will ensure value for money, provide competition and transparency to an extent possible. And these are the things that will ensure what value for money. Please, these are the circumstances under which a procurement entity will adapt what commercial practices when they are procuring, they are going to procure other than what the act. So these three things, please pay attention to the three. The first one is when to apply the Public Procurement Act. Then the two key exemption, then the circumstances under which we are going to use for the commercial practice. Please, with the earlier ones that I've exposed you, you cannot write outside these things. When the question comes, please make sure you bring this one for the examiner. You cannot write outside this because it is the law. But with the problems or risks associated with public procurement in Ghana, please, this is where you can apply your mind. When a question of this nature comes, please, you can apply. What are the risks associated with what the public procurement in Ghanaian public sector? And another question can ask you, in the absence of what the Public Procurement Act, what are the problems that emanate when they are doing public procurement? Or before the introduction of what the Public Procurement Act, what are some of the problems? What are some of the problems? What are some of the problems that they face? Or they can ask you, what are some of what the problems that the public procurement has come to address? Okay, what are some of the problems that the Public Procurement Act has come to address? Please, it is the same thing you are going to tell the examiner. And I told you it is an application. What is the first one? the possibility to overvalue public procurement contracts and suppliers. In the absence of what the Public Procurement Act, this is where people maneuver their ways to overvalue the prices. They can bring any price in it anyhow. Okay, which will
I think this can also
prices.
be as disadvantages.
Is that?
Could it also be disadvantages to public procurement?
You see, as far as public procurement is concerned, I've never seen a book that tells you or give disadvantages of public procurement. I don't know if you have seen something like that. So far, the books I've read, I've not seen, and even the act has not given any disadvantages. So these are the things that you are going to tend to give the disadvantages. Are we okay?
Yeah.
These are the things, okay? And that is why I said it is an application question. When the question comes, understand. So for instance, the question framed like this: in the absence of what the Public Procurement Act, what are the risks or problems that emanate from what public procurement? Or before the introduction of what the Public Procurement Act, what are the problems that it's associated with what public procurement? Or it can ask you, okay, it can ask you indirectly, okay, indirectly, what are some of what the problems that Public Procurement has come to Public Procurement Act has come to address? So the problem that Public Procurement has come to address, you are going to state this one positively. Okay, positively. Okay, but when they ask risks or something, they are going to negate it. So one, the possibility to overvalue Public Procurement Act. This is where they put the price anyhow, or they cut the prices towards the contract anyhow. The fake procurement of goods, works, and services. They will do the procurement, but it will not exist. On paper-wise, it is there, but it will not arrive. Then subjected to conflict of interest, awarding contract to close associates, okay, to their wife, their family members. So subjected to what? To conflict of interest. Then discrimination of what? Suppliers, or discrimination among suppliers. So here, this person will tell you, okay, this person is not party affiliate, so I'm not going to give him the contract. Or this person is what? Is a Christian. I'm not going to give the contract to him. This person is a Muslim. So discrimination among what? For suppliers. Then lastly, high possibility of what? Procuring inferior goods and services. So as a result of that, they are going to what? Procure goods. So I'll use what? The free SHS, for instance. For the free SHS, remember, they procure certain what? Calculators. If you ask yourself, the calculators that they have procured, when you punch 5, it will come 9. When you punch 2, it will come 3. You get it? Some are not even booting at all. They are in the stores. It is high possibility of what? Procuring what? Inferior what? Goods. So they have procured what? Inferior goods. Example can also be what? The teacher's laptop. The teacher's laptop. The teacher's laptop. Some are facing a lot of challenges in respect to that. So procuring of what? Inferior goods. Goods that are not worth of what? Standard. So, this is what? The problems or risks associated with what? Public procurement. And as I said, I gave you different questions. Different questions. These are how they are going to ask you the question when it comes. Procurement structures. Procurement structures. And please pay attention here. Procurement structures, I've explained them here, but I'm not going according to what I've explained there. Let me explain for you to understand. Procurement structures, this is where they can ask number of questions, 10,000 questions. When the procurement structures, we have what? Procurement entity, procurement unit, entity tender committee, tender evaluation panel, tender review board. What is procurement entity? Remember, in the Act, they are saying that not all entities can do procurement. Not all entities can do procurement. So here, the entities that have the right or the legal right to do public procurement of goods, works, and services are called the public procurement entity. Example, when you take what? MMDA, an assembly, for instance, maybe one municipal assembly. It is what? Procurement entity. Regional Coordinating Council is what? A procurement entity. But when you descend to come to procurement unit, what is procurement unit? Procurement unit, it is what? The office that has been established within what? The procurement entity. The procurement unit is what? It is the office that has been what? Established within what? The procurement unit, procurement entity. So example is what? When you enter into RCC, we have procurement office. When you go to the assembly, we have what? Procurement office. The procurement office is termed as what? The procurement unit. Then we have what? The entity tender committee. Mr. Metal, your hand is up. Mr. Metal, your hand is up. Okay, entity tender committee. What is entity tender committee? They are committees that have the right. Okay, they have the right. Or they what? They do what? Procurement of what? Goods, works, and services in what? In the organization. Then we have tender evaluation panel. Tender evaluation panel. What is tender evaluation panel? They are what? Committee or panel. But remember, tender evaluation panel, when you are explaining, you should let the examiner know this key term. They are an ad hoc committee. What is an ad hoc committee? Ad hoc committee means that they are temporary. Okay, so tender evaluation panel is what? An ad hoc committee. Remember, when you are explaining, you should let the examiner know that it is an ad hoc committee that evaluates what? The bid. Okay, they evaluate what? The bid. Okay, or the tenders. Then the tender review board, they are committee that what? That review what? The decision of what? The procurement, the procurement structures. Okay, so please, this is what? The procurement structures that we have. Okay, I've explained
Please,
them.
can you take the tender evaluation panel again?
The tender evaluation panel, I am saying that it is an ad hoc committee. It is an ad hoc committee that evaluates what? Tenders. Okay, that evaluates what? Tenders and give concurrent what? Approval for what? For public procurement. Okay.
Please, ad hoc. I'm not hearing the pronunciation.
Ad hoc, ad hoc. Let me write it. Are you seeing my board?
Yes, please.
ADHOC, ad hoc committee. Ad hoc committee. ADHOC. It is an ad hoc committee. Ad hoc committee means that it is a temporary committee. So once they are going to what? Procure maybe something relating to what? ICT. They constitute what? Committee with what? Technical, those who have technical knowledge in what? In the laptop. ICT. Okay.
So can I ask a question? If in the exam you happen to forget the ad hoc and you say temporal, is it accepted?
It's not accepted. Please use the word ad hoc. Use the word ad hoc. Don't forget. Okay. Don't use the word, the term itself. Okay. Most books says ad hoc. They don't use temporal. I'm just using the temporal to explain the ad hoc. Okay. Madam Rosalind Natuma, your hand is up.
Hello, sir.
Madam.
Please, can you take the entity tender committee? The entity tender committee.
The entity tender committee, they are committee, okay, which have the right to do public procurement of goods, works, and services in what? In a procurement what? Entity. Full stop. Are you okay? The most important thing you should know is their functions. What are the functions?
Hello.
The most important things that you should know is what is their functions. What are the functions of what? The head of procurement entity. And what is the function of what? The entity tender committee. The function of what? The head of procurement entity and entity tender committee are the same, because the head of procurement entity is the chairperson of what? The entity tender committee. Okay. The only difference here is that when you are explaining what the function of head of procurement entity, use what? Singular, which is he or she, he or she. But when you are explaining what the entity tender committee, please, they are plural, they are committee, so use they. Assuming that you are explaining, they say the function of what? The head of entity tender committee. He established procurement unit within what? Entity and was staffed with what? Qualified what? Personnel. And when you are saying it under the entity tender committee, they what? They establish procurement unit with entity, within entity, and staff with what? Qualified what? Personnel. Have you seen the difference? Then the head of procurement entity, he empanel competent and qualified evaluation panels. But the entity tender committee, they empanel qualified and evaluation what? Panels. Are we okay? Then he ensured that procurement procedures are followed. They ensure that procurement procedures are followed. He exercised sound judgment in making procurement decisions. They make what? They exercise what? Sound judgment in making what? Procurement decisions. He approved contract award within what? The threshold. They approve contract within what? Their threshold. Then he ensured that stores, vehicles, and equipment are disposed of. They ensure that stores, vehicles, and equipment are disposed of what? In accordance with what? With the act. When they tell you to explain the function of a head of procurement entity and entity tender committee, please say hallelujah in the exam hall. Okay, the only difference is what? Is the singular and plural. Are we okay? Functions of what? The procurement unit. What is their functions? They prepare what? Notification of award and contract. They arrange public what? Publication of what? Notice of what? Contract. Okay. Then they prepare contract documentation and what? Purchase order. Then they prepare and issue what? Tender rejection. When they reject what? A tender, they have to what? Give them what? A letter, a debriefing letter concerning what? The rejection and others. Then they assist and with the inspection of what? And acceptance of goods, works, and services. Okay. Please, this is the function. Then the function of the entity tender committee. This is what I've just said. They. Have you seen the day there? So please don't forget. Then the tender evaluation panel, what do? They evaluate what? Tenders or bidders. Are we okay? They evaluate what? Bidders. Okay. So have you seen the definition of?
I just want to take a shot.
Have you seen the tender evaluation panel definition? The tender evaluation panel are ad hoc committee made up of what? Experts to evaluate tenders and assist the tender committee in its work. Okay. So remember the key definitions there. Madam, are you okay? Can we move?
Yes, please.
Then we have the tender review board. What do? They review the activities of each stage. They review what? The activities of each stage of what? The procurement cycle. Then they participate in public procurement of goods, works, and services. They give a concurrent approval to enable the tender committee to continue with the process. Then they review what? The decision of the procurement head. Okay. So please, let's move on. Condition for cancellation of what? Procurement. What are the conditions that warrant what? The cancellation of what? Public procurement. Okay, there have been questions that ask students. Okay, there has been what? Tender that has been open for what? For the public. Okay, but along the line, the entity has canceled the proceedings. What are the conditions that warrant the cancellation of what? The public procurement. These are the points that you are going to tell the examiner. Okay. There is what? When there is what? Clear evidence of what? Collusion among tenders. So when they realize that there is what? Collusion and corruption among them, then it gives what? Justification for them to cancel it. Then the entity discovers an imperfection in the wording of what? The request for submission of tenders. So here, when they submit what? Their tenders, and they realize that there is what? Imperfection of wording, that will mislead what? The tenders, then it means that they can cancel it. Then when they what? There is no bid that has been submitted, assuming that they have what? Published what? Procurement, okay, on their website, and they realize that nobody has what? Has submitted a bid within what? The stipulated time. As a result of that, they need to cancel it and do it themselves. Then the entity decided to carry out the procurement by itself as a result of insufficient funding or budget cut. When there has been what? Budget cut on the procurement that they are going to do, then it means that they are going to what? Cancel the procurement and do it by themselves because of insufficient funding. Then the significant change in the required technical details, technical conditions, condition of contract, such as the recommencement of what process is what necessary. The rejection is deemed to be what? To be in the interest of what? National security. Qualification and what? Disqualification. Please, when the question comes, learn one side, learn the qualification, and when the question comes under what? Disqualification, you negate it.
Sorry.
Okay. When the question comes under when, please,
Hello.
I'm coming.
Can you place the slides very well so that we can?
Is that
the slice is half is gone into the other side, so we are not able to see the full slice.
Oh, wow.
Please, you should check from his side because we can see. Some of us can see.
We see everything.
Okay. Is it okay?
It is very clear. Yeah, it's
okay
clear.
now, yeah.
Is it okay?
Yeah, it's okay now.
So I'm saying that with the what is the qualification of what tenders and disqualification, please learn one side and leave the other side. When the question comes and it is qualification, then you use the positive side. But when it is disqualification, then you negate it.
I want further explanation to this. Go back. You said that the entity decided to carry out the procurement by itself. So assuming that my organization wanted to buy a vehicle, but when we want to put it on the tender base, we realize that the quotations they are making is too high. But if we are to go and buy it ourselves, the price will be lower. Are we qualified to do that because we didn't have enough funds?
Once you don't have enough funds and there is budget cuts, okay, the moment there is budget cut and there is no enough fund, then it means that you need to cancel the proceeding.
Okay.
You have stated it clear, said no enough fund. So it means that you need to cancel it and do it yourself. And that is why you are not going to resort on competitive. Remember, the law is saying that you should go competitive. So if the competitive is not what appropriate, considering what the budget, then it means that you should use what different method.
Then it means that we have to apply for approval.
Yes, of course.
Okay.
And that is where you are going to justify. When it is moved beyond contention, do you remember that? That is where you are going to justify. Are you okay?
Yes.
So I said the qualification and disqualification, please learn one-sided. Okay. The first side is what? The qualification. What qualify a tenderer? Okay. What qualify what? A tenderer. Now, a tenderer shall possess what the following to qualify him or win a contract. There has been question that asked students. Party A has been applying for what contract, but he doesn't win the contract. As a consultant, he has fallen on you to advise him why he is not winning the contract. Okay, so that is what the disqualification. You are going to negate this one to give him. So the first qualification is you should have what the financial strength, which is what the financial resources in order to what to execute the contract. Because when they give you the contract, remember, government is saying that you should do it and bring what the certificate for payment. So if you don't have the financial muscle, you can't undertake the contract. So they look at your financial strength. Then equipment and other physical facility. You should make sure that you have the equipment to discharge what the contract. When you don't have it, then forget it. Then professional and technical environment what qualification. You need to have for the professional what qualification. Okay, you need to have the qualification enough for you to qualify you to what win the contract. Assuming that maybe you are applying for what? For an accountant, okay, position in one organization. And now they said that the qualification is what? Is chartered accountant. If you don't have the professional level certificate, will you be able to be qualified? No. So it means that you should have for the professional, technical, and environment what? Qualification. Then personnel to perform what? The procurement, very, very important. You should have the people, the masses, the employees to be able to what? To undertake or embark on what? On the procurement. I didn't mean that you alone cannot do it. Then be solvent. You should be solvent enough. Solvent means that you can be able to what? To settle your obligation within what? A short period of time. So you should be solvent. Then have
what is the difference between be solvent and financial resources?
Is that?
What is the difference between the solvent and then the financial resources?
Can somebody explain the solvent and financial resources for my brother? I've just explained that. Who can explain? Who can give clear distinction?
So solvent here means you shouldn't be bankrupt.
Thank you.
Financial
And the other?
So the financial resources you should be able to sponsor whatever project has been given to you.
So my brother, the clear distinction here is that you can have the financial resources, but you can't be solvent. In the sense that maybe the contract, okay, the contract is saying that maybe 10,000. Okay, the 10,000. And now the 10,000 is there for you to qualify you to win the contract. That is the financial model. But there has been cases that doing the execution of the contract, there has been some obligation that you need to settle. After paying that particular 10,000 in your account fully, you don't have any amount again to solve that particular obligation. So as a result of that, you are not solvent. Is that not it?
Contribution.
Is that?
Contribution.
Yes, go on.
So with the financial resources, whenever procurement contracts may be awarded, there is something that we call the tender security, which the lecturer just mentioned, the tender security. They will mention a specific amount of money. So in case you are not able to perform the contractual obligation, that money can be used to pay the liability that you may have caused the government. So if you are not able to raise that amount of money, though in your financial statement you are not solvent, you are solvent. But if you are not able to raise that amount of money, then it means that you don't have the financial capacity to carry out the project. Though you have your financial statement is okay, but the financial capacity to carry out the transaction, the contract, you don't have it. Is it understood?
Thank you. So one term that I'm expecting is the tender security. As my brother said, tender security, I will explain to you at the latter end. I've been expecting it so long, but so tender security, I'm expecting it. Okay. So the next one is fulfill his statutory requirements, such as paying of taxes and other social contribution. Once you have the personnel, you should be able to pay their social contribution and also pay taxes to government. When they look at all these things and you don't pay taxes, that means that you don't qualify. Then have directors or officers who have not been convicted by law in the country. So here you have the board of directors, you have the officers that have not have any crime related information surrounding them. Then the managerial capacity and experience in the procurement and objective and reputation. Okay, reputation means that assuming that in the past they have given you a contract and you were not able to execute the contract. Today, if they want to judge you, that means that they will judge you based on the previous contract that they have given to you, and you were not able to execute it. So it being reputation issues on you. So please, where they ask you disqualification, please you negate it. So assuming that the contractor don't win a contract, what are the reasons? He don't have the financial resources. He don't have the equipment. He does not have the professional technical environment qualification. He does not have the personnel to perform the contract. These are the points. Are we okay? These are the points. So learn one-sided and negate it. Okay, you'll be fine. Then we have method of procurement. It will be our last thing. Method of procurement. Method of procurement. We have 5 methods of procurement. The law is saying that you should go competitive. Okay, that is the method that the law has prescribed for you. But aside it, we have the restricted tendering, we have single source procurement, 2-stage tendering, and request for quotation. What is the competitive tendering? The competitive tendering has been divided into 2, which is the international competitive tendering and national competitive tendering. So with the international competitive tendering, this is where we have complex procurement or high value of procurement. High value of procurement, sorry, where the works by what, by their nature or scope are what, are unlikely to attract what, adequate what, local competition. So as a result of that, they will fall on what, international competitive. But with the national, this is where the appropriate what, the method is appropriate for what, for lower value procurement. Okay, where the works for by their nature or scope are unlikely to attract foreign competitors. So here, the competitive tendering under the international competitive tendering, this is where we normally have the high project, like example, the interchange, the procurement interchange. The person they awarded the contract for is not a national. He is coming from what? International what? Environment. Are you okay? Then we have the restricted tendering. The restricted tendering. With the restricted tendering, this is where the procurement are restricted to what? To number of what? Suppliers, or number of what? Consultants, or with number of what? Contractors. Okay, so when it happens, so what are the conditions for what? For the restricting? What are the conditions that comes in as a result of what? Restricting what? Tendering. One, when by what? By reason of what? Highly complex and specialized what nature of goods, works and services are available from only limited number of what? Suppliers. So here, the underlying word is what? Only limited, only limited, only limited. When goods and services are available from only limited, only number, maybe few number of what? Suppliers, then it means that we are going to do what? Competitive, restricted tendering. Then if the time and cost required to evaluate large number of tenders is disproportionate to what? Or not appropriate considering what the value of what? The goods, works, and services, then we are saying that we are going to use what? Restricted tendering. Here, in the situation whereby looking at the amount involved in what? In the procurement, assuming that the laptop, we are going to procure a laptop, and the price of the laptop is 5,000. Then looking at the laptop, the law is saying that we should go competitive. With the competitive, look at what? The procedures, okay? The committees they are going to establish, look at what? The allowances they are going to give it to them. So looking at it, when they realize that the prices or the cost involved, okay, in evaluating what? The large number of what? The tenders will not be appropriate, okay, considering what? The price, which is 5,000 of what? The laptop, then it means that they need to restore to what? To the restricted. They will restrict it to what? To number of people without opening it to what? To the general public. Then if the competitive tendering fails to what? To receive any response after publication, this is where maybe when they advertise the procurement, people were unable to what? To tender within what? The time frame. Say maybe today is the deadline. They were not able to what? To get what? Numbers. So that is where they are going to what? As a result of past history, they are going to fall on what? Restricted tendering. Then single source procurement. Single source procurement is where the goods are only available from what? From one a particular supplier or one supplier. So this is where goods, the condition is where goods, works, and services are only available from a particular supplier or contractor, or where there is what? An agency need for what? For the goods, works, and services. And the second one is where there is an urgent need for the goods, works, and services as a result of catastrophe. What is the catastrophe? The catastrophe event could be what? The COVID-19, maybe war, the Ebola time. Are we okay? So when there is what? An event like that, then it means that we are going to resort on what? Single source. And that was what the Ministry of Finance, Ministry of Health used. Remember when they were going to procure the vaccine, they used this one. When he was explaining, he used this one, where there is what? An agency need for goods, works, and services as a result of catastrophe event. So he was using the COVID-19, justifying the reason why the use was the single source procurement. Do you remember that particular conversation?
Yes.
Then last one, procuring from what? A supplier or a contractor where standardization is required. This one is where maybe today we have purchased what? A laptop from Dell. And there is what? The need to procure another laptop. And because of standardization, we want to procure what? Standard for a laptop from a standardized place. That is what? Dell. Then it means that we need to go to what? To Dell and procure the additional one because of standardization. Are we okay? So this is what the condition for the single source procurement. Two-stage procurement. With the two-stage procurement, it has for 2 stages. The first stage is where suppliers or contractors or consultancies will bring their bid. But when they are submitting their tenders, they don't have to add prices. Okay, they don't have to add prices. So the first stage, when they are bringing the tenders, they don't add prices. So after evaluating, they will select number of people or number of contractors. So those that they have selected, they will give them the information. So that is where they will give them the go ahead on the second stage that they should bring prices attached to their tenders. Are you okay? So these are the two stage, how they explain the 2 stage. With a condition for the 2 stage, you are saying that where it is not feasible for a procurement entity to formulate detailed specification for goods, works, and services, and where procurement entity seeks to enter contract for research, experiment, or study, or development, except where the contract includes production of goods in sufficient quantities. Request for quotation. This is what is popularly used in our day-to-day activities under the public sector. This is where the entity will sort on 3 invoices. Okay, they will look at 3 invoices. Okay, from different suppliers. Okay, so this is where they'll take invoice from supplier A, supplier B, supplier C, and compare the 3 and see which one has the lowest price, and they'll put that one on top. So the condition request under the request for quotation is where the goods or works or services are readily available. It is readily available in the market for use. Then it means that we are using request for quotation. Then where there is established market or an existing market for the goods, works, and services to be procured. We have the threshold for the request for quotation. The threshold we have for goods up to 200,000, works up to 200,000, and services up to 50,000. So this is the threshold. When auditors go to the institution and they realize that you have procured goods, works, and services, you have procured goods above 100,000 using the request for quotation, it becomes an observation. So you need to take note of it. We have past question that ask students. Okay, we have past question that ask students. Okay, explain to the chief executive. They have given a preamble. But with this preamble, when you read the requirement, you will not understand. So quickly you go to the preamble and get the understanding. So let me solve this one with you. A newly appointed chief executive officer of a large government teaching hospital just resume work. The hospital is financed by 40% IGF and 60% subvention. At his first meeting with the management committee of the hospital, the CEO briefed the committee about his policy and strategies to improve efficiency in the hospital operation. He identified the use of the public procurement procedures as the major obstacle of the hospital in achieving its objective. He therefore suggested the use of established commercial practices, okay, because a consultant advised him that it is very possible and permissible under the Procurement Act. He added that the head of the entity has responsibility to decide whether to use the public procurement rules or otherwise. You are required to explain to the chief executive officer the condition under which the Public Procurement Act, as amended, permits the use of the established commercial practices. 3 marks. So what are the conditions? So this question is asking you the conditions under which a procurement entity will use a commercial practice. What are the conditions?
The entity must be and legally autonomous.
Thank you.
When it is proven beyond contention that, considering the strategic nature of the procurement, using the procurement act will not be suitable.
Okay.
And when the proposed method will ensure value for money.
Value for money. Thank you. So please, these are the conditions. But the second question is, they said describe the approval procedure involved prior to the use of the established commercial practice of the procurement.
So we have to appoint the authority for approval.
Who are the authority?
The public procurement authority.
Is that?
PPA.
Is the public procurement authority.
Then who is the final approver? The Ministry of Finance. Are we okay?
Yeah.
Remember, the Act has been saying the Ministry of Finance decide otherwise. So he is the final authorization. Then I, in your own opinion, would the hospital meet the condition for using the established commercial practices of what procurement? Explain. 2 marks.
No.
This is where you are going to use what the technical terms in what in the preamble. Here they said the CEO is appointed in government teaching hospital. So the government teaching hospital, will you say that the government teaching hospital is an autonomous or not autonomous?
It's not autonomous.
Why is it not autonomous?
Because of 60% government subvention.
Thank you. Because they derive their revenue from what? From 60% from government subvention, which has what? More than what the IGF generated. So that means that it makes them not to do what? Autonomous. Are we okay? So they do not have the right. Are we okay?
Yeah.
Are we
And then
okay?
also,
Yes.
contribution.
Uh-huh.
And then also, they are not legally autonomous in the sense that it is a Ghana Health Service that regulates the health services in Ghana.
Perfect. 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 Then last one, Ivy, explain function of the head of procurement entity under the Procurement Act. What is his function?
Establish procurement units within the entity.
Establish what? Who established?
The head of procurement entity, the head.
Thank you. So that is why I told you he, singular or she.
Sure.
He. Okay, thank you. So please, this is the solution to that.
He
We have
established a procurement
questions
unit
here
within the
also.
entity.
We have explained 4 challenges that are likely to be reason why they are failing to win contract. Okay, why Banky Construction failed to win contract, and I told you should negate them. Then discuss the likely risks associated with what? Indiscriminate use of a single source.
Okay.
Are we okay? So remind me that when we are closing, I'll give you some questions. Okay, I'll give you some questions.
Can you go over the last question again? The last question.
This one.
Yes.
Discuss the likely risks associated with what? Indiscriminate use of what? Single source procurement.
Let's go back to the slide. Thank you.
Is that? This is where you use application. This is where you use application to answer this question. Indiscriminate use of single source means that overuse of what? Single source. So when we overuse single source, what are the problems that we will have?
So
what are the problems?
Can you say that it can? Lead to overhead at the risk with procurement in the absence of the act.
Do you remember this? Do you remember this point? Do you remember this point? Do you remember this point?
Yeah.
It's part of the framing of the question I was giving you. So you use this point to explain.
That's all.
Are we okay?
Sir, yes. But this, can you bring the family and friends aspect, corruption, chronic?
Exactly. It's an application question. The question is saying that overuse of what? Or indiscriminate use of a single source. When it is single source, it means that a person can give you to what? A close associate.
And that's conflict of interest.
Conflict of interest. Madam, so understanding the question is very key. He can easily discriminate among the suppliers. Okay, he can say that this I don't like this person based on A, B, C, D, or based on past experience, or based on what my encounter with the person. So I will not give it to him. He can overvalue the procurement goods, works, and services. Okay, so all these points come to play when you are answering the last question. Madam, are you okay?
Yes, please. Thank you.
So this is where we end what? The public procurement. Then we move on to what? Interpretation of financial statement. Interpretation of financial statement. Here, I'll be using my board mostly. Okay. The interpretation of financial statement, we are saying that we'll be looking at what the techniques involved. What are the techniques? We'll be looking at what? The ratios. We're looking at what? The common size. We're looking at what? The budget variance, then how to write what the report. Okay, how to write the report. So here it is based on what the RPG2. I'm not going to say much on this, but what I will say is the benefit of what the financial statement analysis and discussion. What are the benefits that we derive? It increases the accountability and decision-making usefulness of what the financial statement, as it helps users to understand the performance of what the entity from what the entity's perspective, then providing opportunity to what to the entity to reflect it what its interpretation, okay, of significant what item, transaction, and event. Okay, so please, with the content of what the financial statement analysis and discussion, we have the overview of what the entity's operation, we have information about the entity's objective and strategies, and we have the analysis of what the financial statement and changes in the trend. That is where you are going to use what the analysis and discussion to give the trend. Then description of what entities, principal, what risks and uncertainties. Let's look at the first what principles. With this, we are looking at what the qualitative what approach. Okay, we are looking at what the qualitative approach. Okay, and the qualitative approach are also used what to analyze what the financial position, performance, and cash flow, but focusing on what the delivery in terms of what the efficiency, effectiveness, the outcome. But these particular what techniques that we are going to use what the quantitative what approach. Okay, we are going to emphasize on what on the quantitative approach. Okay, so the ratios are very, very useful too. And remember, ratios happen to come on 3 occasions or 3 sittings consecutively. Okay, so the ratio, I am not going to tell you that you should choose what formulas. Okay, I won't tell you to go and choose formulas, but I'll show you how to put the formulas so that you won't you won't forget the formulas. Are we okay?
Yes.
Yes, sir.
Please give me a minute. Let me drink water.
Even if you want to take your supper, we will wait for you.
Drink water, drink water. Water is life.
Please, let's continue. I told you that my style of teaching, I don't like students who memorize what formulas. Okay, so I'll show you simple ways to get the formulas. Under the ratios, we have the ratios that are calculated using the PFM Act, and it is mandatory under the PFM Act. What are some of them? We have non-oil primary balance to GDP, non-oil fiscal balance to GDP, public debt to GDP, capital spending to total expenditure, revenue to gross domestic product, then wage to tax revenue. These are the required ratios that are calculated using the PFM Act. Then we have other ratios, which are the debt per capita, tax per capita, interest to tax revenue or total revenue, then interest to a total expenditure. Let's take them one after the other so that you understand it very well. Okay, and see what they measure. Okay, so financial position ratios. The financial position ratios, we have the non-oil primary balance to GDP. What does it measure? It measures the fiscal balance before interest. Before, the word here is before interest to domestic product. Okay, so how are we going to get what? The formula. Remember, the formula is like this. But if you want to pay key what? You take key interest in this one. We have what? Primary, right? Let me write the full thing here. Non. The first formula is what? Non-primary what?
Oil.
Non-primary what? Non-oil primary what? Sorry. Non-oil primary fiscal balance, right? Non-oil primary balance. Balance to GDP. Okay, that is the first ratio. Non-oil primary balance to GDP. When you talk of non-oil primary balance to GDP, how to get the formula? Please let me change my pen here. Have you seen these two? These two. Two means that division, okay, or over. Two means that over. Then the last aspect here, which is the GDP, divided by what? The GDP. So how then do you arrive on what? Non-oil primary what? Balance. Here, the moment you see primary, the moment you see primary, everybody. Okay, when you see primary, it has what? A meaning. But let's expand what? The formula for your understanding. Okay, let's expand the formula. The formula itself is what? What is the formula? The formula for finding non-oil primary balance to GDP is what? Is fiscal balance. Is that not it? Fiscal balance. Okay, plus what? Plus interest. Is that not it? Okay, minus oil revenue. All over 2. All over what? The GDP. This is what? The formula for finding what? Non-oil primary what? Balance to GDP. But when you see what? Fiscal, this fiscal, what does it mean? Fiscal means it is what? The surplus or what? Or deficit. Okay? It is either what? The surplus or what? Or deficit. That is why I said you shouldn't what? Deficit. You shouldn't memorize what? The formula. When you see fiscal balance. Fiscal balance is what? Is the surplus or deficit of what? The financials. Okay, then primary here, when you see primary, it means that it is what? The interest. Okay, and we are saying that what does it measure? It measures what? The fiscal balance before what? Interest. Before what? Interest was the GDP. So here, to interest, okay, to interest, that means that this fiscal balance, before arriving on the surplus or deficit, we have already deducted what? The interest from it. Okay, so to get what? Before what? Interest to GDP, it means that we are adding what? The interest. So when you see the primary here, it means that it is what? Interest. So primary here is equal to what? Interest. Is that not it? Is that not it? And
yes.
How do you arrive on what? The surplus or deficit? Remember, in a statement of financial what? Performance, we have what? Revenue, right? Under the revenue, we have what? For instance, if you are using what? A typical district assembly, we have what? Decentralized transfer, we have IGF, we have what? Donation and grant, right? Then we have the expenditure. Under the expenditure side, we have what? Compensation of employee. After compensation of employee, we have what?
Goods and
services. After goods and services, we have what? Interest, right? Depending on which comes next. So here, we have subtracted what? The interest from what? From the revenue. Okay, to arrive on what? On the surplus. So the measurement is saying that before what? Before interest. So that means that we are adding what? The interest back to what? To the surplus or deficit. And this is how the formula now goes. The formula now goes like this. The formula goes like this, okay? We have established that the fiscal deficit, the fiscal balance is what? Is surplus. Or what? Or deficit. Is that not it? And the balance, the primary, means that we are adding what? The interest back. So if you are adding interest back, then you are saying that we less what? Non-oil, the oil revenue. The oil what? Revenue from it. Then divided by what? The GDP. Times what? Times 100. The surplus or deficit, the numerator has what? A CD sign. Then the denominator also has a CD sign. So CD sign divided by CD sign automatically times what? 100. It will be multiplied by what? By 100. So another way to write what? The fiscal what? The non-oil what? Primary balance to GDP as what? As fiscal balance plus interest minus what? Oil revenue divided by GDP is the same as what? The surplus or deficit plus interest minus oil revenue divided by what? GDP times 100. And remember, when the question tells you that annual budgeting funding, when maybe in a question, they tell you in what? In additional information that there is what? Annual budgeting funding. Annual budgeting funding is the same as what? The oil what? Revenue. So you less the oil revenue from what? From the amount here. Then you divide it, then multiply it by 100. And always leave your answer in 2 decimal places. Always leave your answer in what? In 2 decimal places. So assuming that you get 2.3333. In 2 decimal places, you do what? 2.33. Is that not it? So 2 decimal places. This is the first what? Formula.
Can I ask a question?
Okay, Madam Boss.
Yes. Until recently that we discovered oil.
Mm-hmm.
But before then, is it always possible that you will have oil, oil revenue? Or is it possible that every question oil revenue will come in?
No. At times in a question, they won't give you oil revenue. When they don't give you oil revenue, please forget it.
Okay.
Are we okay? When they don't give you oil revenue, please forget it. Don't worry your head on it. What is the next thing? The next thing is what? Non-oil what? Oil what? Fiscal balance.
Yeah, I have a
Fiscal
question.
balance. Yes, fiscal balance to GDP. Boss, go on. Go on.
Yeah, I was solving a question this afternoon, and it seems in the footnotes, they have indicated that included in the non-tax revenue, there was a dividend. And then they also did mention of the oil, the annual budget funding. But I did not understand the reason why they didn't do the adjustment for the dividend that was added to the non-tax revenue. So I want a clarification on it.
What the requirement? What did they say you should do?
In the footnote, the non-tax revenue, they've added the dividend. They said the government of Ghana received a dividend and it has been included in the non-tax revenue. So is it so I thought that maybe we were asked to calculate for the non-oil primary fiscal balance. So initially I deducted the oil revenue, and then the dividend that they've treated as a non-tax revenue, I also deducted it from the net operational results, but I didn't get it right. So I want to know the reason why maybe they didn't. The deduction of the dividend is not necessary.
You said they have added what? Dividend to the non-tax revenue.
Revenue, yeah.
Dividend, okay?
Yeah.
Dividend, is it tax revenue or non-tax revenue?
I know it's to the government, it's a non-tax revenue.
It's non-tax, so you need not to subtract it.
Oh, okay.
Are we okay?
Yeah, okay.
So that is why you didn't get it.
Oh, okay. Thank you very much.
Okay. So please, the next one is what? Non-oil fiscal balance to GDP. Non-oil fiscal balance to GDP. With non-oil fiscal balance to GDP, we have already established that fiscal balance is what? What is fiscal balance?
The deficit or surplus.
So we are writing it as what? Deficit, the surplus or deficit. So the formula here is what? Surplus or what? Or deficit, right? Okay. Here, there is no primary. Okay, there is no primary. So it means that we don't have anything to do with what? With the interest. Then automatically, straight away, we less what? The oil revenue. Oil revenue. Then divide it by what? 2. Divide by what? GDP times 100. Are we okay? Yes. Numerator is having what? A CD sign. The denominator is having what? A CD sign. Then when we divide CD by CD, we get what? By what? By 100. So we are expressing it what? In percentage form. Are we okay? Are we okay? But in a situation whereby you don't get any what? Oil revenue in the question, please ignore it and divide surplus over deficit. If it is surplus, you divide it by what? GDP times 100. Then you get your answer. Are we okay? And what is the next one? The next one is talking about what? About the public debt. Public debt, it measures what? The debt sustainability. The debt sustainability as far as what the GDP is concerned. And how do you get the formula? Public debt to GDP. Public debt. What is public debt? Public debt. Okay.
Domestic
public debt is equal to what? The domestic debt.
And then bilateral debt.
Domestic debt plus what? External debt. Will give you what? The public debt.
Yeah.
Okay. So public debt is the same as what? The total debt. And what is the debt? We are talking about what? Interest-bearing debt. Interest-bearing debt. So the question is saying that we should find what? Public debt to what? To GDP. So if you are finding public debt to GDP, it means that it's going to be what? The domestic debt plus external debt divided by what? By GDP, right? GDP by 100. Is that not it? So the moment you see 2, it becomes, it makes the work very what? Simple for you. Okay, it makes the work what? Very simple for you and understanding. Then the next one is talking about what?
Is domestic debt plus what?
Plus external debt. Then the next one is what? Debt per capita. Debt per capita. Debt per capita. What does it measure? It measures the level of a citizen indebtedness as a result of what? Public debt. Okay. So please give me just 2. Give me just 2 minutes. I want to relocate. Please, I'm back. I'm sorry. So I am saying that the debt per capita, it measures what? The level of a citizen indebtedness to what? To the public debt. Okay. So here, how are we going to get it? Remember, when the question comes and it is silent and it says debt is the same as what? Total debt, right? Total debt. And how do we get the total debt? Total debt is equal to what? The domestic debt
plus external.
Plus what? External debt, right? Okay. Then they said the question is what? Debt per capita. The moment you see capita, okay, the moment you see capita with what? With with that L, it means that they are talking about population. The moment you see what? Capital. Without what? L, they are talking about population. So capital means what? Population. Is that not it? So it means that to derive what? This formula, we are going to get what? Our domestic debt. Domestic debt plus what? External debt. Is that not it? All divided by what? Population. Okay? Population. But here, remember, population is not in cities. So leaving your answer, it means that you are going to leave your answer in what? In cities per what? Per person. So here we are measuring how much each person will pay as far as the debt is concerned. Okay, so assuming that we have what? Debt of what? 10,000 and the population to do what? 5,000. Okay, so how are we going to get the debt sustainability? It means that it is going to be what? 10,000 divided by what? The 5,000. How much are we getting? What are we getting? Calculators.
2,000.
You are going to get what? 2,000. So this 2,000, it means that to express it in what? In units, it is going to be what? 2,000 cedis per what? Per person. So each person will be paying what? 2,000. Okay, Selassie, please, your hand is up.
Hello, sir. Please, I wanted to ask whether the revenue, the oil revenue will be given to you in a question as oil revenue, or there is another word for it.
Annual budgeting fund. Annual budgeting fund.
Okay, thank you very much.
Are you okay?
I'm fine.
Okay. Please, any question?
There is not 2,000, it's 2 cedis per person.
Oh, sorry, 2 cedis per person. Thank you. So it is going to be what? 2 cedis per person. Thank you. But any questions so far?
No, please continue.
The next one is what? Is what? Capital spending to a total expenditure. And this one, it measures what? The future what? Expenditure on what? Future consumption to a total spending. Okay, so how do we going to get the formula? The formula is saying that it is what? The capital what? Capital expenditure all over what? Over total what? Expenditure. Okay, over total what? Expenditure. Total expenditure. Total expenditure times what? Times 100. Are we okay? So when we are doing this, then we are doing what? Capital spending to what? To total expenditure. And remember, capital spending, we are talking about what? Spending in what? In capital nature, which is what? The non-current asset. Is that not it?
Yeah.
So please pay attention. Then we have what? What next do we have? We have the revenue to GDP. When you see revenue without any what? Anything attached to it, please, it is the same as what? Total revenue. Okay, total what? Revenue. Okay, when you see revenue without anything, please take total revenue. So it is going to be total revenue over what? What is the term? They say we should calculate total revenue to GDP. Over what? GDP. Times what? Times 100. Here, how do you get total revenue? Total revenue, a typical district assembly will do what? The decentralized transfer plus what? IGF plus what?
Donation.
Donation and grant will give us what? Total revenue. When we take what? Consolidated fund, it is going to be what? Our direct tax plus what? Indirect plus what? Non-tax revenue.
Non-tax revenue.
Plus what? Donation and grant.
And grants.
Will give us what? Total revenue.
Capital expenditure work.
Is that?
The capital expenditure, I didn't get it well.
I said it is capital expenditure over total expenditure. And we are talking about expenditure in capital nature, which is what? The non-current asset. Are we okay?
Oh, okay. What is the non-current asset?
That is the non-current asset.
Oh, okay.
Okay. Then we move on to what? To the next one, which is wage bill to tax revenue. When you hear of wage,
Like DT and
when you hear of wage,
Hello, sir. Please, I beg you. I want to find out, is inventory part or not? Inventory, is it part of the capital or is not?
Inventory is not part. Inventory is what? Current asset. Are we okay?
Can
Are
you
we
go
okay,
back to
madam?
DT and IT?
Is there?
Can you go back to just the slide before the last two lines?
Can you go up?
This one?
No, in your writing.
My writing. Is it okay?
Please, you were explaining the DT and IGF. I didn't get that.
I said, when the question come like this, they said you should what? You should calculate revenue to GDP. Revenue to GDP. Revenue to GDP means that when you see only revenue, please, it is the same as what? Total revenue. Okay, so when the question comes and they said you should calculate what? Revenue to what? To GDP. Okay, the revenue here is the same as what? Total revenue. So it is going to be what? Total revenue. Total revenue. All divided by what? GDP.
GDP times
divided by total revenue times what? Times 100. And I was saying that to get total revenue under MMDA, a typical district assembly, the revenue line we have what? Decentralized transfer plus what? IGF plus what? Donation and grant. And when you go to what? A typical MDA, okay, the revenue line we have what? Government subvention, GOG subvention, plus what? IGF, plus what? Donation and what? And grant. Then when you go to what? Consolidated fund, the revenue line we have what? Direct tax, plus indirect tax, plus what? Non-tax revenue, non-tax revenue, plus donation and grant. So when you add these ones, you get what? The total revenues. Okay, then you go and put them there. Are we okay? Are we okay? Then the next one is talking about what? Wage bill to total revenue. Wage bill. Okay, wage bill to what? Total what? Revenue. Total what? Revenue. How do you get wage bill to total revenue? Here, we are saying that when you see wage, okay, when you see wage is equal to what? Compensation of employee.
Compensation.
Okay, compensation of employee. So to get the formula, it is going to be what? Compensation of employee all over what? Two here is over. Over what? Revenue here. And then when you see only revenue, it is what? Total what? Revenue. Times what? Times 100. Are we okay? But you have to be mindful that a question can trace and ask you like this. Okay, wage bill to tax revenue. Wage bill to tax revenue. Who can give me the formula of this? Wage bill to tax revenue. It is going to be, remember, we said wage is what? Compensation. So it's going to be compensation of employee.
Tax revenue.
Compensation of employee over what? Two is over. Over total
over
tax
direct tax and indirect tax.
Over total tax what? Revenue. How do we get total tax revenue? Total tax revenue is equal to what? The direct tax plus what? The indirect what? Tax. Will give us what? The total tax revenue. Are we clear?
Yes.
Are we clear? Please, other colleagues, those that are silent. Are we clear?
Yes.
At this point, in Kalani Ninada, and unmute your mic so that we flow. Please, are we okay with the?
Yes.
Yes. Using two devices. The person should mute one. So please, this is how we go about what? The form generating the formula. Okay, remember this one times 100 because this one is CDs, this one is CDs. Are we okay? Then when we are done with this, we have the common size. Okay, we have the common size. The common size. This is the simplest way of what? Getting your mark. When you go to the exam hall and you get a common size question, please use the reading time, the 15 minutes, to do your computation. Okay? When you get common size in the exam question, please use the 15 minutes to do your computation on what? On the exam paper. Don't waste time, Kola. Why am I saying so? This is how we do the common size. The common size, you can get a question under what? The statement of what? Financial what? Performance. And statement on what? Financial what? Position. When you get question on what? Statement of financial performance. This is the rule. Each line item, each line item, each line item, each line item, each line item is divided by by what?
The total.
By total what? Revenue. By total revenue. Please, this is the golden rule for the statement of financial performance. Each line item is divided by what? Total revenue. What is the explanation of this? The explanation of this is saying that anything you see on the face of what? The statement of financial performance, please divide it by what? By total revenue. So when you see maybe direct tax will be divided by total revenue. And because direct tax is in CDs, total revenue is in CDs, you multiply it by 100 and leave your answer in what? 2 decimal places. Are we okay?
Yes.
When you get what? Indirect tax will be what? Indirect tax divided by what? Total revenue times what? Times 100. Then you leave your answer in 2 decimal places. When you are doing the common size, please pick only your calculator. Don't show workers. Pick your calculator. Don't show workers. Okay. So assuming that this is a question, let me see if I'll get a question here. Assuming that this is a question, will I get a question here? This is a common size. Have you seen the common size? They said presented below is what? Is a statement of financial what? Performance of what? The consolidated fund of Ghana. Revenue and expenditure statement. What is revenue and expenditure statement? Revenue and expenditure statement is what? Statement of financial performance. Are we clear? So if it is statement of financial performance, how are we going to solve it? Then it means that each line item here, each item on the face, each figure you see on the face here is divided by total revenue. So here, you are reproducing what? Your statement of financial performance, but in terms of what? Of what? Percentage. So when you go to your answer booklet like this, the first thing you need to write is what? Is the name of the institution. What is the name of the institution? It's the Consolidated Fund of Ghana. Consolidated Fund of Ghana. Are we clear? Then you underline body. Then what is the second one? The second one is what? They say statement of what? What was the person I was showing? Revenue and what? And expenditure. So come here and write what? Revenue and expenditure for the year ended, right? Year ended. Then you bring the date. Okay. Then you underline. Okay. Then you produce what? Your question, your answer. The first one is what? They said 2018. Remember, when you are producing, you are reproducing what? The financial statement in percentage form. This CD sign will not come again. Do you agree with me? Do you agree with me?
Yes.
So here, it is going to be what? 2018, the first one is what? 2018, right? 2018 actual. So you write 2018 actual, and you write actual. What is the next one?
2017 actual.
2017 actual. What is the next one?
2018 budget.
2018
budget.
So 2018 what? Budget, right? Okay. Then under them, you come and bring what? Your percentage sign. Instead of the CD sign, you bring what? Your percentage sign.
Okay.
Are we okay?
Yeah.
Because you are expressing this one in percentage terms, not CD terms again. So here, you reproduce this one. Everything here. You start with what? The revenue. So what is the revenue here? We have revenue. Revenue, under the revenue, you have the direct tax, right?
Yeah.
You have the indirect tax. You have the indirect tax. We have non-tax revenue. We have what? We have grant. Is that not it? We have grant. I'm showing you how to do it. So we have grant. Then we have expenditure. Under the expenditure, we have the compensation of employee. Is that not it? The next one is what? Goods and services. So goods and services. So I'll use only these three, this one, for you to understand. So here, I said that in the statement of financial performance, each line item is divided by what? Total what? Revenue. So what is the total revenue? The total revenue is here.
47.
Are we okay? So when you pick 2018, it is going to be what? 16 for what? 50 divided by what? Total revenue. 47450 times what? 100.
Right.
So all these things, you are using your calculator. Are we okay? You are using your calculator. So how much are we, what percentage are we getting?
34.67.
34.67.
Is that?
34.67.
34.67. And I told you you leave your answer in 2 decimal places.
Yes.
Then you come and pick what? The next one. Okay. For you to be fast, I will entreat you to finish it out with the 2018. After finishing with the 2018, then you come to the 2017. After finishing with the 2017, then you go to the 2018 budget. Are we okay? So that you won't get yourself confused or you won't turn the figures upside down. Are we okay?
Okay.
So we are done with the first revenue. Okay. So it means that you understand the revenue side. So when you go to the expenditure side, it is the same thing. When you pick what? Compensation of employee, it is going to be what? 29,800 divided by total what? Revenue. Okay. 47,450. Is that not it? Times 100. Are we okay? Each line item, anything that you see here is divided by total revenue. Are we okay? Anything that you see here is divided by total revenue when it is statement of financial performance.
Okay.
When you pick what? The 2020, when you pick what? The direct tax, it is going to be what? 2,200 divided by what? What is the total revenue here?
300.
300 times 100. Are we clear? Then you go and produce what? The percentage there for the examiner. When you pick what? The compensation, the same thing. It is going to be what? 25,900 divided by what? 63,300 times 100. Then you go and produce it. Remember, all this side, the revenue here, 47,450 divided by 47,450 times 100 will be how much? 100%. Is that not it? Yeah. And 45,700 divided by 45,700 times 100 will be 100%. And 63,300 divided by 63,300 will be what? 100%. So please, automatically, the totals here, you come and write 100%. Here, the examiner will mark it for you. Okay. Are you okay?
Yes.
So the answer you get for the compensation, what answer did you get for the compensation? What answer? 29,800 divided 47,450 times 100. What answer?
62.8.
62.8. So come and write 62.8. Okay. So anything that you see here, any figure at all, divided by what? Total what? Revenue. Whether it is what? revenue, whether it is what? An expenditure, whether it is total expenditure, whether it is net operating result, please divide it by total what? Revenue. Are we clear? Are we okay? If I join NTS here.
The net operating results too, we should divide it. It's a negative.
Divide it by total revenue. So it's going to be 15,280 divided by total revenue 47450 times 100. Are we okay? When you come here to it is
But
going
that
to
is
be what?
the figure, my point. So would the percentage be in negative?
Yes, it will be negative. This one will be negative. So please put it in negative. All these things are negative. So any percentage that you see here, it will be negative. Are we okay? Should we move?
Yeah.
Okay. Then when we go to what?
The compensation. He didn't leave it in 2 decimal places.
Okay, so please point A0.
0.
Yes. Are we okay? Madam, thank you. Then the next one is what? We are talking about what? Statement of what? Financial what? Position. With the statement of financial position under the common size. Okay? Under the common size. Each line item is divided by total asset. Each line item is divided by total asset. How do we get total asset? Total asset is equal to what? The non-current asset plus what? The current asset will give you what? The total asset. Is that not it?
Okay.
Is that not it?
Yes.
So I said under what? The statement of what? Financial what? Position. Under the balance sheet, each line item is divided by what? Total what? Asset. And how do we get the total asset? Total asset is equal to what? Non-current asset plus what? Current asset. Are we okay? Let me see if I'll get. I don't think I will get the question so far.
Line item is divided by.
There, please, the expenditure side, will it also automatically be 100%? The totals.
The total of which one?
The expenditure side.
For the performance. For the performance.
Yes, when you
So please,
divide with
100%. That one will never be 100%. The year will never be 100%.
Okay. So we have to do the calculation ourselves and put the figure there.
Yes, please. The reason why we have 100% here is that any figure divided by the same figure times 100 will give you what? 100%. Is that not it?
Yeah.
2 divided by 2 will give us 1.
Yeah.
Times 100 will give us what? 100. Is that not it? Yeah. And that was why we had what? 100% there. Madam, are you okay?
Yes, please.
Okay. So I was saying that with the statement of what? Financial what? Position. Each line item is divided by what? Total what? Asset. Is divided by what? Total
asset.
So assuming that, let me see if I'll get, let me go and use the solution here. Let me use a solution here to demonstrate for you. This is performance. This
position is giving a feedback.
Thank you. This is what? Position. Okay. This position. Are we clear? So now we are saying that each line item in what? In the position are divided by what? Total asset. And how do we get the total asset? It is what? Non-current asset plus what? Current asset. So here, how do we get the total asset? The total asset is what? Is this plus what? Plus this to give us what? The total asset. Which is what? 38,74520. Are we okay? He said? I can't hear you.
Somebody is disturbing.
Mute everybody, sir.
So I was saying that mute everybody.
Oh, we may want to ask questions, so they can mute the person disturbing.
So I was saying that to get what? The total asset. It is non-current asset plus what? Current asset. So where is the non-current asset? This is the non-current asset. Okay, non-current asset. Where is the total? This is the total. And where is the current asset total? This is the current asset total. So you add these two to get at what? This total. Are we okay? So when you get this total, sometimes the question, when the examiner wants to trick you, he will bring what? The total here, this total here, 23187 what? 20. Without bringing the total here. And he will not give you the total here. So he wants you to what? To apply your knowledge, which is what? The current asset plus what? The non-current asset will give you the total. So it means that you are adding this one plus this one to get what? The total asset. After getting this, you rewrite what? The financial statement. You write the name of what? The institution. You write statement of financial position. Then you write what? The note. Then you write this one. Instead of this one, you bring what? Percentage sign. Are you okay? So when you take PPE, it is going to be what? These 2197,700. So 2197,700 divided by what? The total asset. What is the total asset? This is the total asset. Divided by 387,450 times 100. So the answer you get, come and write it here. Instead of the figure here, come and write what? The percentage here. Are we clear? Are we clear?
Yes.
Yes.
Then if it is what? Liability, it is the same thing. The liability here will be what? 35,1580 divided by what? The total asset, which is what? 387,450 divided by times what? Times 100. So the answer you get, come and write it in percentage and leave it in 2 decimal places. The same thing applies to the loan here. The loan here will be what? 150,000 divided by the total asset, which is 387 what? 420, right? Times what? Times 100. The answer you get, come and write it and express it in what? In percentage here.
520.
Are we okay? When you take what? Accumulated fund, the same thing. When you pick the total here, the same thing. When you pick this total here, total liability, it is the same thing. So here, total liability here will be 100%. Total asset will be 100%. Is that not it? Because this one and this one are the same. Are we okay? Are we okay?
Yes.
Yes.
So please, how can you determine as a common size analysis question, or they will state it?
They will state it. So with this one, when you go to the requirement, they said based on the common size statement of financial performance, write a report discussing the analysis. Are we okay? When it is ratio, they will give you the line of what? Ratios, the individual ratios. And when it is budget performance, they will tell you based on what? Budget performance. Are we okay?
Yes, please.
Yes, sir, please. I want to add something up.
Okay.
I think one of the past questions with the common size, the examiner tricked the students by bringing net asset.
Thank you.
And then most of the students were divided by net asset.
Okay.
But the way you were saying that he will not bring the total of the non-current asset at the other side of the CD side, but he brought it under, and then he didn't add. But what he just did was to bring the net asset, and students were divided by net assets, which they were wrong. So we should just pay attention to that one too. If you go and then you are not seeing the total asset, you add it yourself and get your total asset and divide it by the total asset. Okay. Sometimes they will not bring it on a face of the account, but you have to find it out yourself.
Thank you.
You're sure.
My brother is right. Net asset is different from total asset. Are we okay? Yeah. So please, when you go and they give you net asset, they want to confuse you. So I've taught you how to get total asset. How do you find total asset? How do you find total asset?
The non-current asset plus current asset.
So non-current asset plus what? Current asset.
Plus the non-current asset.
Are we okay?
Sir, please, are we supposed to divide the total expenditure over the total asset?
Which total expenditure are you talking about?
The one down under the liability. Sorry.
This one. This.
Yes, please.
The 3874.
Yes.
So it is the same thing as 3874,520 divided by 3874,520 times 100. So you get what? 100%. It is the same figure. When you look at this figure and you look at this figure, it is a balancing figure. Is that not it?
Okay.
So please, I have a lot of charts. Can you please text me your contact? Where there is going concern? You forgot to touch on the tender security. Yes, tender security is true. It's true. Difference between
I'm talking about when we are doing financial with respect to the financial performance.
Hello.
Sir, I am asking with respect to the financial performance. Are we supposed to divide? Yes. Are we supposed to divide the total? Yes, please. Yes. Are we supposed to divide the total expenditure over the total revenue?
So this total expenditure.
Yes.
Remember, I said each line item is divided by total revenue. So when you pick total expenditure, it's going to be 62,730 divided by the total what? Revenue, which is 4,750 times 100.
Okay.
Have I answered your question?
Yes, please.
Okay. So each line item, any figure at all that you see on the face of the performance, any figure, please divide it by total revenue. And express it by what? By 100. Are we okay? But on the position, any figure at all you see in the position, any figure, even if you see 1, please divide it by total asset times 100. And don't show workings. Please use your calculator. So we are done with what? With the common size. Let's move on to what? To the budget variance analysis, which is the last one. Then we look at the report. Okay. The budget variance analysis. Most of the time when I'm teaching my students, I tell them that I don't use formulas to do my interpretation. Why am I saying this? When you use the formulas to do your interpretation, along the line, you are going to find yourself wanted when you are not able to do the interpretation well. Okay, so the budget variance, you are going to what? Going to get what? Your variance. This is where you are going to express what? You are going to get your actual and what? And budget.
And budget.
Then you use these two to get your variance or the outturn. Okay. Then after getting the outturn or the variance, you get what? The variance percentage or the outturn percentage. Is that not it? So now, here is how I teach when I get here. Okay. The formula for finding what? Variance or outturn is that it is either budget minus what? Actual. Or actual minus what? Minus budget. Okay. This is the formula we use to find the variance. But most of the times, when you fall on what? When you are doing the interpretation, and you fall on your formula to do the interpretation, you get it wrong at times. Why am I saying so? I will demonstrate it for you. Assuming that I have what? 10 years, and I have what? Maybe 15 years. Okay. And here is what? Is revenue. And here is what? Expenditure. And here is what? Expenditure. Okay. The same revenue. Okay. The same revenue. I have what? 15 here and I have 20 here. No, I have 15 here and I have what? 5 here. Okay. Then expenditure. Expenditure. I have maybe 12 here and I have 10 here. Then the same expenditure. I have maybe 15 here and I have maybe
20.
I have 11 here. Okay. So
This your item is not showing on the screen.
I have.
It's from your end. We are seeing you.
Okay. When assuming that I have revenue figures like this, I have actual and budget, and I have expenditure, actual and budget. Now, how do we arrive on what? The variance or the outturn percentage, the outturn? The variance or what? The outturn. We use what? A formula. Okay, we use a formula. But when you are doing your interpretation, that is where you find it very difficult. Okay, and what is the formula? The formula is saying that it's either what? The budget minus what? Actual. Or actual minus what? Minus budget. Okay, but when you are doing the interpretation is where you are going to add whether it is an adverse or favorable. Okay, an adverse or what? Or favorable. Are we okay? That is what? The interpretation. Okay, so here, if we say that we are going to use what? The budget, the formula to do interpretation, let's look at it and see how we'll be able to do it. Now, when we use what? Budget minus what? Actual. What is the budget here?
15.
What is the budget amount here?
15.
15. So budget amount is what? 15 minus what? Actual, which is 10.
10.
When you subtract, are we getting positive or negative?
Positive.
Positive. You are getting positive what? 5. Is that not it?
Yes.
Then let's use the second formula, which is what? Actual minus budget. Okay. What is the actual figure? The actual figure is what?
10.
Is 10. Is that not it?
Yeah.
Then the budget figure is what? 15.
15.
Are we getting positive or negative?
Negative.
Negative.
5. Is that it? Is that not it? So here, assuming that you are using what? The formula to do your interpretation, and care is not taken and there is pressure.
Negative.
And pressure, there is pressure on you. When you use this one, you say that you got what? A positive answer. So here, the answer you get, you write 5 what? Favorable. Is that not it?
Yes.
But when you use what? The second formula, you say that you get what? 5 what? Adverse. Is that not it? And that will be your interpretation. But at the end of it all, when there is pressure on you, you won't be able to know which interpretation you are using. So me, I will always tell my students that get the interpretation from this perspective. Okay. So if we use what? This one and this one, which one is correct? The interpretation, which one is correct?
B minus A.
Is that
favorable?
Favorable result will be favorable or adverse?
Favorable.
Favorable. So the second student that use what? The second formula will get adverse.
Yes.
So as a result of that, who said it is favorable?
It's adverse. It's adverse.
Have you seen why I don't like using the formula? So
Yeah,
let
it's
me teach you my
confusing.
style. Let me teach you my style. When you look at the PFM Act, the PFM Act is saying that we should maximize what? We should maximize what? Revenue. Are we clear? We should maximize revenue.
And
So
minimize
if we are
cost.
maximizing revenue, then it means that we need to what? Minimize what?
Expenditure.
Minimize expenditure. So this is how you are going to do your interpretation. So here, if you are maximizing revenue, okay, then it means that your budget, your actual, should exceed what? The budget when you are looking at what? Revenue.
Sure.
Okay. when we want to meet our budget, okay, it means that as we have what budgeted 15 million to spend to collect, okay, we should make sure that we are getting more than the 15 million.
Like 20 million.
Get favorable.
Are we okay?
Sure.
Then if we are able to get more than the budget, then it means that we have what performed. That is where they will tell you that GRA has exceeded their budget or their target.
Target.
Are we clear? The actual here is what we have actually what received. And the budget here is what we have budgeted to receive. And now we have budgeted what to receive 50 million, but we have ended up collecting what 10 million. Did we perform? Were we able to maximize revenue?
No.
Yes. So we are not able to maximize revenue. So in your mind, you know that once we are not able to meet the budget and it is revenue, then it means that any answer, any formula that we are going to use, the answer, the result will be what? Will be adverse. So before you do your calculation, you know that your answer will be what? Will be adverse. Because the PFM Act is saying that we should maximize what? Revenue and minimize what? Expenditure.
Expenditure.
Are we okay? Then let's look at the second aspect. We have what? Budgeted to what? To collect 5 million what? Revenue. But we have ended up what? Receiving what? 50 million revenue. In your mind, do you think that we should get what? Adverse or what? Favorable?
Favorable.
Favorable.
Why are we getting favorable?
Well,
Actual is more than the budget.
We have what? Achieve what? Our target by getting more than the budgeted what figure. So it means that when you are using what your PFM Act way to what to do the interpretation, before you even calculate it, you know that here you are getting what? Adverse. Is that not true? And here you are getting what? Favorable. So when you do your interpretation, you do what? Your calculation using any of what? The formula. When you use budget minus what? Actual. Budget is 50 minus what? The actual, which is 10. We get what? 5. So when we add 5 to what? To the A, we are saying that our result is what? Is adverse. And this one too, when we are using any of the formula, okay, any of the formula, whether actual minus budget or budget minus actual, the answer we are getting is what? Is favorable. And favorable, how much are we getting? Is 10 favorable. Is that not it? Is that not it?
Yes.
Who don't understand? Who don't understand? One NTS here.
None.
Thank you. So please, this is how I teach, and this is how Prof Accountancy Solution we teach. Okay, we want you to understand it better so that when you go and exam pressure catch you, Charlie, you won't be part. When there is tension in the class or the exam hall, you won't be part. Okay, let's move on. Let's go to the expenditure. The expenditure, we are saying that the PFM Act is saying that we should minimize what expenditure. And remember, the opposition what party is telling government that they should cut down expenditure in order to ensure what? Fiscal discipline in their spending. Do you remember? Do you remember?
Yes, sir.
So that means that when you do budget, okay, we should make sure that our actual should be lesser than what? The budget. Okay, our actual should be what? Should be lesser than budget. If the actual is lesser than the budget, then it means that it becomes what? Favorable.
Favorable.
But if our budget is what? Is if our actual is more than the budget, then it means that it is what? Adverse, because we are not able to minimize what? Expenditure. Are we clear?
Yeah.
Are we clear? So here, before we do the interpretation, at the back of your mind, we are minimizing what? Expenditure. So between this and that, what result are we getting? Favorable or adverse?
Favorable. No, adverse.
Adverse. Why are we getting adverse? Because we have budgeted what? To spend 10,000.
And we
end
up
getting what? Spending what? 1,000. So it means that we have overspent our budget or we have overrun our budget. In this situation, these two, Are we getting adverse or favorable?
Favorable.
Favorable. Why are we getting favorable? Because we are budgeted to spend what? 25 million on goods and services. But we are end up getting what? Spending what? 15 million on what? Goods and services. So it means that we are getting what? Favorable what result. Then after getting what? Your budget out or what? Variance what? Variance. What next then do you have to do? You have to get what? Your budget percentage. How do you get the budget percentage? The budget percentage, this is the formula. It is either budget minus actual over what? Over the budget times what? Times 100. Or actual minus what? Budget over what? Over budget times what? Times 100. But all these things, most of the times, it wastes my time when I'm working. Why am I saying so? Once you are able to get the outturn or the variance, it is this one. Is that not it? Is that not it? Is it not budget minus actual or actual minus budget?
Yeah.
That is what you use to get this. So automatically, when you pick this one on your calculator, you divide this one by 15, the budget. To get what? Your budget percentage times 100. Are we clear? So it is going to be what? 5 divided by what? 15 times 100. How much are we getting?
33.33.
3 point what?
33.3.
33.3.
Yeah, from 33, yeah.
Have you seen this one? So let's use the formula to see if we get the 33.33. So what is the formula? The formula is saying that it is budget minus actual over what? Budget. So now what is the budget? The budget is what? 15. Is that not it? Minus the actual, which is what? 10. All divided by what? Budget, which is 15 times 100. Is that not the same answer we are getting here?
Yeah.
So why then do you have to go and waste your time on this? Please, I hope you are getting it.
Yes.
Okay.
At the revenue level where we had adverse. So when you are finding the outturn, are we not supposed to still get our adverse?
You will get adverse. So still you add what? Adverse to this one. Are we clear?
That's fine.
So please, we are done with the budget performance.
The percentage, can you go over just one last time?
The percentage. I am saying that to get the formula, to use the formula, or to get the percentage, it is either what? Budget minus actual all over what? Budget times what? Times 100. Or actual minus what? Budget over what? Over budget times 100. This is the formula we use to find the budget percentage. But I was saying that when you are able to get what? The budget outturn or variance correctly, then it means that going through all these things will not be necessary. You just pick the variance and divide it by the budget times 100 to get what? The budget outturn percentage. And that was what I demonstrated it here. Okay. When you use this one and use this one, you arrive on the same answer. So why don't you use shortcut to go? Okay. So please, we are done with that one. Let's look at the report. The report is very simple. Okay. When assuming that they said you should write, there is no way they will give you this one without writing a report. Okay. So the report, what are the very important things that you need to bring for the free marks? Okay, the name of what the institution that you are preparing the financial statement. So you bring the name of what the institution. Is that not it? What is the second one? That is the subject. Okay, that is the subject. Are we okay? After the subject, we have what? Our introduction. After the introduction, we have what? The body. We have the body. We have the body. After the body, we have what? Conclusion. My brother who said he wants to join my class, I hear. We have the name of the institution, the subject, introduction, body, and conclusion. Okay, here, these are the most important things. How do you write a report? First of all, assuming that we are writing our report for this one, okay, what is the name of what the institution? The name of the institution is what? Consolidated Fund of Ghana. Is that not it? So here, come to your answer booklet and write this one, okay? And write Consolidated Fund of Ghana. Okay, Consolidated Fund of Ghana. Then you underline, you are good to go. You bring your subject. What is the subject? Okay, most of the time, this one takes in the form of memo. Do you remember when you are writing memo, we have from, we have to, date, subject, and please, all those things are not important. The important thing is the subject here. What is the subject? Okay, the subject here, look at where do you generate or get the subject? You get the subject from what? From the requirement.
The requirement.
Are we okay? You get the subject from what? From the requirement. The person who said requirement is the person from my class.
No.
Oh, okay, thank you.
But,
You get
but
what?
I'll be joining you on the other course, but I know I'm going to pass this.
Okay, you get what? Your subject from what? From the requirement. How do you generate the subject? Who can tell me how we are going to generate the subject?
Report on financial performance of the consolidated fund.
A report.
A report on the financial performance of
I
the
would say a
consolidated
report analyzing the financial performance, blah, blah, blah.
Thank you. Analyzing. Analyzing and what? Discussion of what? Of financial performance. Forget the two. Forget the two in the subject. Forget the two in the subject. Analyzing and discussion of what? Financial performance of what?
Consolidated fund.
Of Consolidated Fund of Ghana. You are done with your subject. When the examiner sees this one, you're good to go. Analyzing. Where do you get the topic, the subject? We got it from here. Have you seen that they said discussion? Write a report discussing and analyzing the financial performance of what? Consolidated Fund of Ghana. That was where we got it. Are we clear?
Yeah.
Thank you. After getting this, what next do we have to do? The next thing that we have to do is the introduction. Please, the introduction. The introduction, it needs to capture certain key things. What are the key things? We need to capture what? The name of what? The institution. That is one. What is the second thing that we are going to use? Which tool or which techniques we are using? Which techniques we are using to what? To prepare the report. Are we okay? And what are we using to do the comparison? Which is what? The comparison. Okay, the comparison. Are we okay? So here, the name of what? The institution is key in the introduction. The techniques you are using is key. And which one? What are you using to do the comparison? Is it between countries, two countries, or between what 2 years, 2018, 2019? Are we clear? So these three things supposed to come in the introduction. When these three things come in the introduction, the examiner have no way to mark you wrong. So who can give you introduction of this? Who can give you introduction of this?
Please, sorry, my line went off. The subject, please, what did you put there?
I said the subject, you get it from the requirement. Okay. You get it from the requirement. And we gave example as what? The subject to do what? Analysis and what? And discussion of what? Financial performance of what? The Consolidated Fund of Ghana. Full stop.
Oh.
Are we okay?
Thank you very much. Yes, thank you.
Then the introduction. The introduction is what I said. You should get three key things. The name of what? The institution, the techniques you are using, and which things are you using to do the comparison. Are you using country A or B, or you are using what? Years involved. So here, who can give me a brief introduction upon giving you this gist? Who can give me introduction? Who can give me the introduction?
Let me try.
Let me try. Okay.
Let me try. Okay, this report seems to analyze the consolidated fund or consolidated financial statements for Ghana, and then we are going to, hey, I know, bro, and the comparison is going to be on 2018 and 2017 actuals against 2018 budget. I don't know if I'm correct on that paper.
Okay. So here, you are going to tell the examiner that this report covers or details, okay, details, okay, analysis and discussion, okay, analysis and discussion of what? Consolidated Fund of Ghana. Using which techniques? Common size.
Okay.
Common size. And what are you using to do the comparison? Using what? 2018 as the 2018 actual as against what? The 2018 what budget?
And
okay, and as against what? The 2017 what? Prior year actual. Then full stop. You are good to go. Are we okay? So
say it again.
This one, I said the simple introduction here is that in this report, or this report details out or covers the analysis and discussion of what? Consolidated Fund of Ghana. Using which techniques? Common size techniques. Okay. This report is used what? To compare 2018 actual and what? 2018 budget as against the 2017 prior year actual. Full stop. Don't go far. Very simple. Are we clear? Don't go far. All the ingredients, the name is there, which is Consolidated Fund of Ghana is there. Techniques, which is common size is there. Comparison, which is what? The 2018 actual, 2018 budget, and what? As against the prior year, which is what? 2017 actual. It is there. You are good to go. Yes, madam.
I thought we were going to compare the. I thought we are going to compare only the 2018 actual against the 2018.
No, madam. You are comparing this one and this one as against the prior year. Are we okay? Are we okay?
Oh, okay.
Then the next one is what? Is the body. People will tell you body. The body. This is where you get what? Please let me finish with the body, please. The body, under the body, this is where you do what? Analysis and discussion. Analysis and what? And discussion. Those who love football so much, it will favor them here. Why am I saying so? When they are doing analysis on Kotoko and Has, okay, they base on what? Their past what? Result, or the figures, or their score to do their analysis. Is that not it? And the discussion simply means that what? Has warrant the increase or decrease or the loss or the win over the other. So analysis means that the figures that you have computed, maybe 2018, you had maybe 2.0. 2018 budget, this is actual budget, you had maybe 1.9. And the prior year, maybe you had maybe somewhere 2.5. Okay, so you are going to tell the examiner what you have completed. So these figures are what you are going to use to do the analysis. So tell the examiner that in 2018 actual, okay, the actual having what? 2.8 what percent, 2.0%, okay, as against what? The budget, which is what? 1.9. And even as against what? The prior year adjustment, which is what? 2.5. or which has what an increase as against what the prior year, a decrease as against what the prior year, which is what 2.5. This is what analysis, but the discussion, what warrant what the decrease? Okay, what warrant what the decrease from what the prior year? Okay, what warrants the decrease of what the prior? The prior was 2.5, but it's a decrease in what in the actual, which is 2.0, and the budget 1.9. What warrants the decrease? Then we are going to tell the examiner A, B, C, D. So, for example, maybe you have worked for what? This one is a compensation. Okay, you have worked it, and the compensation in the actual there was what 2.0. In the budget, it was what 1.9. In the prior, it was 2.5. Now, in 2017, it was 2.5. But when it comes to 2018, it was 2.0. But the budget was 1.9. What brought what the decrease in the compensation? This is what you are going to tell the examiner. What actually necessitates the decrease from what? From the 2017 toward the 2018. So here, the decrease came as a result of maybe cut down of what employment. Okay, more people what retiring. Okay, more people retiring. Then maybe as a result of what death, more death. Okay, as a result of what more death. Okay, these are some of what the reasons you are going to use for what for the discussion.
Or deletion of ghost names.
Deletion of ghost name as a result of what intensive what audit. Are we clear? So tell the examiner what brought the decrease and what brought what the increase. But the analysis is the figures that you yourself you have computed. But the discussion is what brought what the increase or the decrease. Are we clear? Madam, you wanted to ask a question.
My question is about the budgeting. I'm a bit confused with how, me, when I'm doing it, I use the budget comes before the actual. And then with the example you gave, if I'm using the budget against the actual with the revenue, let's say I budgeted 15, the actual price was 10 cedis. I'm going to get maybe 5 favorable.
When we are using what the budget minus what actual,
maybe
to do what your interpretation. Sometimes we tell students that when the pressure is mounted on you, you find it difficult to do the interpretation.
Sir, maybe he wasn't here when you were giving the two different scenarios. Maybe.
Madam, I was saying that
he gave all the two scenarios and gave why we shouldn't use the formula as our basis for doing the interpretation.
I've seen the two, but I thought we were supposed to get the same answer.
No, he was saying that we shouldn't rely on the formula, but then you should look at it from the angle that if it's revenue, the aim of this is to maximize revenue. So anything above revenue, it means you are getting favorable. Anything below is unfavorable. Then when you come to the expenses, he was saying that we should minimize costs. So therefore, when you budget 10 and anything below that, it means you have done well. Anything above it, it means it's not good. Than using the formula as your basis for doing the interpretation. I think that was what he said. So that was why I said maybe you were not listening or you didn't understand.
Joseph, let me also add this. Madam Lynn, assume that my daddy gives you pocket money for the week or market money for the week.
Very good, yes.
I decided to give you that this week our budget is supposed to be 15 cedis.
Okay.
And then you went to the market and you did shopping for 10 cedis.
Okay.
What have you gotten? You have had a profit of 5 Ghana cedis. probably you go and save that one. So that is a favorable, it is favorable to you because
in terms of the expenditure
and earnings out of the revenue.
Okay.
Right? So we targeted that, okay, this week we are going to spend 15 cedis. Or we are going to get 15 cedis from the market. And then we went to the market. When we did our sales, we had 10. What has happened? It's like we have
lost 5.
Yes, the 5
or
difference in
or maybe
revenue.
your mom instructed you to sell a tuber of yam for 10 Ghana. And at the end of you were able to sell it for 12 cedis. See that you have done well by what? You have gotten more revenue because his target was 10 cedis and you ended up getting 12 cedis. This is what the idea is.
That's the idea of revenue. The first one was with respect to expenditure.
Good.
So in respect to the revenue, when you make less against your budget, that means you are underperforming because we are expected to get profit, not loss, in terms of sales. So when we go to the market and we sell, we are supposed to sell 15 and we sold 10. That means we didn't perform well.
Okay.
So that is the adverse aspect. But when we go to the market and we are expected to
the opposite side will be the favorable, right?
Yes.
So, madam, are you okay?
Yes, please. I'm okay.
Okay, thank you. Mr. Samuel Salisi, please, yes, I underline the subject. Hey, the subject, please, you can choose not to underline it. Okay, you can choose not to underline it. Okay, So please, let's move on to the conclusion. The last aspect is the conclusion. The conclusion, okay, the conclusion, it is a free marks for you. Why am I saying so? The conclusion is where you are going to do recommendation. Make recommendation for the examiner. Okay, make recommendation. So assuming that you are doing compensation, okay, but before I come on, I come with what? The conclusion. Please don't go and waste your time on the report too much. Okay, the report sometimes it carries 4 marks, sometimes it carries 6 marks. So how to get the 6 marks or the 4 marks is the free marks that I've given here. So here, the name of the institution will fetch you what? A mark here. The subject will fetch you a mark here. Then the introduction will fetch you a mark. Are you not getting the free marks here? Then the rest, you come to the body. The body, this is where I am telling you that don't do discussion and analysis for more than 4 of what? The entries. The maximum you can do is 4. The minimum you can do is 3. So you can either do what? 2 at the revenue side and 2 at what? At the expenditure side. Or you can do 2 at what? At the revenue side and do 1 at what? The expenditure side. Making 3. Don't do more than 4. Because, please, that mark there is small. Okay? So already you have taken about 2 out. So the rest you are going to share. Then the conclusion is where you are going to do recommendation. Tell the examiner why there is what? There is decrease in what? In the decrease in what? In the compensation. Okay. Government should what? Government do to further what? Decrease it, the compensation. What government should do should further what? Decrease expenditure. Are we okay on goods and services? What government do to other to improve what? Revenue collection in what? It may be tax, direct tax or indirect tax, or maybe decentralized transfer or donation and grants. So this is where you are going to, you remember when auditors come to your institution and they write report, they give recommendation. So the recommendation is the conclusion there. So please give recommendation, tell the examiner, okay, why there is the need for governments what should do more in order to reduce what the expenditure, and tell government why should do more to what to improve what on the collection of what revenue. Yes, boss. Yes, boss. I'm rushing to go and do financial statement. Boss, you wanted to ask question. It is paining me. I'm getting a reduced number. It is really paining me. Please, are we okay with the report? Are we okay? Once we are okay, please, let's draw conclusion on this chapter. Then let's go to the financial statement itself. Okay, the preparation of what? The financial statement. Are we okay? Presentation of what? Financial statement. Where are you, boss? Where are you? Public sector financial statement. Please, Patrina Asamoah, please, your hand is up.
Sir, please, you see, the budget. Sometimes they add supplementary this one for us to calculate the revised budget.
Thank you, madam. Thank you. You have brought
Sir, please, we didn't touch on it.
Thank you. Please, sometimes they use what the terms in what the PFM Act, because I didn't treat the budget with you. That's why I'm forgetting this PFM what Act. Okay, when we are treating the budget, we have terms in what in the budget. Okay, and the terms, among the terms, we have what supplementary budget. Supplementary what budget. Okay, and additional term is what a revised budget. Revised budget. Are we okay? Are we okay?
Yes,
Are we
sir.
okay? Okay, so let me explain this one. Okay, let me explain this one. The supplementary budget, the simple term of supplementary budget is addition. Please put it in your mind. I said supplementary budget is what? Addition.
Addition.
What did I say?
Supplementary budget is addition.
It's addition.
It's an addition.
Please, when you get a question and there is what? A supplementary budget. So for instance, there was a question. Where are you? 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 There was a question. Oh, please bring yourself. Oh. I want to introduce you to this question. Oh. I wish I could get a question. When you get supplementary, okay, it is the same as addition. Okay, when you get supplementary, it's the same as addition. Please don't get twisted. Don't Oh no. Yes. Please, have you seen this question? This is an example of what our dear sister asked. Have you seen that they brought what? Below is the revenue and expenditure extract of Consolidated Fund of Ghana. Then the statement of what? Financial performance. We have the actual and the original budget, right? Then under the additional information, the same Minister of Finance has presented a mid-year review to Parliament that include a supplementary. And what is the supplementary here?
Addition.
Budget for 2021. The minister has cited several local and international reasons for a budget adjustment. The approved supplementary budget is as follows. Please, when you get supplementary budget like this, please, this is how you are going to put your answer. Okay, your answer booklet, you take your answer booklet. First of all, you have what? The name of what? The institution, right? Then you write what? Statement of what? Statement of what? Financial performance. Is that not it? Statement of financial performance. Then you underline it for the year ended, blah, 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 blah. Okay. The first thing here, you have to rewrite it. Which one was I looking at? The first thing is what? Is the actual. And the second one is what? The original. So here, come and write what? Original budget. Okay, original budget. Then here, come and bring what? The supplementary budget. After getting the supplementary budget, you get what? A revised budget. After getting the revised budget, before you bring what? Your actual. Are we okay? So I told you that when you see supplementary, it means what? Addition, is that not it? So here, this supplementary, you are adding what? The supplementary. You are adding this supplementary to what? To the original budget. This original budget. So when you pick what? Which things did they do? The goods and compensation of employees.
Compensation.
So compensation of employees, you are going to add this 11,500 to the compensation figure. This compensation figure. So it's going to be plus what? 11 what? 500. So the answer you get these two, the answer you get is what we term as what? The revised
Revised.
budget. So the revised budget is equal to what? The original budget plus the supplementary budget will give you what? The revised budget. So when you are doing what? You are getting what? Your variance or the outturn, okay? You are not going to use the original budget again. You are not going to use what? The supplementary budget again. But you are going to use what? The revised as against what? The actual. Are we clear?
Contribution, yeah.
We are going to use what? The revised as against what? The actual. Because the PFM Act is saying that supplementary budget is what? It's an additional budget. It is what? An additional what? Budget. It is not the overall budget. It is an addition. So add it what? To the original budget or the budget to get what? The revised budget. Are we okay? Then again, I wrote something like what? Okay, I've given you the revised. Okay, my boss, you wanted to say something. Go on.
Yes, sir. There was another question where they gave budgeted and a revised budget.
Thank
the
you.
Two together. So that one too, what will you do in that circumstance?
Okay, so assuming that in a question they gave you what? Budget amount.
Yes.
And they gave you what? A revised budget.
Yeah.
Please, the revised budget supersedes the budget. So don't take the budget, take the revised budget. Are we okay? Is that?
Yes.
So we are not going to work with the revised budget and then the actual budget.
Madam, I can hear you. I can hear you.
You
Madam,
are no more going to use the original budget. You are using the revised.
The revised, yeah.
In a situation
compare
whereby
with
they
your actuals.
In a situation whereby they gave you budget, original budget, and they have again gave you what? Revised budget. Please don't look into the original budget again, because it is the original budget that they have revised it to get what? The revised budget. So use the revised budget as against what? The actual. Are we okay? The same thing applies here. To get the revised budget, it is what? Supplementary plus what? The original budget to get what? The revised budget.
Okay, sir.
But in a situation whereby they don't give you what? The supplementary budget, and they give you straight away a revised budget, please ignore the budget and take what? The revised budget and compare it what? To the actual to get the variance. Boss, yes, go on.
Thank you. No, I wanted to say that in some cases, some people say you can write the budget, write the revised, write the actual, and I think that is waste of time. You just ignore the original budget, then you bring the revised and the actual, and then get your this is what they call it.
Okay.
The variance.
So in a situation whereby they give you these two, budget and revised, please don't go and worry your head and go and write the budget amount there. Forget the budget amount and write only the revised budget. In some of what the exam question, the solution, the examiner's comment they brought, they said they don't mark what the budget here. They only mark what the revised budget. So the ability for you to copy the revised budget there warrant you what a mark. Are we there? Are we there?
Please, sir.
Madam.
The variance, the percentage, the outturn percentage, will it not be expressed on the original budget?
So it will be expressed on the revised budget.
Oh, because I saw a question this afternoon. It was expressed on the original budget.
Then I doubt. When there is what? A revised budget, please, it supersedes what? The original budget.
Original, okay.
Yeah, all the questions I've seen that the revised supersedes all the original.
Please, are we clear?
Okay.
Yeah, yeah. Sir.
So please, this is what? That. Let's move on to what? To the financial statement. Please, the financial statement, very, very important. Here, please pay attention. I will be jumping things. But all the things I want you to go and read on is what? Is the District Assembly Common Fund. Go and read on the District Assembly Common Fund. Okay? I will touch on that. So the reason for existence of the assembly when it comes, please, I know you can write it. Okay. The sources of revenue. Where do you get sources of revenue? For the district assembly, you get it from decentralized transfer. These are monies that have been decentralized from what? From government to the assembly. The IDF, monies that have been generated within, donation and grant, money that have been got from what? Donation and grant. Then we have what? We have the expenditure. Okay, the expenditure, we have what? We are using the GOG chart of account. The expenditure composition, we are using the GOG chart of account. So when you are preparing the financial statement, please make sure when you get to the compensation, the expenditure, you bring compensation of employee first before goods and services. So goods and compensation of employee first, then second one, goods and services, then the rest you can mix them up. Okay, you can mix them up. So here, I am not interested in all this, and I know you have what? You know those things already. But my interest is on what? On the trial balance. Let me look at the trial balance. We have trial balance, we have debit and what? And credit, right? In our own understanding, trial balance is a self-balancing what? Account. Okay. If it is a self-balancing account, it has what? A debit and credit. Once it has debit and credit, any figure under the debit has what? A meaning, and any figure under the credit has a meaning. Here, when you get a figure under the debit, it is either the historical cost of what? The asset or the expenditure. And when you see it under the credit, any figure under the credit, it is either what? Revenue or liability. Then I have added my own thing, which is 3 marks. And it is what? Accumulated what? Depreciation. Okay, accumulated depreciation. So these are the things. When you see any item under what? The debit, it is either what? An asset or what? Or an expenditure. When it is at the credit, it is either revenue or liability or accumulated depreciation. Let me show you the reason why I said accumulated depreciation. Okay, let me show you the reason. Let me go to the financial statement here. Let me go to the financial statement.
So please, can I ask a question while you are going through?
I'm coming, boss. I'm coming. Okay, I'm coming. Let me let people understand something here. Please, have you seen this one? This is a typical trial balance. Okay, this is a typical trial balance of the Consolidated Fund of Ghana. Okay, so Consolidated Fund of Ghana, I said that when you see any figure at the debit side, it is either assets or what? Or expenses, right? And when you see any figure at the credit side, it is either revenue or what? Liability or what? Accumulated what? Depreciation. Why am I saying accumulated depreciation? Any figure that is at the right-hand side of what? The historical cost of the asset. At the debit side, it is what? Accumulated depreciation. Their depreciation that has been calculated on from what? From the beginning up to today. So now, when you get your answer booklet, locate this one and put arrow here and write what? Accumulated what? Depreciation. Are we okay? These ones are 3 marks that we are going to use to calculate what? The consumption of fixed assets. Are we clear? Are we clear?
Yes.
Are we clear? Thank you.
Yes,
if you are clear, let's go back. Let's go back.
Oh.
We are able to find what? The trial balance. Now, I told you to go and read the district assembly command fund. This is what? The 4 months for what? For the performance. With the 4 months or everything, I know by now you know. Okay, but my interest is on what? On the 3 marks here. Okay, when they ask you to prepare what? The financial statement, please don't shake your, don't react there or don't overreact. Why am I saying so? There are 3 marks that you are going to get. What are the 3 marks? The name of what? The organization you are preparing the financial statement for. So make sure you write the name. Where do we get the name of the entity? We get it on top of what? The trial balance here. So what is the name here? Consolidated Fund of Ghana. Is that not it? So you write what? The name, which is what? Consolidated Fund of Ghana. You come and write what? Consolidated Fund of what? Of Ghana. Then you underline. Then the next 3 marks that you are going to get is what? Is the requirement. What is the requirement telling you to do? come and read the requirement. Okay, what is the requirement? The requirement is saying that you should prepare in suitable form for publication. A, statement of what? Financial performance for the year ended 31st December. Please come and copy all these things. The statement of what? Financial what? Performance. Come and copy and come and paste it here. So statement of what? Financial what? Performance for the year what? Ended. Okay, come and copy. The ability for you to copy 31st December, blah, blah, blah. They will give you what? A mark. What is the next point of what? Free mark. The next point of free marks is what? Is the CD sign. What currency are we using? What currency are we using? The currency is this one on top of what? The trial balance. Have you seen here? Whatever they have written here, please go and copy and paste it for the person. So here, you bring what? The CD sign there and hold the million for the person. Hold the million for the person here, okay? When you hold a million, that's all. So the examiner will mark a tick here, and a tick there. So how many ticks? And remember, the financial statements are being what? Marked using what? Ticks. Are we clear? So if so, then let's move. Now, after getting this,
so I wanted to ask a question.
The next thing you need to do is what? Take your pencil. When you are going, go with what? Pencil. Okay? And come and what? Write individual what? The item here. Come and write them. So for instance, cash and cash equivalent, what is it? In your own understanding, it is what? Current asset. Is that not it? Debt, domestic debt, it is what? Current liability. Is that not it? Public debt interest, it is what? Interest, a line item on its own. Okay? Tax paid by corporation, it is what? Direct tax. Is that not it? Come and do all these things. After when you finish, okay? When you finish, remember, go to the requirement again. What is the requirement saying? The requirement is saying that you should what? You should prepare note to the account. Okay? You should prepare note to what? To the account. Are we clear? But before you go to the note to the account, the second requirement is saying a statement of what? Financial position. Come and create another what? Page for yourself. Open another booklet. So after this one, bring what? Revenue. What is revenue? The revenue is there. So consolidated fund of Ghana, we have direct tax, indirect tax, right? Non-tax what? Revenue. We have donation and what? And grant. Who is yawning? Then the next one, you bring what? The expenditure. Are we okay? Then you bring the note. Then you leave it. Leave this thing. After bringing this one, then you go to the next page. Then you write what? The name of what? The institution again. What is the name? Consolidated Fund of Ghana. What is the second requirement? The second requirement is saying that you should prepare what? Statement of what? Financial what? Position. As at what? 31st what? December. Then you write what? The date. Then you bring the CD sign like that for the examiner. Okay? You bring the CD sign like that for the examiner. Okay? Then you bring what? The non-current asset. Under the non-current asset, you'll be having what? The PPE. Are you okay? So you leave the rest. So when the examiner is marking, you mark the name, the requirement here, and the CD sign. So you are doing this to get what? Your marks. When you finish, we are on what? On the note to the account. Okay? The note to the account. The note to the account. The first note to the account is what? Note 1. Okay? Note 1. Okay? So note 1, which is what? Accounting what? Policy. Accounting what? Policy. So the accounting policy, please pay attention here. The accounting policy carries what? They say it carries 4 marks. Is that not it? In a situation whereby you go to the exam hall and the accounting policy does not carry a mark, please, what you are coming to do, don't do it. Don't waste your time. But when the accounting, there's a note to the account, carries what? 4 marks, please come and write the accounting what? Policy. Okay? The first accounting policy under 1 is what? A, which is what? The law. What law mandates the preparation of the financial statement? And where are we going to get the law? We are going to get it in what? In the note 1, which is this one. Okay, so the note 1 is saying that it is the policy of the Controller and Accountant General to adopt the accrual basis of accounting. This one is not what? The law. In what? In preparing the public financial management of Consolidated Fund of Ghana in compliance with what? The PFM. the PFM regulation, and what? And the IPSAS. These are the law. So come here and write what? The account is prepared in accordance with what? The PFM what? Act. Okay. Act what? What is the act?
2016.
Act 2016 at 91. Is that not it? At 20 what? 16 into bracket at what? 921. Then PFM what? Regulation. Okay. PFM regulation 20 what? 19. LI what?
762.
LI, people, this is where we get it. Please don't go and chew. It will be given to you. LI 2378. So come and write LI 2378. Are we okay? Then again, IPSAS. IPSAS. Please, you can abbreviate it like this. Okay.
Is it accepted that way?
It's accepted.
Okay.
It's accepted. You can abbreviate it like this. It's accepted. Remember, look at this one. They have abbreviated it. The IPSAS is there.
Are we just listing like you are listing, or we are supposed to write in a statement?
Please write that law. Write first law. Okay. The account is prepared in compliance with I. Okay. I. PFM Act 2016 at 91. The II. PFM Act. PFM R 2019 LI 2378. Then III. IPSAS. Then we are done. What is the B? The B is talking about what? Basis of what? Accounting. Basis of what? Accounting. Basis of what? Accounting. How do you get the basis of accounting? We are still getting it there. Okay, they said that the Control and Accountant General adopt what? The accrual base of accounting. Okay, accrual base of accounting. So here, come and write. Okay, the account is prepared in compliance with what? Accrual base of accounting. Accrual basis of what? Accounting. Basis of what? Accounting. Are we okay? Are we okay?
Yeah.
Then what is the C? What is the C? The C is talking about what? Inventory valuation or measurement of inventory. So inventory. Inventory what? Valuation. This is where the golden rule comes in. Okay, this is where the golden rule comes in. So the golden rule is saying that pay attention.
Okay.
Please pay attention here. What is the golden rule? Okay. Under what? The IPSAS what? 12. Okay. Under the IPSAS 12. I'm coming to summarize it here for you. Simple. The IPSAS 12 is saying that we hold inventory what? For use. And we hold inventory what? For sale.
For sale.
And we hold inventory through what? Non-exchange transaction. Is that not it? Okay, so please listen to this one very well. So let me erase this one and concentrate on the two. When it is held for use, assuming that they hold the inventory for use, for instance, A4 sheet, okay, stationery, A4 sheet, they hold it for what? For use. When they hold it for use, the golden rule is saying that the inventory is measured at the lower of cost and current replacement cost or replacement what? Cost. Okay, replacement what? Cost. Are we okay? This is the golden rule for use. And for sale, the golden rule is saying that it is measured. It is measured at the lower of cost and or net realizable value. Okay, what does this mean? Okay, in the footnote, they will give you what? The inventory at cost. They will give you inventory as what? Replacement cost, and they'll give you inventory at what? Its net realizable value. So assuming that at cost, we have what? 1,000. And replacement cost, we have what? 1,500. And we have net realizable value to be what? 900. Okay. Here, this is how you are going to do it. if assuming that it is held for use, it means that we are measuring it at the lower of cost and what? And replacement cost. So it means that we are comparing what? The cost to what? To the replacement cost and pick the lower of it. Okay, you are comparing the cost to what? To the replacement cost and pick the lower of it. So which one is lower of among these costs? It is 1,000. So this 1,000 happens to be what? Our closing what? Inventory. Are we okay? Or closing what? Stock. Are we okay? Closing stock. How do you treat this closing stock? You add this what? This closing stock, which is 1,000 to the goods and services. Then treat this one on the face of what? The statement of financial position as what? As current asset. Under what? Under what? Inventory.
Inventory. Are
we okay? But remember that we have what? A prescribed what? Ways of what? Treating the inventory. In our SHS level, we have something we call what? Opening what? Inventory. Is that it?
Yeah.
Or opening stock. After getting the opening stock, we have what? Add purchases. Is that not it?
Yeah.
You get a figure here, but I'm not interested in the figure here. My interest is what? Less
closing inventory.
Stock, right? So the closing stock will come here. Okay. When you less this one, you get a figure here. This figure is what we are sending it to the goods and services. Okay, the figure here is what you are sending to goods and services. Then the closing stock here is what you are sending to the statement of what? Financial position as what? As inventory. But when run it over once. I said. Yes, sir. I said. Yes, we have what? Inventory. Inventory valuation is in two forms. We have for use and what we have for sale. When it's for use, it has what? A golden rule that it states that it is measured at the lower of cost and or what? Replacement what? Cost. Okay. And or what? Replacement cost. And when it is held for sale, it is measured at the lower of cost and or what? Net realizable value. And I began with what? With the for sale, for use. Okay, so assuming that this what asset is what is for use. So if it is for use, then it means that we are comparing what the cost to the replacement cost and pick the lower of it. When you pick the lower become what? The closing stock. How do you treat this closing stock? I said that we add this one, the 1,000 to the goods and services. Are you okay?
Yes, sir.
But when we have direct way and indirect way of treating it, what I've just showed you is what? The indirect way of treating it. Okay, the indirect way, this is where I said we have what? The opening stock, the add purchases, then we less closing stock. In a sense that in the opening stock, we get it in what? In a trial balance. In a purchase, we get it in what? In a trial balance. The only thing that we don't get in the trial balance and we get it in the footnote is what? Is the closing stock, where we do the measurement, the valuation. Are we okay? So you go and add the purchases to the opening stock, then less what? The closing stock. You get what? A value here. This value is what we are sending it to the goods and services. Then the closing stock itself is what we are adding it to the statement of financial position as what? As inventory, current asset. But we have another way of doing it. Okay, assuming that you want to use what? The direct method. Okay, the direct method, it is where you are going to state. So this opening stock and closing stock, opening stock and purchases will come here. So here you bring what? The opening stock here. You open what? The goods and services account and bring the opening stock here. You bring what? Purchases. Okay, you bring the purchases. You bring the figures here. Then you continue with what? The line of what? The goods and services. Come and list all the goods and services. Come and list them here. After listing them, the last one is what? Is the closing stock. So come and write what? Less what? Closing what?
Inventory.
Stock. and bring the figure here. So the figure you are bringing here, which is what? The 1,000. So this 1,000 will come here. But remember, put it in bracket. And don't close the account. Leave it. Are we okay?
Yes, sir.
Are we okay? Leave it. Don't
Yes,
close the account. Okay. Then when you finish, okay, when you finish, you come to what? To the for use, for sale. Then the for sale, we are saying that for sale, we are comparing the golden rule is that you are measuring what the cost as against what the net realizable value. So now, if you are measuring the cost as against the net realizable value, it is between the cost and the net realizable value. Which one is what is the lower? It is the net realizable value. So this net realizable value happens to be what the closing stock. So this closing stock, it is the same thing that you are applying it here. It is either you are using this method or that method. Are we okay? But remember, there is one trick that ICAG like, especially when they ask you question using what? Maybe hospital. Okay, hospital question. Hospital, they sell drugs. Are we okay? They sell drugs. And they what? You use what?
They use stationery.
Stationery. Okay, so here, what you need to do is that you have to have it at the back of your mind that you'll be getting what? Two closing stock. And how do you treat it? You use what? The golden rule for what? For the drugs, which is for sale. Remember, the drug is what? Is for sale. And what? And the stationery is what?
It's for use.
So you use what? The golden rules for this. When you get the two closing stock, assuming that this one, you get closing stock to be 1,000, and you get the stationery to be what? 900. Please, what you are going to do is that to get the new closing stock, it is going to be what? The 1,000 plus what? Plus the 900, which will give us what? 1,900.
1,900.
So this 1,900 will be what? Our new closing stock. This is what we are going to what? Send it to what? To the goods and services, and again send it to what? To the statement of financial position. Are we clear?
Yeah. You are going to send the closing stock to the financial position and where else?
And the goods and services.
Goods and services.
Okay. So the goods and services is either you adopt this strategy, this one you list, you bring the goods and services account, then list all the goods and services, then come and less the closing stock. So here will be what? 1,900, right?
Okay.
But if you are using the indirect own, this is the prescribed one that ICAG like. So if you are using this one, you get the opening stock, add purchases, then less closing stock. The figure you get here, assuming that you get maybe 50-50 here. So this 50-50, when you go to the goods and services, remember all this thing will not come here. This will not come here again. Okay. So here, you are not going. What are you going to do with this one again? The 50-50. How are you going to write it? Who can tell me?
So do you know something?
Because
of time constraint, let us have one and go and write the exams and learn that well later.
Is that?
I'm saying that because of time, the two we cannot learn it now. So let us go with what ICA wants.
Okay, then please use the ICA one. Okay, use the ICA one. So when you get the 50-50 here, okay, the answer you get it at the end here. This is what you are going to send it to the goods and services. Okay, so if you are sending it to the goods and services, okay, if you are sending it to the goods and services, are we lessing or are we adding?
We are adding.
We are adding because we have already deducted the closing stock from it. So we are adding. So here it will be what? The inventory. Are you okay? Inventory, which is what? 50-50. Are we okay? Are we okay?
Yeah.
Thank you.
Yes.
Then this what? This this amount here is the one that will be going to the statement of what? Financial position. Are we okay?
Yeah, the closing stock goes to the financial position.
Thank you. Because footnotes are treated with what? Treated twice. Are we okay? When we are done with that one, then we move on to what? To the next what? Accounting policy. What is the next accounting policy that we have? What is the next accounting policy that we have? Remember, we got up to C. So what is the D?
Mm.
The D will be what? Will be the
Consumption of-
consumption of fixed asset. So D will be what? Our consumption of fixed asset. So how do you get the consumption of fixed asset? Please go to the additional information. Okay, go to the additional information. Come and copy this one. Don't lose guard. Come and copy from here. Are we okay? With the table, this one. Are we there? Come and copy this one. Don't leave anything there. Come and copy this one and come and paste it under what? Under the consumption of fixed asset. Are we okay?
Okay.
Are we okay?
Yes.
Then we are done. But please, there has been another thing under the inventory. Okay? Assuming that you receive an item through non-exchange transaction. Non-exchange transaction. Okay? When you receive any item through non-exchange transaction, the measurement basis is saying that we should use what? The fair value. In the absence of the fair value, we use what? The market value.
Market value.
Are we clear? Are we clear?
Yes.
So,
Yes.
for instance, they can give you example like this. Motor vehicle donated to what? To the entity. Motor vehicle donated. Motor vehicle donated. Donated. Amounting to maybe 1,000, but has what? A fair value, a fair value, a fair value, a fair value of what? 900. Please, with this, remember this cost, with this cost, you are not going to use the cost because it is what? Donated item, and donated item are acquired through non-exchange transaction. So I said that the measurement basis, okay, the measurement basis of non-exchange transaction is what? Using the fair value. So use the 900 instead of 1,000. Are we clear?
Yeah, my light
in the
went out,
event-
so I lost you at the closing stock.
Okay, I'll come to that. Okay, madam. Please, do you get the non-exchange transaction?
Yes.
Do you get it?
Yes, sir.
Okay, madam, I was saying that the inventory.
Guys, I beg and sorry. It's not my
Don't
fault.
worry.
ECG.
Don't worry. Don't worry, it's normal.
We are all learning. Don't worry.
Yes. I was saying that the inventory, okay, the inventory, we have golden rule for the inventory. And what is the golden rule? When we are going to use inventory for use, maybe we acquired inventory and we are going to use it. The golden rule is saying that it is measured at the lower of cost and what? And current replacement cost. But where it is used for what? For sale, then it means that we are measuring it at the lower of cost and what? And or what? Net realizable value. In this case, if it is for use, madam, we are comparing what? The cost what? To the replacement cost. There's no way ICAG will give you financial statement and you dodge this. So pay attention. You are comparing what? The cost and the replacement cost. You pick the lower of it. The lower of it become what? The closing stock. After getting the closing stock, then you use this formula. Okay, inventory, computation of what? Inventory. The opening stock, you add the purchases. Then you less the closing stock that you have what? Valued. The amount that you get, go and add it to the goods and services. Then the closing stock, you go and add it to what? To the statement of what? Financial position as what? Inventory. Under the current asset. When it is for what? For sale, madam, I was saying that the golden rule is that it is measured at the lower of cost and what? And the net realizable value. If so, it means that if it is for sale, we are comparing what? The cost what? To the net realizable value. So between the cost and what? And the net realizable value, which one is lower? It is what? The net realizable value, which is 900. So this 900 happens to be the closing stock. You do same thing as we did for what? For the sale. For the use, and they are good to go. Are we okay? Are we okay, madam?
Yes,
okay?
please. Thank you.
And I added that in some of the questions, example could be what? A hospital question. For the hospital question, they sell drugs and they use stationery. So you need to value both of them. For use, remember, drug is for sale. So if it is for sale, you use the golden rule to arrive on the what? The closing stock. Then the stationery, it is for use. So you use what? For use. Golden rule to arrive on what? On the closing stock. To get the new what closing stock, you add the 2 closing stock, and we get new what closing stock of it. Are we okay? So this closing stock is what we are going to send, not these 2, and not this one. Are we okay?
So, if can I ask a question here?
Okay.
So, if you now want to do, and probably you've run out of ideas, and can you just say inventory closing stock? You bring you say draft this, and then when you come to stationery, you say stationery this, and it means that you're going to capture the 2 into it. I don't know whether my question is clear.
If the figures are correct, you are good to go.
Okay.
Thank you. That is when, but our advice when you are doing the evaluation, please write the comment under what the policy. But when you are doing the computation, leave the what? Leave the commentary. The commentary will be coming under what? Under the accounting policy. Are we okay? But when you are doing the computation, please forget it. Are we okay? Are we okay?
Yes, sir.
The only thing that will come under the policy is what? Is this one. The golden rule. Write this one and leave it. And leave the calculation there. Don't do calculation under what? The policy. Okay? Under the policy, inventory valuation, write this for use. Measured at this. Okay? If it is for use. But if the question is on both, please bring both. But if the question is on only one for use, please don't write the for use. Write only for you. Don't write for sale. Write only for use. Are we clear?
Yes, sir.
Yes.
Please, I was saying that when you acquire item through non-exchange transaction, we use what? The fair value. And I've demonstrated it here, right? Now, the next thing is what? The consumption of its asset. Okay? The consumption of its asset, I told you to go and what? To go and copy and come and paste it. When you finish, you are done with the accounting policy. Okay? Then now, remember when we were looking at the formula, we have consumption of its asset. How do we calculate the consumption of its asset? It is very, very important. Okay? Let's look at the consumption of its asset. Okay? The consumption of its asset is where you get a lot of text there. Okay, so come and write consumption. That is where you are doing what? Your note. Consumption of its asset. What is the table for or the format for consumption of its asset? You go to what? To the additional information. Go to the additional information. How many assets do we have under the consumption of its asset table here? We have 1, 2, or 3. Is that not it? We have property, plant and equipment, investment property, infrastructure. Please come and write them here. So you open column for what? For PPE. Is that not it?
Yes.
The second one is what? Investment property. Come and write investment property here. Investment what? Property. The third one is what? Infrastructure. Is that not it? So infrastructure. The last one is the total. Bring the total. Bring the table here. Okay. Bring the table here. Then you underline it like this. What is the next thing you need to bring? Please bring what? The CD sign. Remember, they hold what? Million. So hold it like that for the person. Okay. Okay.
Yes, sir.
Hey, people are yawning. The next thing is that what I love bringing is what? Is a useful life. Bring the useful life here. It depends on your own thing. Bring the useful life. What is the useful life for the PPE? Is 20 years. Is that not it?
Yeah.
What is the useful life of what? The investment is 40 years. Is that not it?
Yeah.
And what is the useful life for what? For infrastructure, it is what? 30 years. Is that not it?
Yeah.
Then you underline. Okay. The next thing is what? Is cost. The historical cost. Where do we get the historical cost? We get the historical cost from the trial balance.
From the trial balance.
Please pay attention. We get the historical cost from the trial balance. What is the historical cost? When you see infrastructure, this is the historical cost, equipment, and what? Investment property. Is that not it? So come and pick these figures. It is a free marks for you. Okay. Please take note of these figures and be mentioning it for me. So the PPE, what is the figure there? PPE is what?
160.
160.
So the 40 did not come.
Right. Open 4160. What is infrastructure? What is the amount of the infrastructure?
Infrastructure is 9960.
9960.
9960.
What is the
No,
infrastructure?
Infrastructure by putting at investment.
9960. Okay. What is the investment? Investment is what?
9840.
Come and bring 9840 here. 9840. The total here, I am not interested in the total here. So don't be interested in the total here. Are we okay? The next one was addition. Do you have any addition? Do you have any addition? Where do we get addition? We get addition in the additional information. So go and check the additional information and see whether there is what? An additional asset there. Okay. This one is talking about policy. This one is talking about what? Grant. This one is talking about grant, debt forgiveness. This one is talking about grant again. Yeah. This one is talking about what? Consumption of fixed asset. And this one is talking about what? The asset addition. So can somebody read the VI for me? Read VI.
On 1st September 2020, 5 billion was spent in acquiring motor vehicle to boost government projects. However, these transactions were included in the accounts as goods and services in the year 2020. This error has since not been rectified.
So this error has since not been rectified. So it becomes what? A prior year adjustment. Prior year what? Adjustment. How do you treat prior year adjustment? When you get a question and the statement is on the prior year adjustment, the first thing, please take note, the first thing that's supposed to come into your mind is that the prior year adjustment, what will it affect? Okay, what will it affect? Okay, the first thing that's supposed to come into your mind is what? Is the consolidated, the accumulated fund. Is that okay?
Yes.
The accumulated fund, because this one was what? In 2020, but we are preparing the financial statement in what? 2021. And they carry what? This accumulated fund. This accumulated fund from what? From 20 what? 20 to 2021. From 2021 to what? To 2020. Is that 2020 to 2021? Are we okay? We are preparing the account in 2021, but the prior year adjustment happened in 2020. So it has been carried forward from what? From the 2020 to 2021. So it means that this error has affected the accumulated fund, this accumulated fund. And how do we correct it? And this is the procedures I am telling you. First of all, look at what will it affect. First of all, it will affect what? The accumulated fund. Are we okay?
Yeah.
It will affect what? The accumulated fund. So here, come and open the accumulated fund what? Statement. So come and open accumulated what? Accumulated fund what? Statement. Is that not it?
Yes.
And according to the accumulated fund statement, okay, the first thing you need to bring is what? Balance brought forward. And what is the balance brought forward? It is what? Balance as per what? As per
TB.
what?
TB.
As per TB. And what is the balance as per TB in the what? In a trial balance? It is what? 10,189. But I want to ask you, when you see accumulated fund at the debit side, what does it mean?
The deficit.
It's negative.
It is negative, which is what? Deficit. But when you see it at the debit credit side, it becomes what? Surplus. Is that not it? So it means that this accumulated fund, it is what? It is deficit. So it is 10,189. So come and bring what? The 10,189 here. 10,189. And bring it in bracket. Now, is that? Now, go and look at what? The prior year. They said the amount is what? 5 billion. And how do you write 5 billion? Remember, they have withhold what? Million. We write 5 billion like this. Is that not it? How many zeros?
9.
9 zeros. Is that not it?
Yes.
And they have
Yes.
hold what? 6 zeros,
0.
which is million. So 11 with what? 5,000. So if 11 with 5,000, they said that the motor vehicle that was what acquired was what? Was not what included in the account.
It's not included in the account. So we have
Okay.
to-
They said they have not what included it in what in their account. Okay.
No,
So
it's
what?
just that the transactions were included in the accounts.
Okay, sorry. They said it was included in the account as goods and services. So now
Yes.
the question I want to ask you is that as it has been added to what it is supposed to be asset, but they have added it to the goods and services. So what effect will it have on the accumulated fund?
To reduce it.
Reduce our profit.
It will reduce our profit. So
Yeah.
if it will reduce our profit, we need to what? We
To
need to what?
deduct it from goods and services.
Please.
You need
please,
to add it back.
We need to add it.
Remember, the amount, they said that the thing is an asset, but they brought it as goods and services. And let's go here. Let's look at something here. Okay. When we are preparing the financial statement, we have the revenue and we have the expenditure, right? The expenditure, we have goods and services. Is that not it? We have revenue here, we have expenditure here. When we arrive on the surplus, we subtract the goods and
We
services.
have to add it back.
And they said that the asset has been added as goods and services. So that means that it has gotten effect on what? The accumulated fund. So if you want to correct the accumulated fund, what then do we have to do?
You have to add it.
There's someone is
You have to add it back. You add it to the accumulated fund.
So we add it to the accumulated fund.
You deduct it from goods and services, add it
to accumulated fund.
Accumulated fund.
Please, we are treating the accumulated fund. Okay,
Yes.
we are treating the accumulated fund. So what effect will it have on accumulated fund? It means that it has reduced our accumulated fund. It has reduced our accumulated fund. So once it has reduced our accumulated fund, we need to add it to get what our actual accumulated fund. Is that not it?
Yes.
So that means that the prior year adjustment, we are going to add. So the formula there is what? The formula there is what? Is add or less. So here we are adding what? Prior year. Add what?
Prior year
adjustment. Are we okay?
Yeah.
Yes, sir.
Which is how much?
5,000.
5,000. So when we add the 5,000, it is going to be what? Negative what? Then 189 plus 5,000. What are we getting?
It will be negative 5189.
518 what? 89.
Yeah,
okay.
Negative.
So negative. So this was what? The accumulated, but though it has not reflected our actual what balance restated. Why? Because this asset is supposed to be an asset, but the asset has been treated as what? Goods and services. It means that they did not what? Calculate depreciation.
Yeah.
They did not charge any depreciation on it. So we need to charge depreciation on it. And what? And account for it appropriately. Are we okay? So we go to what? To the asset is what? Is motor vehicle. Motor vehicle is part of what? PPE. Is that not it? So the PPE, it is what? 20 years. So it means that it is going to be what? 5,000 divided by what? 20 years.
Yeah.
How much are we getting?
I think it's 250.
250. People with calculator, please be fast though. 250. So this 250 is what? Is our depreciation on this particular asset. So if it is depreciation, what effect will it have on this accumulated fund? What effect? Remember, depreciation is supposed to be part of what? The consumption of its asset for the previous year. And consumption of its asset is what? It's an expense. That means it's a lesson. You're supposed to learn it. Is that not it? but we couldn't less it. So here we are going to less what? Our depreciation.
It means the
Prior year
accumulated,
depreciation, which is what?
accumulated fund has increased. It's overstated.
So it should be.
I say it means that the accumulated fund is overstated because we did not charge the depreciation.
Thank you. So when you less this one from this, how much are we getting? Negative 5189 plus what? 250. What are we getting? 8 minus 250.
Yeah, it's minus, so it will be negative 5439.
Negative 5439. So this supposed to be what? Our balance what? Restated. Our balance what? Restated. Is that?
Sir, I think the depreciation started from first September. It's supposed not to be the whole year.
Please forget the whole year matter there. Please forget the whole year matter there. Are we okay?
Yep.
They said we are charging it on straight line basis. The reason why we are forgetting is what? Straight line basis. Have you seen it?
Yeah.
Have you seen it?
Okay.
So it's not the pro rata.
Please, I don't know if you are getting it.
Yeah,
Yes,
we are
If you are
okay with that.
getting it. Are you okay?
Yes.
Okay, so please forget the year involved because they said it is a straight line basis. Are we okay? So here, this is supposed to be what? Our balance restated. Balance what? Restated. Okay, balance what? Restated. This is supposed to be our actual accumulated fund. Okay, but we carry this one. So have you seen that it has reduced as a result of the prior year? So when you finish with this, please don't close the account. When you finish with the everything and you're able to do the computation, that is where you are going to add the surplus or less or the deficit from it. Are we okay? Are we okay? Are we okay? Are we okay?
The depreciation was 1,000.
Is that?
The 5,000 on 20%.
Divided by 20. Divided by 20.
Divided by 20 is 250.
It's 250 years. It's not percentage, it's 20 years.
Oh, okay.
Are we okay? So please, let's move on with what we're doing. We are done with what the prior year here. Okay, I've taught you the prior year, is that not it? So now, with our thing here, the addition, we are getting it from what? From the prior year. And what is the prior year? They're supposed to add this amount, this asset, but they did not. So now we are correcting it. So now we add it to what? To that, which is 5,000. Is that it? Is that not it?
Yes.
Yeah.
Is that not it?
Yes.
Any addition for investment? No. Addition for infrastructure? No. The total here, I'm not interested. Okay.
It's the same 250, which is the same 250. You add it to accumulated fund or accumulated division.
We'll come to that. Don't worry. We are doing it step by step. Okay.
Okay. Thank you.
What is the next thing? Some people add this one, okay, and that is what I also use. We add this one and add this one to get the total what asset. Are we okay? So 4160 plus 5,000 give us how much?
45,160.
45,160.
45,160. So this is what our new what cost, total cost of all the asset. What is the next line of action? The next line of action is what? Our depreciation.
Disposal.
Okay. If there is disposal, please less it. If there is disposal, less it from here, from the asset. Are we okay?
Yes, sir.
So our next line of action is what? Is the expenditure. So the expenditure, the first expenditure is what? Our accumulated what? Depreciation. Are we clear? Are we clear? So where do we get the accumulated depreciation?
What did you say we should less?
Is that?
What did you say we should less?
The accumulated depreciation.
Okay.
Okay. So So where did I say we'll get the accumulated depreciation? Can somebody help me? Where?
From the TB.
The TB. Have you seen that I wrote accumulated depreciation here? So which of the accumulated depreciation that will change? Which one?
The PPP.
The PPP. The PPP will change. Why is it changing? Because we had what prior year.
Yeah.
Are we okay?
Yeah.
Are we okay? So apart from this 760, the rest of it will go. Okay. The rest of it will go. So apart from what? The 840, the rest of it will go. So infrastructure is what? 760. Is that not it? Infrastructure is what? 760. So come and write accumulated depreciation here. Infrastructure. 7 what? Let me change my pen. 7 what? 60. Is that not it? And what is what? The investment property. Investment property is what? 600. Hey, people. 600, is that not it? Then here, the accumulated depreciation. This is where it will change. So to get the new accumulated depreciation under the PPE, what then do we have to do? We need to add the 250 plus what? Plus what?
840.
8 what?
40.
840. Are we okay? So here, 250 plus what? 840. What are we getting?
1090.
For
1090.
1090.
No, please clean the 4. It's yes, 1090.
109 what? 0.
90.
Remember, depreciation is what? It's an expense. Is that not it?
Yes, sir.
So you put it in brackets. What is the next one? The next one is what? Is the current depreciation charge. Current what?
Depreciation charge.
Depreciation what? Charge. Okay, so there is the current depreciation charge. You already have the information here. Are we okay? So how do you get the current depreciation charge? It is what? This 45160 divided by the 20 years, the useful life, which is what? 20 years. What are we getting?
2258.
Is that?
2258.
2258 what? 8. Are we correct?
Yes, please.
Yes. Then the next one is what? Is the investment divided by what? 40 years.
246.
Yes, please. Yes, please.
Hello, are we there?
Yes, we are here also.
Okay. So the
9840 over 40. That's 246.
divided by 40. How many people?
246.
What result are we getting?
246.
Is that?
246. 246.
246. Then 9960 divided by 30 years.
332.
Sir, can you minimize your screen?
Oh, it's okay.
Are you okay?
I cannot have the full screen.
No, you check your own.
Then
No,
check your place.
It's from your place. We are all seeing it.
Text from my end. We can see it fully.
Okay. So please,
increase the font size small.
some people name this one A and some people name the total here B. But please, I am not interested. I'm looking at my speed. So if I want my speed, how then do I have to go about it? I have to punch my calculator 45160 minus 1090 minus 2258. The answer I get, I will write it here. Is that okay? But before then, there is one total that I am much interested in it. And what is the total? The total of this. The total of what? The current depreciation charge. So you add what? The current depreciation charge and bring the total here. Are we okay? So 2258 plus 246 plus 332. What are we getting? What are we getting? Please let's be fast.
2836.
283 what? 6. So this 2836. Please, this 2836 is what we are. Carrying to the statement of what? Financial performance. These 2, 3, 2 what? Will come here. 2, 3, 2, 2836. I hope you are getting it.
Sir, please, may I know? Yes, but sir, may I know why?
It's referring to financial.
Can you hear me?
Is it financial position or financial performance?
Performance.
Hello, Solomon.
Yes, sir.
Yeah, but I think it's very late too.
Yes, I am even right.
You are wrapping up, eh?
Yes, please.
Oh, not now.
Hey.
We haven't finished.
You have to cut tomorrow morning. It's 9 o'clock. And some of us have
Because you need to also consider your tutor, otherwise you break down. No, you know that he's been talking for more than 7 hours.
We've been listening to him for 7 hours.
But he's using energy and talking. You are not talking. He will get sore throat. Now, please try and get his number and send him some cocoa money so that you use
definitely
it to address the sore
It's
throat.
very important.
I think that is very, very important.
All of us should send something.
Yes, that one. Yes.
Yes, so you give your number to us.
When you finish, it
Hey,
will
no,
write it.
let him give it now before he forgets.
You should give it now because some of us might follow.
So please let's wrap it up. So I was saying that the amount here is what we call the consumption of fixed asset. This is where most students don't get it, but it is very simple. Okay, this is where most students don't get it, but it is very simple. When you are preparing this one, please remember, with the statement of financial performance, please, the time will not be okay for you. So please, quietly come and write the total here. Okay, on the consumption of fixed asset table here. When the examiner sees this one, he will mark it for you. Are we clear? He will mark it here for you, quietly. When you are not able to send it to the statement of financial performance, please, he will mark it here for you. Are we okay? Unless maybe the time is enough for you and you are done and you are transporting everything back, then you are good to. Then when you finish with this, please, I said don't do A and B, BR. Come and punch your calculator 45160 minus 1090 minus 2258. The answer you get, come and write it here. Are we okay? Then punch this one 9840 minus 600 minus 246. Answer you get, you write it here. Are we okay? Then the answer you get, you write it here. These are the answers that we call net book value. Okay, net book value. But assuming, please, let me clean something here and write software. Please, assuming that there is a software here. Please pay attention. Assuming that there is a software here. Okay, and maybe this one is not PP, but this one is what? It's maybe motor vehicle. This one is what? Equipment. Okay, remember, because of this software is not part of PPE. Once it is not part of PPE, bring the totals here like this. After bringing the totals here, come down here under this one and come and write PPE is equal to what? This one plus what? Plus this one. Give you what? The PPE. Then intangible asset, which is what? The software is this one. So it will also come here. Are you okay? So when you're able to differentiate it here or bring a comment here and bring the total here, When the examiner, you are unable to transfer these figures to the statement of financial position, the examiner will mark it here for you. Are we clear?
Yes, sir.
These are some of the tricks that people don't know. So we are done with what? Have you seen the consumption officer said? Look at the number of ticks you are going to get here. So if you don't prepare the consumption officer set, you are losing a lot. The next one is what? Debt forgiveness. Debt forgiveness. Debt forgiveness. Debt forgiveness. Debt forgiveness. Debt forgiveness. With debt forgiveness, okay, with debt forgiveness, please pay attention. When you get debt forgiveness in additional information, please, the debt forgiveness, okay, the debt forgiveness, the first principle is saying that, assuming that maybe IMF have given what? We have gone for loan from IMF to do what? 10,000. And because of COVID-19 situation, IMF have forgiven us. Okay, forgiving us. Okay, forgiving us 5,000. Okay, here we are saying that in the trial balance, the amount in the loan as loan is what? Is 10,000. Is that not it? But in the additional information, they said they are forgiving us what? 5,000. How do you what? Calculate the debt forgiveness? This one is a clear case of debt forgiveness. When you get debt forgiveness, the first thing that's supposed to come into your mind as principle is that the debt forgiveness happens to be what? A revenue. 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 So you add this 5,000 to what? To the donation and grant. Okay, to the donation and grant on the face of all the statements of financial what? Performance. So when you're computing with the donation, go and add debt forgiveness and bring the 5,000. Sorry, 5,000 here. Are we okay? Then to get the second leg, this is how you are going to do it. Remember, because they are forgiving us the 5,000, the loan amount will not be 10,000 again. So the loan amount then will be what? Will be 10,000 minus what? 5,000. So the outstanding now become what? 15,000. So this 15,000 is our loan. So if you are sending this loan to the statement of financial position, the loan
No, 5,000.
5,000.
Hey, sorry, 5,000.
5,000. One is fine.
My bro.
Why are they
The outstanding loan now will not be the 10,000 again, but it will be what? It will be the 5,000. So assuming that they said the loan carries what? An interest of 5%. You are not going to work the 5% on the 10,000 again.
10,000, no.
You are going to work the 5% on what? On the 5,000.
On the 5,000.
So it's going to be 5% times what? 5,000.
5,000.
So the interest you get, you are going to add it to the statement of financial performance as interest.
Okay.
Are we good to go?
Okay.
Are we good to go? Are we good to go? Are we good to
Sir,
go?
please go over. Sir, can you please go over that one again?
I said, debt forgiveness. Debt forgiveness. Debt forgiveness. Let me use a clear case here. 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 Are we there? Are we there?
Yes, please.
Yes, please. Somebody should read this one. I for me. I. Let's go. Somebody should read for me. Some multilateral partners have extended debt forgiveness policy to government, which has resulted in external debt forgiveness. And when you see debt forgiveness, what comes into my mind? What comes into mind? Revenue. Are we clear? That's one principle. Are we okay? And they said as a resultant in what? External debt amounting to what? 3 billion be written off during what? The year. However, this transaction has not been reflected in the book. How are we going to treat it? This is how we are going to treat it. Please pay attention here. Okay? Please pay attention here. Are we there? Are we all here?
Yes, please.
Okay. So here, let's look at this. What is the debt forgiveness? The debt in what? In the trial balance. What is the external debt? Go and search for the external debt in the trial balance. What is it? Where is it? Please help me, help me.
Let it go. Let it go as
External debt, help me. Where are they?
Yes, scroll down, let's see.
No, cash.
That is the external debt.
Yeah.
It is here.
51974.
What is the external debt? It's 51974. 51974. Is that not it? So here, the debt, the actual debt is what? Is 51.
51974.
51974. This is the actual debt. But they said that they have forgiven us what? 3 billion. How do you write 3 billion? How do you write 3 billion?
3,000.
3,000. So we are holding what? 6 zeros. So it will be 3,000. So they are forgiving us 3,000. So how then do you go about it? This 3,000 that they are forgiving us happens to be revenue. So when you are calculating the donation and grant, come and add debt forgiveness. Okay, debt forgiveness. Okay, debt forgiveness, which is what? 3,000. Is that not it? To the donation and grant. Then when you go to what? To the debt, our debt will not be what? 51974 again. To get our total debt, it will be what? 51974 minus what? 3,000. Is that not it? So the total amount that you get, the total remaining that you get happens to be what? Our leftover what? External debt. Which will be going to what? To the statement of what? Financial position. Are we okay? Yeah. Assuming that they said the debt has what? An interest bearing, okay, of 5%. So we are going to work the 5% on the remaining debt, not on this one.
The total.
Not on the total again, but the remaining what? Debt. Are we clear?
Yeah.
Are we clear? So 51974 minus 3,000, giving us how much?
48,000.
48 what? 974. So we are going to work what? Our interest on this. But if the question is silent, like this one, the question is silent. Please, you leave it. You leave it. Is that okay?
Okay.
Let's read Ivy, Grant, Ivy. Somebody to read Ivy for me. Ivy, fast.
The grant shown in the trial balance as revenue relates to project grants, which government has applied from Africa Development Bank, amounting to $56 million. But
Please,
the grant
hold on. The grant in the trial balance as revenue relate to what? Project grant. Okay, which they said that has applied from Ghana, has applied from what? From the African Development Bank, amounting to what? $56 million. But the grant received in the trial balance represent part. Please, are you seeing the part of the expected grant? The Minister of Finance and the Controller and Accountant General have provided what? Enough evidence indicating what? The full fulfillment. This one is one of what? The standard. Condition of service. Okay. Condition of service. Condition of transfer. Okay. But I won't go into it. The simple way I will tell you is that when they tell you that they have fulfilled all the conditions, that means that we are going to recognize it. But if they said they did not fulfill the condition, that means that we are going to transfer the money back to what? To ADB. Are we okay?
Yeah.
We are going to transfer it back to them. So it becomes a liability on us. So assuming that they said we are not able to fulfill it, then it means that it becomes what? A liability. So the amount involved, we are going to transfer it back to them. So we are going to add to the pool of what? Liabilities. Are we clear?
Okay.
Yeah,
I don't get it.
Please.
So now that the money is in dollars, are we going to do any?
We'll come to that. We'll come to that. Please, Prof Accounting Solution is the best. I will entreat you. Irrespective of the paper.
I'll come for
we'll make it
extra classes.
Are you okay?
My final level, I'll come.
Okay, I hear you. My boss will be there to meet you in the final level. Okay.
Yeah, so I've left my number.
Okay. So please, this one they said the grants they have fulfilled all the conditions. So it means that we are recognizing it. But remember, the grant we are saying in the trial balance is part. So that means that the 56 million happens to be the total grant. But the further stated that the exchange rate as at the balance sheet date was what? 6 cedi per what? Per the dollar. Okay, so that means that we need what? Change this what? This total dollars to cedis. So how do you do it? We are going to what? Multiply 56 by what? By 6. Is that not it? 56 by 6 will give us how much?
336.
2 what?
336. No.
336. So 3 what? 6. Okay, so these 336.
No, just 336. No,
236.
Just 336.
Yeah, 336.
336. Okay, thank you. So these 336 happens to be our total what grant that's supposed to come, but they have already what sent part of what the grant for us. So that means that there is what receivables. There's going to be receivables. Are we clear? So if so, let's go into it and see. In the trial balance, how much is the grant? The grant in the trial balance is 270. Is that not it?
270.
Yeah.
Yes.
So if it is 270, that means that we have received what? Only 270 out of this. Okay,
Yes,
so
so
270 minus what? 336 will give us how much?
66.
Is that
66.
56 or
66.
66?
No, 66. Yes,
So
please.
66. Okay, this 66 happens to be the amount of grant that we are yet to receive. Are we okay? So if you want to treat it in the statement of financial performance, these 336 supposed to be the amount that we are supposed to treat under the donation and grants. But already we have treated 270. So if you have treated 270, that means that we are adding what 66 to it to get what our total what grant. Are we okay? Then in terms of what the statement of financial position, remember there is what a component of what receivable, because this 66 has not yet been received. So it becomes a liability to the people, but it becomes an asset to us. So in the first also, the statement of financial position, we treat it as what? As receivables. Are we okay? So we add it to the receivable, which is what 66. Are we okay? Then we are good to go. So the two transaction, the two double entry has what? Affected, have been affected. Are we clear?
Yeah.
Are we clear?
Yeah.
Are we clear?
Yes, sir.
If we are clear,
Yes,
then
sir.
we are good to go. Now we are done.
Yes.
Let's go to an important thing. It's late, but let's go to an important thing. That one I will just where are you?
So
Where are you?
you how do you subscribe to your YouTube?
Okay, please. These are the adjustments. The adjustment.
Just click the link. Just click the link. I've posted the link. Just click it. To get updates, there are videos on all your papers there. So it's in the chat. Yeah.
So please, this is the adjustment to the financial statement. These are the things that the examiners will be using to confuse you. We are done with what? With the consumption of fixed assets. We are done with the inventory. Now let's look at what? Prepayment. Are we okay? We are done with what? Transaction that occurred during the year but not recorded. Remember the prior year. Okay? Case of prior year. Are we okay?
Yes.
We are done with debt forgiveness. Is that not it?
Yes, sir.
And we are done with asset treated as what? Expenditure in the previous year. So
Yes,
let's look at loan treated as what? Revenue in the previous year. Let's look at loan treated before we go to the next one. Loan treated. So here they will, in the footnote, they will tell you that government has gone for loan, but the loan that they went for has been treated as what? As revenue. Okay, the loan has been treated as what? As revenue, as the name implies. Loan treated as what? Revenue in the previous year. So in the previous year, they have acquired loan of what? Maybe 10,000. And the loan is what? It's a liability. Is that not it? But in what? In the previous year, they treated it as what? As revenue instead of liability. So there is no liability in it. So what effect will it have on what? On the accumulated fund? What effect? What effect? What effect?
It will increase profit.
It will what? Increase profit. Because it is a liability, but they added it as what? As revenue. So it will increase profit. So how then do we have to go? We have to bring what? The balance forward, which is balance as per what? As per TB. Is that not it? In the trial balance. Yes. Okay. Then if this one will increase what? Increase our accumulated fund. Then what? How do you go about it? Do we subtract it to get what? The balance restated, or we add it?
We subtract.
We subtract it. So less what? Prior year. Less prior year, which is the loan, which is what? 10,000. Are we okay? Are we okay?
Yes, sir.
Are we
Yes,
okay?
sir. Yes,
so
sir.
If we don't have any interest, when we subtract it, the amount we get here becomes what? Our balance restated. But in a situation where there is what? An interest on the loan, please work the interest and do what? The appropriate adjustment. Are we okay? Are we okay? So we are done with that one. Let's move on to what? To the prepayment. Please, the prepayment will be our last thing. The provision and others, please. My boss, are you there? Prepayment.
I'm here.
Prepayment. Please, prepayment. Okay? Prepayment. Prepayment is the same as what? Is the same as what? I said that one in the beginning. Prepayment is the same as what?
Current assets.
Advance.
Hey,
Advance.
Advance. Or what?
Prepaid.
Advance or
loan.
No,
Expense.
No, prepayment, yes, an
The same as
advance
advance or what?
or loan.
Prepaid, advance.
Is
That's all.
an advance or
It's also treated
loan.
like an expense.
Receivables.
Who is saying loan? I'm not talking about, I'm looking at the terms.
Receivables.
Receivable.
No.
Current assets.
Payable.
Please, when you don't see what prepayment in
Payable.
the question, you see what
Payable.
advance. When you
Payable.
don't see what advance, that means that it means you are going to see something like maybe
Postpaid.
paid in
Payable.
two installments or 2 years. Paid
Wow.
in 2 years.
Payable.
Are we okay? I'm not looking
Yes,
at
sir.
interpretation. Please forget the interpretation for now. I want you to understand
Okay.
it in this perspective. Okay. So here, let's assume that you are what? You are entity. Okay. You are MMDA. Okay. You are MMDA. So MMDA, which is a typical one to be a district assembly. So here, you are collecting IGF. And IGF, you have what? Market toll. Okay, market tolls, right? So market tolls, you are saying that you have what? Receive market tolls, a prepayment of what? Market toll, which is what? 1,000. Okay, or you have received what? Market tolls in advance, amounting to what? 1,000. But you are preparing the financial statement in what? 2020. How do you treat it? So advance payment in terms of what? Revenue. Advance payment in terms of what? Revenue. Prepayment in terms of revenue. How do you treat it? Okay, that is what we are going to do. Okay, when you get what? Prepayment or advance in terms of what? Revenue. Please, this is how you go about it. Okay, it means that they have paid something in 2 installments. They have paid for something that they have not what? Enjoyed the services yet. Okay, the example of what? The landlord that I gave from the beginning. I said that the landlord has received what? Rent in advance. But the landlord has received the rent in what? In 2 years. So if it is 2 years, it means that you are only enjoying 1 year. The other 1 year, you have not enjoyed the other 1 year. So in the book of what? The landlord, how will you treat that particular account? Okay, and that is what the MMDA. Here, let's look at it. When you get a question like this, and a prepayment in terms of what? Revenue. Okay, revenue. Please go and subtract. Remember, you are preparing the account. Look at the year to which you are preparing the account. You are preparing the account in what? In 2020. Okay, but this 1,000 have been paid in what? In advance.
For
Okay,
2021.
so that means that there has been what? Another year, which is what? 21 inside. Is that not it? Is that not it?
Yes.
So if so, how are we going to treat this 1,000? It means that we need to make sure. Is that?
We minus it from the TB balance.
Thank you. So we are going to minus this one. Okay, we are going to minus this one. We are going to minus this one. From what? From the trial balance what? Market total. To get the actual amount for what? For the 2020. So assuming that TB balance is what? Is 1,500. Okay, and there has been what? 1,000 in advance. So it means that we are going to what? Less this one from 1,500.
Yes.
Are we okay? So
Yes.
our remaining will be what? 500. Then the thousand, even though we have received the amount, okay, even though we have received the amount, it become what? A liability.
A liability.
Okay, it become a liability. So how are we going to treat it? So on the statement of what? Financial position, that is where you are going to treat it as what? As payable. So this 1,000 will be what? Will be payable. Are we okay?
Yeah.
Are we okay?
Yeah.
So you are deferring the 1,000 to what? To the 2021. In terms of what? In terms of expenditure. In terms of what? Expenditure. Look at the expenditure. The expenditure here is also like this. Okay. You have what? Purchased something. Okay. You have purchased something. Okay. And the thing you have purchased. Okay. The thing you have purchased. You have paid
over.
In advance.
Okay. You have paid over. So how are we going to treat it? So it means that expenditure, to get what? The total expenditure, how are we going to get it for the goods and services? For that particular line item.
You have to less it from the purchase.
Is that?
You have to less it from the purchase.
Hey.
You less the amount from the purchase under the expenditure. You're saying that maybe you purchase a drug and you overpaid. So in order to get the outstanding balance,
I'm coming. Let me use rent. Okay, let me use rent. The assembly has paid rent in 2 years. Okay, the assembly has paid rent in 2 years, which is what? 20 and what? And 2021. Amounting to maybe 1,000. How are you going to treat this one? The assembly is renting a place and they have paid rent for a prepayment of what? 1,000, which happens to be what? 2020 and 2021. How are we going to treat this one?
So you divide by 2 and get the one for that
You
particular
divide this
year.
one because this one is 2 installments. So you divide it by 2.
Meaning each year is 500.
Okay, so if year is what? Is 500. So if each year is 500, okay, we are going to defer the 2021 own. Are we clear?
Yes, sir.
Are we clear? So if
Yes.
you are sending the 2021 own to the statement of financial position, how are we going to treat it?
You treat it as advance.
Yeah.
You treat it
It
as
become a
advance.
receivable. Why is it receivable? Because we have paid to someone and we can decide not to what? Enjoy the 2021 own. So it becomes an asset worth.
Or anything can happen and you don't continue with the contract.
Thank you. So it is still an asset worth. So the 500 become what? The receivable. Are we okay?
Yeah.
Are we okay? Then this 500 will be added to what? To the rent figure in what? In the trial balance. Are we okay? Are we okay?
Yes.
Are we okay?
Yes, sir.
So please, another one is this one. This is the last one. Then we close. This, I think we have even exhausted that one. We are done. We are done. But one aspect I want to show you is that please, when the question comes, have you seen this one? Please use your pencil to come and indicate what the various what item. Okay. Don't go and what and use your calculator. When you come here, okay, the note, the first thing you need to bring here is what? Note to the account. So note 1 and note 2. Note 2 is what? Assuming you are preparing what? The Consolidated Fund of Ghana. Note 2 is what? Direct tax. Is that not so? So direct tax account. Open the direct tax account. List the direct tax account. The figures. List them. Okay, list them and forget it. Don't even close the account. Okay. The next one is what? Indirect tax. Indirect tax. So indirect tax. Okay, that one too the same thing. Bring the CD sign. Okay, bring the CD sign and list the items under each of them. Okay, list all of them before you go to the footnote. Please don't attempt the footnote. List everything under each of them before you attempt the footnote. Are we okay? Okay. Are we okay? The trial balance is what? Is a free marks for you. The trial balance here, they are free marks for you. So please list them under individual what line item before you take into account what the footnote. Please, on this note, this is where I would end the class. The little comment I will add here is that please, the time will not be enough for you. What you need to do is that you need to what? Be fast. Please, you can start 2 questions at the same time. In a sense that when you start one and you think that you are not able to, you don't remember the point, please move on to the another one. The sheet is there for you.
Solomon, don't even worry about that. I've taught them all the exam techniques on how to be fast in time. That's what we started with when you were off. So don't worry, Clara.
I hear. So please.
I've taught them everything they need about time management.
Thank you.
So in the chat section, I have posted the WhatsApp page, the YouTube link. And also, Solomon, you can write your number on the screen for them to send you something because you've done extremely well. Nobody will do this. Nobody will do this anywhere for you.
Not at all.
Please, last question.
So please put there.
Please, this is my number. Please, what's my number? 0549.
Okay, 0549.
83.
0549.
0549 398333. Please, under the conceptual framework, go and read on the characteristics of what? The characteristics of what?
The financial statement.
So hold on. I'm telling
characteristics of what?
Say, hold on.
Financial statement. The characteristics of what?
Can you put that slide on there?
Please pay much attention to the audit. Okay, audit. Pay much attention to audit. We have ended the class. Thank you so much. And good night.
Should we expect? The number is on the screen. Chief.
No,
my number is 0549. 0549. 0549.
Some of us missed the beginning. Can you please put that slide on the characteristics of the financial performance?
Please, the conceptual framework. Please, again, go and read on the measurement of liability. Measurement of liability. Okay, you'll be fine.
I hope you all got the number.
Yes, please. God bless you. The characteristics of the financial performance.
Yes, the financial statement.
I am a proud member of Prof Accountancy Solution. My boss is training me. I'm still under training. And my boss is the one who took you right from the beginning. He is very expert.
Some of us didn't join from the beginning.
Okay, so the video will be there. We have streamed it live. Okay, so boss, please, I'm done.
What question are we supposed to expect under question 5? Question 5. What questions are we expecting under question 5?
Question 5, that is the budget questions.
Give me.
Sir, please, you mentioned audit.
Please.
Can you write
I
so
think
that we
this is
can
more than enough for you to pass. You have more than
Yeah, I was
enough.
wondering the question 2. Should we expect cash flow or the COSO is fine?
Any of them can pop up. Just be ready for whatever they throw at you. You've had more than 3 months to prepare, right? So this is just a top up for you. You should be fine. Don't be scared. Don't be scared.
Thank you
God
very
is
much.
in control. You're fine.
This is
Thank
the
you very
slide.
much. What name? Okay,
This is the
Solomon.
slide.
How
Hello.
to get into all of you will be a problem, but let's see. So you can, if
This
you
is
want
the
to get the
slide.
slide, I've posted the WhatsApp page. So you can join the
I've
WhatsApp
just,
page. The slide will be shared there.
okay, I've just joined, so I'll be waiting.
All those who want the slides, I'll post it on the WhatsApp page. So you can join the
All right.
WhatsApp.
All right, thank you.
The WhatsApp page, is it on the chat? Is it on
Yeah,
the
it's
chat?
on the chat. It's on the
Is it
chat.
the one that the subscription I've subscribed to?
No, that is YouTube.
I think
I posted two. I posted YouTube and WhatsApp, right?
Oh,
And
I've not seen that.
oh,
Is
check the
it?
chat.
Okay. All right. Okay,
Yeah.
okay. Is
We've
it
been
too
at
much
this.
or what?
Yeah, we've been at this for more than 10 years now. We were there long before this tuition center started.
Okay.
We used to run
All right.
premium tuition services just for only those who wanted to benefit, but they said it's not fair. We should help the general public.
Oh, okay.
That is why.
Okay, and you've done well. Thank you very much. God bless you. All right, so I've just joined, so you
That
can.
is fine. So
look
he'll
at
share
the
the
video. Thank
yeah,
you very much.
we'll share everything. Okay.
God bless you so much.
Hey.
You hear from us as well.
How do I join? How do I join?
It's on the chat. I've posted it in the chat. Kindly check the chat.
Go to the chat and then you see the two listen.
Yeah.
One for the YouTube, the one for the WhatsApp.
Yeah.
Thank you very much, sir.
You're welcome.
Trust,
Have a good night.
Thank you. Bye.
Bye. I hope you have all taken the link.
Yes, please. Yes, please.
No, some of us are having challenges. Maybe I will send you WhatsApp message and you send me.
So contact Solomon directly. He will add you.
Okay, because I have a challenge too.
That's fine. Good night to everyone. Good night, boss. I'm grateful, boss.
God bless you, sir.